Okay, so welcome to Rocket Revision Batch for November 22 exam. I don't know what you are expecting from me, but let me put you as to what I will be giving. So that is, this batch is not at all for those who are attending for the first time. So that is in the sense, like if you are reading Indirect Act for the first time, please don't watch these lectures, don't attend these lectures. So because you will not understand anything, because I will be discussing as to in a crisp format, thinking that you have knowledge on the subject. Okay, so this is like a complete summary revision, so then only we can be able to complete it in 2-3 days, whatever is a given time. And before moving on to the subject, so just wanted to give you the details. Like today we will be focusing on to the procedural parts, that is generally whichever chapters you will not read those chapters first. So that is returns, demand and recovery, offences and penalties, search, seizure and confiscation, because I don't want to start with the introduction to GST, taxable event, value of supply, that and all you will be like anything, crazily you would have prepared. So that's why I'm taking this first, and then tomorrow it will be the remaining topics. And if there is any time, like if we could not complete it, so that is on the third day, customs, if there is any pending portion. And the 50 questions I selected, mighty 50 questions. Those mighty 50 questions I will be providing it to you. That is from our solved workbook only. So that questions also I'll discuss. These are like some hand-picked questions for November 22 exam, keeping in mind May 22 and November 21, December 21 exams. So based on the trend as to how the questions could be. But if you ask me, sir, if these 50 questions alone, if I prepare and go for exam, I will qualify na. So I don't want to give you that false hope, because many students are asking me that only, that if we attend this rocket revision, we will clear na, and if we stall that 50 questions, we will clear na. So I don't know, really I am not aware of that. If that be the case, then I would have charged minimum 50,000 to 1 lakh for this rocket revision. So I am not guaranteeing that and all. So because students get carried away by seeing the previous rocket revision videos comments. So it's like, wow, they studied and they got 60. The students also too much that they will be putting in the comment that, sir, because of your rocket revision only I got 60 marks, I got 70 marks. So then everyone is asking me this, how would I know, am I setting a question paper or what? I can give you what are all the important areas. So that selected 50 questions I will be discussing in this batch. So this is the agenda for the next 3 days. And on 12th there is no class, so today and tomorrow, then 12th no class, and again on 13th, but 12th we are planning for one mock test, so 100 marks mock test. So if you want to write that 100 marks mock test, you can also write that. Okay, so now we will move on to the subject. So I am taking this rocket revision from That's It book. So That's It book, I think for all my students I have given, even others also, they would have you would have purchased it. So it's hardly 300 rupees only, so there is nothing I get out of this. And this I'm just giving you the ABC analysis first, considering the last 3 attempts. I'm just changing the ABC category now. Reason being, so every attempt for every 6 months I am doing rocket revision. Then is it the same old rocket revision with amendments, sir? Because May 22 also I have done some rocket revision. And is it the same rocket revision? No, it is not, because based on the question papers, so even I will also making to tune it accordingly. Those questions which are asked in May 22 exam, I should not give that much focus onto those areas. I should be giving focus onto others. So the focus will change. Okay. And then of course amendments, all the amendments will be incorporated. Then because of the flow also sometimes, so some extra points I will be discussing, so that will be there. Okay. And so you can see the index page, and you can just write down what are all the ABC category here. So this input tax credit is A, value of supply is A, and then place of supply. So actually place of supply, quite a long time they have not given that much importance, but from the last 3 attempts starting from Jan 21, so they have given much importance for place of supply also. So that is also A category. And exemptions, without exemptions and RCM, so this liability to pay GST, there is RCM related provisions, so that exemptions and RCM. So these are the A category topics in GST. Then when it comes to customs, so in customs, this types of customs duties, valuation under customs and exemptions under customs also this time I am adding into the A category, because I have observed, so last 4 attempts they have been giving more importance onto the exemptions also, that's why customs exemptions. So in customs 3 topics, that is, so valuation under customs, types of customs duty and exemptions under customs, and thereafter, so here for GST it is liability to pay GST, that RCM and e-commerce operator also this attempt many amendments are there, so that e-commerce operator related points also. Then place of supply, value of supply, input tax credit and exemptions. This is the A category. So where, so I suggest you to solve as many number of questions as you can into this. Then when it comes to B, so this composition scheme, then offences, penalties, search, seizure, confiscation, then this refunds also B, and here warehousing and FTP, warehousing, then FTP, so then this taxable event under customs, then here, so supply under GST, composite supply, mixed supply, that is B. These are the B category. So everything else is C only. So because already some questions were asked on duty drawback and baggage recently. Even though warehousing last attempt they have asked interest, but after seeing the summary of examiner's comments, I came to know that one mistake many students have done. Warehousing, the interest rate that they computed as 18% per annum. Actually in GST only the interest rate is 18% per annum. In customs the interest rate is 15% per annum. Remember, so whenever we need to pay any interest to the government, in GST it will be 18%, in customs it will be 15%. Don't get confused. In the place of customs, don't write 18%. Many students have done the same mistake. And then in case of refund, the interest rate is 6% in both the places. Under GST also it is 6%, under customs also it will be 6%. Okay. So apart from this, remaining topics and all are C. So that is there. And today I am starting with the first chapter, which is returns under GST. So you can take returns. So what is that page number, pa? Page number 100, returns under GST. So in this returns under GST also, the very important area is QRMP, quarterly return monthly payment, and in that quarterly return monthly payment, the interest computation, so is an area which could be tested for the forthcoming exam, that is for November 22 exams. So QRMP, quarterly return monthly payment scheme, as the name itself suggests that the returns are filed on a quarterly basis, whereas the tax will be paid on a monthly basis. So what are the returns that we will be filing on a quarterly basis? That is GSTR1 and GSTR3B. GSTR1 is a return to be filed by every registered person mentioning the details of outward supplies. And generally the GSTR1 due date is 11th of the month following every month. But in case of QRMP, it is 13th of the month following every quarter. That is the due date of GSTR1. Whereas in case of GSTR3B, the due date is generally 20th of the month following every month, but in case of QRMP, it is 22nd or 24th of the month following every quarter. To whom it is 22nd, to whom it is 24th. So remember the states G, M, C, A and below. Gujarat, Madhya Pradesh and Chhattisgarh and Andhra Pradesh. So these states and below these states, it will be 22nd, and all other states it will be 24th. Okay. So GMCA and below, GMCA and below. G for Gujarat, M for Madhya Pradesh and C for Chhattisgarh and A for Andhra Pradesh. Telangana is below that. Telangana, Karnataka, Kerala, Tamil Nadu, all those things. Even Maharashtra also it is below that. It will be 22nd, whereas for all other states it will be 24th. So this 22nd or 24th of the month following every quarter will be taken as the due date of filing GSTR1 and GSTR3B. Then what about the tax? They need to pay tax on a monthly basis. So that tax that they need to pay monthly basis is by 25th of the month following every month for the first 2 months of a quarter. What about the third month of the quarter? In case of third month of the quarter, anyhow for these 3 months put together, we will be filing GSTR 3B. You can sit here. So we can file 3B. So therefore for the entire quarter there will be a GSTR 3B that will be filed. So therefore that contains the third month details also, but for the first month and second month in the quarter alone, we need to pay tax by 25th of the month following every month, and we have two methods in this: fixed sum method and self-assessment method. Under fixed sum method or self-assessment method, these are the two different methods for the purpose of payment of tax, because the actual liability will be determined only on a quarterly basis. Then first month and second month, what they will be doing on some estimated basis, they will be paying. That is fixed sum method. Or they can do it on actual basis also, that is on a self-assessment method. So this fixed sum method or self-assessment method, I can choose for every month in the first month and second month, not necessary that in the quarter means I need to go only for fixed sum method, only for self-assessment method, nothing like that. For example, I am going for July to September quarter, so QRMP. For the month of July, I can go for self-assessment method. Again, for the month of August, I can go for fixed sum method. I can choose, because we will be filing PMT 9 for payment of tax. So, sorry, PMT 6. PMT 6 for payment of tax we will be filing. In that PMT 6 challan, we will be selecting the option whether it is fixed sum method or self-assessment method. So that is about this. But what is the time limit? 25th of the month following every month for the first month and the second month. For July month, it is 25th August. For August month, it is 25th of September. For the quarter, anyhow, we will be filing GSTR 3B by 22nd or 24th of the month following the quarter. Then, in case of B2B invoices, so the recipient can be taking credit only on a quarterly basis, because the GSTR 1 is filed on a quarterly basis. Remember, for November 22 exam, only 100% matched ATC can be taken as credit, and extra 5%, 12%, 10%, 15% and all we don't have. 100% of the matched ATC only can be availed. So which means that, so extra ATC we cannot take, and that too what is called as matched ATC is not 2A, 2B. Previously 2A, 2B was there, now only 2B. So whatever is reflected in 2B, that much only can be taken as credit, and other than 2B credit we cannot take. So then 2A is now only a reference document. So then sir, whatever amendments that are taking place in the GSTR 1, will it be reflected in 2B? Yes, now it will be reflected in 2B. And suppose if GSTR 1 is not filed by a supplier for a particular month, so then when we can take the credit? Whenever GSTR 1 is filed by the supplier, then only we can take. Why I am telling this? Because whenever we are filing GSTR 1 on a quarterly basis, because under QRMP we will be filing GSTR 1 on a quarterly basis, then our recipient will be able to take the credit only on a quarterly basis. Then until that point of time, they will not be able to take the credit. Due to that reason, they are giving invoice furnishing facility. That invoice furnishing facility is to be filed for the first and second month of the quarter. What about the third month? Anyhow, for all 3 months put together, we will be filing a GSTR 1. In that, the third month details will be given. So for the first month and second month, what is the time limit for filing IFF, invoice furnishing facility? Invoice furnishing facility is only for the purpose of giving credit to the recipient. Means whenever we report an invoice in invoice furnishing facility, that will be reflected in the GSTR 2B of the recipient, and recipient can avail the ITC with respect to that. So time limit is same, 13th. So 13th of the month following every month for the first and second month, that is in case of IFF, which is reflected in GSTR 2A and 2B of the recipient. And is this invoice furnishing facility mandatory? No, but it is optional. So if you want to go for invoice furnishing facility, you can do. Suppose if I am not going for invoice furnishing facility, then the first month and second month, whatever invoices that I have to add, I did not add. So all these 3 months invoices, I need to put it in GSTR 1. Suppose if I go for invoice furnishing facility for the first and second month, in GSTR 1, I don't have to enter the first month and second month invoices. Only the third month invoices, if I enter, that is sufficient, because the first month, second month IFF data, whatever I have entered, it will automatically come into my GSTR 1. Then QRMP scheme is GSTIN wise. GSTIN wise which means that, so there is nothing like that called all in or all out like we have seen in composition scheme. In composition scheme, all registrations should go into composition scheme, or all registrations should come out of the composition scheme. Even if one registration is ineligible for composition scheme, all registrations are ineligible for composition scheme. But QRMP is not like that, which means with respect to multiple registrations for the same person, few registrations I can go for normal scheme, few registrations I can go for QRMP scheme. I can decide that. So not that if I am going, for example, under the same permanent account number, I have 4 registrations. So with respect to 2 registrations, I can go for normal, means monthly I can file. And with respect to 2 registrations, I can go for quarterly return. That is this. So it is GSTIN wise, and distinct person have the option to avail the scheme for 1 or more GSTIN. Then what is the time frame to opt in into QRMP? So time limit is simple, that is within 1 month after and 2 months before. Remember, A for after, B for before. A is first, B is 2. So therefore, within 1 month after and 2 months before, we can go. For example, I want to go for QRMP for July to September. 1 month after commencement of the quarter. A for after, B for before, C for commencement of the quarter. A is 1, B is 2. Correct? Alphabet A is 1, alphabet B is 2. So therefore, within 1 month after commencement of the quarter, 1 month after commencement of the quarter means July quarter commences July. So therefore, 1 month after commencement means by July end I need to go for QRMP. 2 months before commencement of the quarter means, so that is by the previous May. So May and June, 2 months before commencement of the quarter. July is the commencement of the quarter. So June and May. So therefore, I need to go into QRMP by May. So that is what for the July to September, it should be from 1st May 2021 to 31st July 2021. That is the time limit by which I need to go. So just remember this A, B. So A for after, B for before, 1 month after, B, 2 months before. 1 month after, 2 months before, commencement of the quarter. Commencement of the quarter. And there is one condition for opt-in, that is the last return should have been filed, because once we go into QRMP, the returns that we will be filing is on a quarterly basis. Monthly returns we cannot file. Due to that reason, whatever they are telling, all pending returns under monthly scheme, you first file and then only you enter into QRMP. For example, so if I am going into QRMP for the month of July to September, so then whatever is the return up to June, I should have filed it before. As soon as possible, I should have filed, and then only I can enter into the QRMP scheme. That is the meaning. So the last return must be filed on the date of exercising the option. And GSTR1 or invoice furnishing facility, already I told you that it is an optional, and once we enter this, no need to enter again in GSTR1, otherwise we need to enter. But one important point which you need to remember for MCQ purpose here is that the maximum value of invoices that we can enter is only 50 lakhs. The maximum value of invoices that we can enter is only 50 lakhs, not more than that. Means in a month, in IFF, to whatever extent I can enter the invoices is only for the value of 50 lakhs, not tax of 50 lakhs. 50 lakhs of value of invoice only I can enter, that to B2B invoices. Suppose if it is beyond that 50 lakhs, I cannot enter those invoices. There is a restriction there. Then payment method, fixed sum method or self-assessment method, or the two methods. In fixed sum method, what we need to do? So we need to check whether the previous 3B filed is quarterly or previous 3B filed is monthly. If the previous 3B filed is quarterly, we will take that quarterly 3B and we will see what is the liability paid through electronic cash ledger, means net liability, because gross liability minus input tax credit plus GST under RCM is known as cash liability, whatever liability paid through cash, because RCM liability we have to pay only by cash. We cannot use the credit ledger for payment of RCM liability. So therefore, what is the meaning of net liability here? The net liability means regular FCM liability minus input tax credit plus RCM liability, that is known as net liability. That net liability we need to take, multiply with 35%, that will be taken as the fixed sum method tax payable for the current month, that is in the first month and second month of the quarter, we need to pay tax. So we need to take previous 3B quarterly, whatever is the net liability, say the net liability is 1 lakh, 1 lakh into 35%, 35,000 I have to pay for the first month and second month in the quarter. What about third month? Anyhow, for all 3 months, actually I will determine some amount and I will pay in 3B. So therefore, third month I don't have to pay. If I go for monthly 3B previous, that is previous 3B, that is say July to September quarter, I am going into QRMP, and previously I did not go for QRMP, then the previous 3B filed is for the month, which month? June month. So June month 3B I need to take, and whatever is the net liability for June month I need to ascertain. Say the net liability for June month is 30,000 rupees, that 30,000 rupees I will be paying for the first month and second month of the quarter. What about the third month? Again same, anyhow 3B I will be filing. So this is under fixed sum method. So you need to remember previous quarter into 35%. If it is quarterly 3B, if it is monthly 3B, previous 3B monthly into 100%, that will be payable under fixed sum method. Under self-assessment method, we can compute how much ever amount that we wanted to pay. So we can actually ascertain and we can make the payment under self-assessment method. So here in the self-assessment method, we can consider how much is the credit that is already there, and whatever is the balance, that much only we can pay. Here the payment of tax should not be misunderstood that we are making really the payment of tax to the government. We will deposit into our cash ledger, because the day when we file 3B, then only it is called as payment of tax. Just because we deposit some money into our cash ledger, it does not mean we have paid the tax. And interest burden will definitely be there whenever we just deposit in the cash ledger, but 3B is not filed. So only upon payment of, that is only upon filing 3B, it is considered as tax payment. So until that point of time, this fixed sum method or self-assessment method, we will be depositing into the cash ledger through PMT 6 challan. Okay. Then any change in the manner of filing 3B? No change. So we will not be changing any manner, just like how regularly 3B will be filed, the same way we will file. Compulsory opt-out. There is one important condition here. What is that important condition? So aggregate turnover during the previous year does not exceed 5 crores. Aggregate turnover during the previous year does not exceed 5 crores. Okay. That is one important point which you need to remember. So previous year or current year, we should take the previous year. Aggregate turnover during previous year does not exceed 5 crores. Then one more condition is also there. So we should ensure that any quarter during the current year also, any quarter during the current year also, it should not exceed 5%. So what does it mean? So these 2 points signifies one thing, that even though it is given as R, but these two are like conditions, cumulative conditions. Previous year my aggregate turnover should not exceed 5 crores, and also in any quarter during the current year also it should not exceed 5 crores. Suppose in the current year, in any one quarter it exceeds 5 crores, then next quarter onwards I cannot go for QRMP. That is these 2 points. Even though the words are R, but these are like 2 separate conditions. Like conditions you need to remember, previous year aggregate turnover should not exceed 5 crores, and current year in any quarter it should not exceed 5 crores. Okay. Suppose if it exceeds 5 crores, what will happen? Compulsory opt-out pa. So we will be compulsorily opting out of this. That is this compulsory opt-out. Then interest on account of non-payment. This is the area which is very, very important. So chances of asking either MCQ or problematic questions on that is, under fixed sum method we will pay some tax. For example, I took that previous quarter 1 lakh is the tax net liability. Okay. So previous quarter, so that is for the previous quarter, so what is the net liability? The net liability comes to 1 lakh. The net liability comes to 1 lakh. So when the net liability is 1 lakh, what I will be doing? I will be depositing under fixed sum method for the month of July 35,000. And here actual liability I am ascertaining. That actual liability that I will ascertain at a later point of time. First I will pay this 35,000. And the actual liability that I am ascertaining as 40,000 rupees. Now what is the difference? So this difference will be 5,000 rupees. Now this 5,000 when I will pay? I will pay at the time of filing 3B. This difference and all I will pay at the time of filing 3B. Should I pay any interest? No interest. No interest. No interest in this case. Why no interest in this case? Because you are following the system calculated method. So whatever is the system calculated method, that only you are following. Due to that reason you don't have to pay any interest, provided this differential amount of 5,000 is paid by 22nd or 24th. When? So for the July, August, September, it is 22nd or 24th of October. If you are paying this 5,000 by 22nd or 24th of October, you don't have to pay any interest. What if I am paying this under self-assessment method? If the same comes under self-assessment method, say for example, now I can decide between July month and August month, either fixed sum method or self-assessment method. So for July month I went for fixed sum method. Now for the August month I am going for self-assessment method. Suppose if I am going for self-assessment method for the month of August, and in that self-assessment method also I paid only 35,000 rupees, but my actual liability for the month of August is 40,000 rupees, and the differential amount will be 5,000 rupees, and that 5,000 rupees really I paid by 22nd or 24th of October. Then in that case will there be interest payable? Yes, interest is payable. Interest is payable. Interest is payable under fixed sum method? No. But interest is payable under self-assessment method? Yes. On what? On the differential amount. So what is the differential amount? The differential amount is 5,000. And by when that 5,000 I should have paid? That 5,000 I should have paid. What is the due date here? The due date here is 25th of September. Why 25th of September? August month I have to pay by 25th of the month following every month under QRMP. So therefore for the month of August it is 25th of September I should have paid. But what is the actual date? What is the actual date? The actual date here is 22nd or 24th. I am taking 22nd. So I am taking 22nd of October. Then from 25th of September, so that is 5 days in September and 22 days in October. For 27 days I need to compute the interest. So therefore interest will be 5,000 into 18% into 27 divided by 365. So this will be the interest payment that I have to make if I am under self-assessment method. So therefore self-assessment method, if you are going, you should ensure that there is no differential tax that will arise. Suppose if the differential tax arises, you should not go for self-assessment method. You should better pay under fixed sum method to avoid the interest. So this is the only difference in interest between fixed sum method and self-assessment method. But Suppose by 25th if you are not paying, that is regular interest. For delay in payment of tax, the regular interest will be coming under section 50. So I am talking about, that is common for fixed sum method or self-assessment method. I am talking about the interest difference that arises between fixed sum method and self-assessment method is in this place. Suppose if any tax that you need to pay by 25th, if you are not paying by 25th, that regular interest will be there from the first date after due date. And any tax that you need to pay by 22nd or 24th, GSTR 3B filed late, that is also regular interest. There is no change in that. But the main question is here about the differential tax. So the differential tax arises on account of actual liability for that month minus whatever you paid under fixed sum method or self-assessment method. Suppose if the difference is there under fixed sum method, leave it, ignore that interest, there is no interest. Whereas if it is under self-assessment method, we need to compute the interest. So this is the point, tricky point which could be tested. Then apart from that, suppose if this self-assessment method 35,000, I am not paying by 25th of September, then what will happen? Then regular interest for every day delay, there will be interest computation 18% per annum from the first date after due date till the date of payment. Suppose if the total amount for that quarter, I am not filing by 22nd or 24th, then from the first date after the due date, that is from 23rd October or 25th of October till the actual date of payment, the regular interest at the rate of 18% will be there. And in case when you are filing 3B, remember, in case when you are filing 3B late, then the interest will not be calculated on the gross liability. The interest will be calculated on the net liability. It is not on the gross liability. Okay. So here also, anyhow, this is net liability only. Here my discussion is not about the gross liability, because whatever base I am taking for the previous quarter or the previous month 3B is a net liability. By computing 35% or 100%, I am taking the 3B net liability, not 3B gross liability. That's a notable point here. Then, is there any late fee that I need to pay for delay in payment of tax? There is no late fee for delay in payment of tax and delay in filing IFF. IFF is first of all optional. So therefore, if I file IFF late, there is no late fee. And 25th of the month following every month, if I have to pay the tax, if I am paying the tax late, there is no late fee. However, GSTR 1 and GSTR 3B, this needs to be filed by 13th of the month following every quarter and 22nd or 24th of the month following every quarter. For the delay only, I need to pay the late fee. Otherwise, no late fee. So this is about QRMP. So mainly in QRMP, the interest computation part could be tested. Then next, time limits for various returns. So we have multiple returns. GSTR 1 is a return to be filed by every person, and the monthly return time limit is 11th of the month following every month. And for QRMP, we already know that is 13th of the month following every quarter. And IFF, what is the time limit for IFF? 13th of the month following every month. GSTR 3B is to be filed by every registered person containing the details of all tax liabilities, ITCs, etc. But GSTR 1 contains only the details of outward supplies. And this GSTR 3B is to be filed by 20th of the month following every month. And in case of QRMP, that is aggregate turnover during previous year does not exceed 5 crores, then in that case, they need to file it by 22nd or 24th. I told you 22nd is which case? Gujarat, Madhya Pradesh, Chhattisgarh, Maharashtra, Telangana, Andhra Pradesh. So these are the states. That's what I asked you to remember. So G, M, C, A and below. G, M, C, A and below, you need to take 22nd, and for other states it will be 24th. And CMP 8. CMP 8 is a return to be filed by a person opting for composition scheme, and they need to file it by 18th of the month following every quarter. 18th of the month following every quarter is the time limit. GSTR 4 is also a return to be filed by a person opting for composition scheme. A person opting for composition scheme will be filing two returns. One is GSTR 4 and GST CMP 8. GST CMP 8 is a quarterly return, whereas GST 4, which was previously a quarterly return, now they have made it as an annual return. And GSTR 4 needs to be filed by 30th April of the succeeding financial year. Generally, annual return time limit is 31st December of the succeeding financial year, but in this case, GSTR 4, it is 30th April of the succeeding financial year. And at the time of filing CMP 8, like 3B, we have to pay the tax. So therefore, due date of payment of tax in case of normal person is 20th or 22nd or 24th, because their GSTR 3B filing due date is the due date of payment of tax. Likewise, for the person opting for composition scheme, the due date of payment of tax is the time limit by which they need to file CMP 8 return. CMP 8 return time limit is 18th of the month following every quarter, so that itself is the due date of payment of tax. So mainly it is relevant for the purpose of computing the interest. So interest is always computed from non-resident taxable person who is coming from outside India to India, who is not having any physical place of business in India, and is making supply of goods or services in India, he is called as an NRTP. That NRTP will not be given a permanent registration, that NRTP will be given a temporary registration. And every NRTP, as they are making taxable supplies in India, they need to compulsorily get registered. But the registration granted to them is a temporary registration. Due to that reason, they have to file the returns 20th of the month following every month, or 7 days from the expiry of registration, whichever is earlier. That is the time limit. Then GSTR 5A is a return to be filed by a OIDR supplier located outside India. OIDR refers to Online Information Database Access and Retrieval Services. That is a service which is mediated through internet and it automated, is known as a OIDR service. Example, OTT platforms. So in that case, if the supplier is located outside India and making supply to a non-taxable online recipient in India, who is a non-taxable online recipient, that is an unregistered person importing services for any purpose, is known as a NRTP. So non-resident on that is a non-taxable online recipient. So don't get confused between NRTP and NTOR. NRTP is a non-resident who is coming into India for making supply of goods or services, not having physical place of business. But this NTOR is non-taxable online recipient who is unregistered person, is in India only, and they are importing the services for their personal purposes. In that case, as OIDR service is always taxable, liability to pay GST is on supplier, and that supplier will be registered in India, and that registration is not a temporary registration, that registration is a permanent registration, and they will be filing returns by 20th of the month following every month, just like 3B. Then GSTR 6 is a return to be filed by input service distributor. Input service distributor, a head office which will take the credit and distribute the credit to the branch offices. And for the purpose of this distribution of credit, only credit of input services can be distributed. Credit of inputs and capital goods cannot be distributed. So if the invoice for the inputs and capital goods is raised to the head office can distribute the credit to the branch officers? No, only in case of input service. That's why remember the name input service distributor. Now, whenever they are distributing the credit, they will be giving a ISD invoice, and whatever credit they have distributed, they need to report it on a monthly basis. The credit will be distributed on monthly basis or quarterly basis. Here also many confusions are there. Many students will think that quarterly also we can distribute, as per our wish we can distribute. No. So that month credit needs to be distributed in that month only. We cannot carry forward and we cannot distribute that. So which means that they need to file one return for distribution of credit. What is that return? GSTR 6. That GSTR 6 needs to be filed by 13th of the month following every month. So then only we will be able to see that in our GSTR 2B, and we will be able to take that as credit, because 2B needs to be generated by 13th midnight. 2B will be generated. So therefore by 13th they need to file. Who need to file? ISD need to file. What return they need to file? GSTR 6 return they need to file. 13th of the month following every month. GSTR 7 and GSTR 8. GSTR 7 is TDS details and GSTR 8 is TCS details. So this TDS and TCS return is to be filed by 10th of the month following every month. So both are same time limit only. And GSTR 9 is an annual return. That annual return is to be filed by every registered person. And what is the time limit? 31st December of the next financial year. And this annual return, what we need to understand is that annual return generally, so there is a relaxation. From time to time there is a relaxation that is being given. So should that be remembered for exam purpose? No, for exam purpose, because many students have asked me, sir, they have relaxed the annual return. If it exceeds 2 crores only, it should be filed. But they never gave it as an amendment in the section. They gave it as a notification for that particular financial year. It is being continuing. It does not mean that in the law they have made that amendment. So therefore what we need to understand is that annual return is required to be filed by a person whose aggregate turnover in a year exceeds 2 crores. True or false? False. False. Even though it is true practically, but for the purpose of exam it will be false, because as per law, whatever is applicable for exam is law. As per law, so yes, annual return is required to be filed, because they did not make any amendment in the act, made amendment in the section. Through a notification for a few years they are being relaxing. So when the amendment comes in the section, then only that point will be applicable. Of course, that has been decided in the GST Council meeting, and the amendment will be taking place soon, and that will come as a section amendment itself. Then only it will be applicable. That is for May 23 exam, and don't meet me in May 23 exam, please. And therefore, for your exam it will be, the annual return is required to be filed by every person. That is 31st December of the succeeding financial year. GSTR 9C is a reconciliation statement. That is a self-certified. Previously it was to be audited. So GSTR 9C was to be audited, and 2 crores when it exceeds, it was required to be audited. Now they removed it as audit. It is a self-certified reconciliation statement. And when it is applicable, not 2 crores, 5 crores, they increase the limit also. If aggregate turnover during previous year is more than 5 crores. Previous year here refers to the completed year. Whichever year we are filing for that year. Previous year does not mean, so we should see the previous year for current year annual return, not that, because annual return and all we will be filing for the completed year. For that completed year you need to see if it exceeds 5 crores. So then only we need to do this reconciliation statement 9C. Otherwise 9C is not applicable. What about annual return? Annual return is required to be filed. And GSTR 10 is a final return. This final return is required to be filed by a person whose registration is cancelled, and they need to file this final return by 3 months from the date of cancellation or order of cancellation, whichever is later, not earlier, whichever is later, okay. And here we need to understand that the 3 months is only for the date of cancellation, not the order of cancellation. Sir, what is date of cancellation? What is order of cancellation? Date of cancellation means whenever we make application for cancellation of registration, in that application for cancellation of registration, we will be mentioning one date. We need to select one date from when the registration needs to be cancelled. Suppose if we are selecting a prior date, today we make an application by selecting a prior date, then the date on which we made application will be taken as the date of cancellation. Suppose if we are not selecting any prior date, suppose if we are selecting a future date, so then that future date whichever is selected will be taken. So whichever is later will be taken as the date of cancellation. Say in that application we selected 1st October as the date of cancellation, and immediately they will not be giving the cancellation order. It will take some time. Suppose if the cancellation order is passed on, say 31st October, if the cancellation order is passed on 31st October, so date of application for cancellation is 1st October, means that is the date of cancellation. And in that order, what will be mentioned as the effective date of cancellation? 110 will be taken as the effective date of cancellation. So in the order, even though order is given on 3110, but in that the effective date of cancellation, that effective date of cancellation will be 110. So therefore, how we need to count the GSTR 10 time limit? So GSTR 10 time limit will be 110 plus 3 months. 110 plus 3 months. Here date of cancellation means the effective date of cancellation mentioned in the order. So order copy will be given on one date. That date you should not take. The effective date that is mentioned in the order copy. So plus 3 months. B, date of order. Date of order is 31st October. Whichever is later, naturally A will be later. Okay. So whichever is later should be taken. So this is what you need to apply. Be careful with respect to this. In MCQ it will be tested. GSTR 11 is a return to be filed by UIN holder, unique identification number holder, and this unique identification number holders are UN agencies, consulates and embassies. Their outward supplies are exempted. On their inward supply, whatever GST they paid, they can get it as a refund. To get that refund, they need to get identification number. That's the reason why they have been given a unique identification number. This UIN holder will be claiming refund. When they are claiming refund, they need to report what are all the purchases they have made. So those purchases data and all will be reported in one return, that is known as GSTR 11. And GSTR 11 they don't have to file. But in the sense like they don't have to file it randomly or monthly like that. At the time when they go for refund application, they need to give this GSTR 11 as an annexure. So which means GSTR 11, there is no specific time limit. The regular time limit when they go for refund application for that refund, at the time only they need to submit this GSTR 11, that is this, at the time of filing refund claim. Then who are not required to file GSTR 1 or GSTR 3B. Remember tonic in the T is 2 times. Okay, T square. Tonic. What is this tonic? T for TDS deductor, TCS deductor, 2 T's. Why? TDS deductor will be filing GSTR 7, TCS deductor will be filing GSTR 8. That's why they are not required to file GSTR 1 or GSTR 3B. O for OIDR supplier, because they are required to file GSTR 5A. Correct. OIDR supplier is required to file GSTR 5A. And then GST TON, N for non-resident taxable person, they are required to file GSTR 5. And I input service distributor, they are required to file GSTR 6. And C refers to composition scheme dealer. Composition scheme dealer is required to file CMP 8. So this is what tonic you need to remember. Whereas who are not required to file annual return also tonic. But there T is only one, that is TDS deductor. So TCS deductor is required to file annual return. Yes, GSTR 9B. GSTR 9B is the annual return to be filed by a TCS deductor. And that is same time limit, that is 31st December of the succeeding financial year. So therefore this annual return GSTR 9, so even 9B is applicable to a e-commerce operator. For a normal person it will be GSTR 9, and GSTR 9B is for e-commerce operator. So e-commerce operator is only required to deduct TCS. So therefore that is GSTR 9B, and both cases the time limit is same, that is 31st December of the succeeding financial year. Then only TDS deductor is not required to file annual return. Then O for OIDR supplier, same, located outside India making supply to non-taxable online recipient in India. And N is same, NRTP. I is input service distributor, same, but C is different. So here C is casual taxable person. So in this place C is composition scheme dealer, here C is casual taxable person. And one more point is there in case of annual return, CAG. So that is registered persons whose accounts are subject to audit by CAG, PSUs or any government department whose accounts are subject to audit by CAG, they are also not required to file any annual return. So who are not required to file annual return? CAG tonic. Now whether a casual taxable person can file GSTR 1, GSTR 3B? Yes. A casual taxable person is required to file GSTR 1, GSTR 3B, but a casual taxable person is not required to file GSTR 9 annual return. Who is a casual taxable person? A person who comes from other state to this state, who is not having any physical place of business in this state and is making supply of goods or service in this state, is known as a casual taxable person. Then what is the late fee for delay in filing return? The late fee for delay in filing return, so this late fees, actually what has happened, in the law it is given as 100 rupees per day subject to maximum 5,000. That is under each act. That is how the late fee is given in the law. But they have given some notifications. Under that notifications, so but that notifications is amendment to section 47 itself. So it is not a notification for a temporary period. It is an amendment to section 47 itself. And in that they have given, so per day late fee, ICAI has missed in the study material. So per day late fee, still they have used only 100 rupees per day, but actually 100 rupees per day late fee is also being reduced. So they have given in the amendments material, this point is not there in the study material, but this point is there in the amendments material. In amendments material, they have given only the total amount late fee, the maximum late fee has been reduced. That alone they are talking about, but they are not talking about per day late fee. So then students may think that the per day late fee is still 100 rupees per day. No, that also has been reduced. Okay. So therefore, you need to follow this. And what is the late fee applicable for GSTR 1 and GSTR 3B? Suppose if it is a nil return, for 1 and 3B we are discussing, if it is a nil return always 10 rupees per day subject to a maximum 250. Means even if the delay is 30 days into 10 rupees, how much? 300, but the maximum 250 rupees only will be taken as the late fee. 250 under CGST Act and 250 under SGST Act. We don't have to pay any late fee under IGST Act. The late fee is always payable under CGST Act and SGST Act. Now in the MCQ, what they will do is that they will twist. They will be asking how much is the late fee payable under CGST Act. So in that case, you need to write only CGST Act late fee. Suppose if they are asking what is the late fee payable, so they did not refer to any act in the section. That is, they did not refer to any act in the MCQ heading. See, if it is a descriptive, we will write both, no problem. In MCQ OMR sheet, we cannot write explanation, assumption and all. So one answer only we need to write. That's the reason why I am telling. Because last attempt, May 22 attempt, they twisted like that. Sir, neither supply of goods nor supply of services, not a supply. Both are same only, no? Both are same only. Neither supply of goods, not a supply. Both are same. Neither supply of goods nor supply of services or not a supply. Both are same. And students ask me that as a doubt. Sir, what is the difference between that? Actually, there is a difference. Slight difference is there. That slight difference is, if it is excluded from supply, it should be called as neither supply of goods nor supply of services. If it is not at all covered under 7 subsection 1 inclusion, then it should be called as not a supply. So that is the slight difference. So that and all they are testing in exam. So that's why I am telling you this. So therefore, whenever they give the question about late fee, full stop, then we need to compute under both CGST Act, SGST Act and rate. Suppose if they give only CGST Act, you do only CGST Act. This is common for late fee provisions, penalty provisions and wherever. So interest provisions, interest, penalty, late fee. These 3 places, this is common. Whatever I discussed now. That is when they are asking only about CGST, do it only about CGST. When they are asking about, IGST, you do both. When the question is silent, you do both. You do both CGST as well as SGST. Then, so that is this. And next thing, suppose if it is other than nil return, 25 rupees per day subject to maximum, that maximum will change. What is that maximum? If the aggregate turnover during the previous year exceeds 5 crores. So during the previous year, we need to see aggregate turnover of previous year. If it exceeds 5 crores, what is the maximum late fee? Maximum late fee will be 5,000. Maximum late fee will be 5,000. Suppose if it does not exceed 5 crores, if it does not exceed 5 crores, but exceeds 1.5 crores, but exceeds 1.5 crores, half. What is half of that? 2,500. And again, if it does not exceed 1.5 crores, what is half of that? 1,250, round off 1,000. Okay, so somehow you should remember. So 5,000 and 2,500 and 1,000, that will be taken as the maximum late fee. So if it exceeds 5 crore, 5,000, does not exceed 5 crore but exceeds 1.5 crore, 2,500, does not exceed 1.5 crore, 1,000, that is taken as the maximum late fee in this case. Okay, but in all these cases the per day late fee will be 25 rupees per day if it is other than nil return, and nil return can be filed through SMS also here. Then GSTR 5, 5A and 6. So this GSTR 5, 5A and 6 nil return other than nil return. So nil return is simple, 110 rupees per day subject to maximum. So here both cases the maximum is 5,000 only, they have not reduced that. So they have not reduced the maximum late fee in case of GSTR 5, GSTR 5A and GSTR 6. Suppose if it is nil return per day late fee 10 rupees per day, and if it is other than nil return 25 rupees per day, but the maximum late fee is same. Then GSTR 7 and GSTR 8, there is a completely difference. GSTR 7 is TDS, GSTR 8 is TCS. GSTR 7 late fee you can see here. So GSTR 7 late fee is 25 rupees per day subject to maximum 1,000. But in the amendments material it is given as 100. That's a mistake. Actually it is 1,000. 25 rupees per day subject to maximum 1,000. And GSTR 8 is TCS return 100 rupees per day subject to maximum 5,000. The regular provision is only there. So this could be definitely be tested. I am expecting So because every student will get confused here, so this can be tested. GSTR 7 25 rupees per day subject to maximum 1,000, whereas GSTR 8 is 100 rupees per day subject to maximum 5,000. And GSTR 4, GSTR 4 is required to be filed by whom? Is required to be filed by a person opting for composition scheme. And for composition scheme, when composition scheme is applicable, if the aggregate turnover during previous year does not exceed 1.5 crores, then only composition scheme is applicable. So whatever is the late fee for GSTR 1 3B, if it does not exceed 1.5 crore, the same late fee is applicable even for composition scheme also. Logically you remember, because the aggregate turnover during previous year does not exceed 1.5 crore for a person opting for composition scheme. So generally GSTR 1, GSTR 3B, what is the late fee if that does not exceed 1.5 crore? 25 rupees per day subject to maximum 1,000. So here also 25 rupees per day subject to maximum 1,000. And nil return always 10 rupees per day subject to maximum 250. So that is this late fee. And then GSTR 9 and GSTR 9C, annual return. For annual return, it is regular provision only. They have not reduced anything. That is 100 rupees per day subject to maximum 0.25% of the turnover, not 0.5%, 0.25% of the turnover. This under CGST Act, the same is payable under SGST Act. Apart from that, any other return, the late fee will be as per the regular provisions only. That is 100 rupees per day subject to maximum 5,000. Okay. And this equal amount of late fee is also payable under SGST Act. And late fee under IGST Act is not applicable. Suppose if they are asking IGST Act what is the late fee, you compute under CGST Act, SGST Act, and you have to show that information. Then filing nil return through SMS. 3 returns can be filed through SMS. And what is the meaning of nil return? Nil return means all the entries should be nil. Suppose if there is some ITC, will it be called as a nil return? No. Nil return means all the entries, value, tax, everything should be nil. Then only it will be called as nil return, that can be filed through SMS. And 3 returns, GSTR 1, GSTR 3B and CMP 8, that is regular scheme and composition scheme, those returns can be filed. First return means, as per section 40, first return refers to a return which will be filed by a person immediately after their registration. But that first return should not only contain the details from the date on which they have got the registration certificate, but even before the date they got the registration certificate, but after the date they are liable to get registered. For example, a person is liable to get registered, liability to get registration is on 5th of July, and that person is making application for registration. Application for registration is made on 31st of July, and the registration has been granted. Registration granted on 8th of August. So now he need to file the first return when? So he need to file GSTR 1 and GSTR 3B for August month. For August month he need to file. So, but that GSTR1, GSTR3B for August month not only contains the details of August month, but also the July month. From when? From the date he is liable to get registered. So, 5th July. So, this will contain the details from 5th July to 31st August. So, whatever GSTR1, GSTR3B that they are filing for August will not only contain the details of August month, but will also contain the details from 5th July, that is immediately before the date when they get the registration certificate, but after the date they are liable to get registration. So, that period details also should be mentioned in this first return, that is this. And then notice to return defaulters. See, compared to the previous That's It book, I have updated a lot, and in the latest That's It book, so I have given some more extra points also, and even at the end of the That's It book I gave a section reckoner. So, like which section it is and that is in which page number, that also I have given. So, because many students were finding it difficult that in the last minute, sir, we are forgetting the section numbers. So, at least they can refer to the section numbers and the page number corresponding, so that they can prepare accordingly to the section numbers. Sir, he is writing a section number very important in the exam. Not important, but if you are writing the section number, that will definitely add value to the marks. So, yes, because I have seen, I'm not telling this just like that, because I have seen the papers of all the students who got 80 plus. So, the one thing that they all said is that, sir, we really followed whatever you said, the way you are asking us to write, remember with section numbers, we wrote that, and that's where. So, this is a common feedback from every student who is telling. So, therefore, I am not asking you to make an effort to remember with section numbers, but at least some important section numbers should get registered in your mind. Okay, for that reason, when you are reading itself, read along with the section numbers. In exam, if you are clear, this is this section number only, you write. Otherwise, you leave it. It's okay, because we cannot make an effort to remember the section numbers for that reason. But in the preparation itself, when you keep on adding the section numbers, we will register that in your mind. That is the reason. Then, notice to return defaulter, section 46. So, that notice will be given in GSTR 3A. So, whenever returns are not filed, just like how one return, generally in income tax, if returns are not filed, one notice is given, like that in GST also, if returns are not filed, notice will be given in GSTR 3A. And once that notice is given in GSTR 3A, within 15 days, we need to file the return. What will happen if we are not filing returns within 15 days? Then that leads to best judgment assessment. So, they will be passing a best judgment assessment order. So, that is this 15 days notice, not 15 working days, it is 15 days notice only. So, which means that is notice when they give within 15 days, we need to file the return. Otherwise, that will lead to best judgment assessment. Then rectification of returns. Rectification of returns means whenever we filed some GSTR1 already, and that GSTR1 which we have filed already. So, if you need to make any amendment, so what is the time limit by which it can be amended? It is by due date of filing return of September of the next year, or actual date of filing and return, whichever is earlier. But actually here there is a confusion between the law and the study material. In the law, it is given actual date of filing return for September of next year, or the date of filing annual return, whichever is earlier. But in the study material, it is given in two different places, two different provisions. Okay. So, therefore, my advice is you follow whatever is given in the study material only, and that too, this due date only you follow. So, even though the actual date is given in the law really, but you follow this only. That is due date of filing GSTR 1 of the September of the succeeding financial year. Means what? 11th October 2000 for current financial year 2022-23, 11th October 2023. If it is QRMP, 13th October 2023, or actual date of filing and return, whichever is earlier will be taken. That is this. Time limit for rectification of return, and like this we have similar time limits in three places. So, not only in this place, like this we have a similar time limit in section 16 subsection 4 also. So, section 16 subsection 4, time limit for ITC, for availment of ITC, where there is a time limit which says it should be 30th, due date of September of the succeeding financial year. So, due date of September of the succeeding financial year, but which return we will take ITC? It is GSTR 3B. So, therefore, 20th or 22nd or 24th October of next year, or actual date of filing annual return, actual date of GSTR 9, whichever is earlier or whichever is later. whichever is earlier will be taken. So already we have one rectification time limit. So that is for rectification of return which is given in section 37 subsection 3. So this is given in section 37 subsection 3, rectification of return, rectification of GSTR 1. So the same time limit we have even for ITC, but a slight difference. Here we take due date of filing return for September. So the due date will be what? It will be 11th or 13th October. It will be 11th or 13th October of next year. That should be taken, because here we are talking about GSTR 1. Whereas in case of section 16 subsection 4 ITC, it is 20th or 22nd or 24th October of the next year. So because that is 3B return. Yet another place we have this. So that is credit note. What is the time limit for issuance of credit note? One second. So one second. So what is the time limit for credit note? That credit note time limit is section 34. So section 34 says the credit note needs to be given by 30th September of the succeeding financial year, not October. So 30th September, clearly it is given end of September of the succeeding financial year. So therefore 30th September of next financial year, or date of filing annual return, actual date of GSTR 9, actual date of GSTR 9, whichever is earlier will be taken. Okay. So this date should be remembered, because many places you will be remembering it as 6 months from the end of the financial year, like that and all. So there is a problem in that 6 months time limit. Not necessarily that always it is 6 months, there is a slight change is there. So because in case of credit note it will be 30th September, in case of rectification of return it will be due date of September of the succeeding financial year, which means that it is 11th or 13th October. And in case of time limit for availment of ITC also, it is given as due date of September of the succeeding financial year. So that will be 20th or 22nd or 24th. These slight differences are there. That's the reason. Otherwise you can remember 6 months from the end of the financial year and you write. But if you are not getting much, you should not ask me. Okay. So you can remember that way also. Then next, outward taxable supplies. How we need to report it in GSTR 1. So B2B supply should always be reported invoice wise, because then only recipient will be able to take the credit. Whereas in case of B2C supplies, if it is intrastate supplies, consolidated details will be entered. So which means we don't have to do invoice wise. Whereas if it is interstate supplies, if the value of invoice per invoice exceeds 2,50,000, definitely we need to give invoice wise. If the value of invoice does not exceed 2,50,000, state wise consolidation. Just 3 points. B2B always invoice wise. B2C intrastate always consolidated. B2C interstate, invoice value exceed 2,50,000 per invoice, invoice wise. Invoice value does not exceed 2,50,000 per invoice. All those invoices state-wise consolidation. The same point is applicable even in case of revised tax invoice also. This is outward taxable supplies to be entered in GSTR 1. Outward taxable supplies to be entered in GSTR 1. The same discussion is applicable even in case of revised tax invoice. So there is a concept called as revised tax invoice, which will be issued by a person. So whenever they are liable to get registered and they make application for registration within 30 days and they get the registration certificate, till the time they get the registration certificate, they cannot give tax invoice on their outward supplies, because in the tax invoice they need to mention GSTIN. The GSTIN they will be getting only on the date of registration certificate. So therefore for this period when they are liable to pay GST but they cannot give tax invoice, they can give tax invoice at a later point of time, that is known as revised tax invoice. In that revised tax invoice also, suppose during this period we made multiple transactions to the same person. Now in that case, can we do consolidation? Yes, we can do consolidation if it is B2C supply intrastate. So revised tax invoice we don't have to give for one supply, one revised tax invoice to the same person, we can consolidate and give. Suppose if that person's aggregate turnover, that is he is a B2B supply, B2B supply means what? It will be like definitely you need to give invoice wise, because then only he will be able to take the credit. Whereas for B2C only that relaxation is there. So whatever we learned here, ditto the same information is applicable even for revised tax invoice also. Consolidated revised tax invoice can be issued. Then annual return, this is what I said, that is So for financial year 2021-22 onwards, so mandatory irrespective of aggregate turnover, but for this year also they have given, a relaxation, that is aggregate turnover, if it does not exceed 2 crores, it is optional. Like that it is given even for 21-22. 21-22 also annual return is given, but what I am trying to convey is that you don't have to remember that. So this information and all you don't need. Okay, this information you don't need pa. So this you don't have to learn this. For which financial year what we need to do. So what you need to remember is, now for financial year 21-22 as per law, what it is, GSTR 9 mandatory irrespective of aggregate turnover, GSTR 9B that is also mandatory, 9C self-certified aggregate turnover exceeds 5 crores. So then 9A like that we don't have, previously we had, we don't have. GSTR 4 that is to be filed by a person opting for composition scheme. So whatever is there here, that only you need to remember, because that is only the applicable provision for your exam purpose as per law. Okay, due to that reason. Suppose if you want to write a note, you can write a note. If it is a descriptive question, you can write a note. For the financial year 2021-22, GSTR 9 is made optional if the turnover does not exceed 2 crores. Like that you can write. But as per law, if you ask me, the answer is you have to file GSTR 9. So next, with this we completed the returns chapter, and after returns, what will happen? Assessment. After returns, what will happen? Assessment will happen. So we will be filing our returns. After filing the returns, so the returns will be taken up for assessment. So there are different types of assessments. You can see, look into page number 107. Assessments, you can see, so total 5 assessments: self-assessment, provisional assessment, scrutiny assessment, best judgment assessment, and summary assessment. These are the 5 assessments. When self-assessment will be applicable? If you are able to compute how much tax you need to pay, that is known as self-assessment. When you are unable to compute the tax payable because of the value or because of the rate of GST, then we will be making application for provisional assessment. And whenever we file the self-assessment return, that returns will be taken up for scrutiny, and if there is any change in those returns filed, so then they will do the scrutiny, that is known as scrutiny assessment, and they will tell how much we need to pay. So that is scrutiny assessment. And suppose if you accept, you can pay that, otherwise they will proceed for certain consequences. Then next, best judgment assessment. Best judgment assessment is applicable in case of non-filers of return or an unregistered person liable to pay tax. Then summary assessment will be applicable if it is like a person has evaded tax and delay in passing assessment order, he may escape from payment of tax. This is just like income escaping assessment in income tax. So this summary assessment will be passed. So the section 59 is self-assessment, 60 is provisional assessment, 61 is scrutiny assessment, 62 and 63 is best judgment assessment because of 2 reasons: non-filers of return or unregistered person liable to pay tax, and 64 is summary assessment. In that self-assessment, you see, so section 59, what is that person, status of that person? He is a registered person, and who will do this assessment? By registered person only will do. Any notice and all not applicable here. And situation, when self-assessment, when a person can assess how much tax that he need to pay and he will furnish the return, that is known as self-assessment return. And what is the time limit for this assessment? The due date of filing return is the due date of assessment, due date of return. And officer to take permission, withdrawal, consequences, all these are not applicable here. So this is a normal return which we will file, and along with that we will do the computation. And then in case of provisional assessment, section 60, status of the person, he is a taxable person. So even a person who is liable to get registered but not got registered also can go for provisional assessment. So provisional assessment is not only for a registered person, that you need to remember for MCQ. So provisional assessment is not only for a registered person, provisional assessment is also for a taxable person, means a person liable to get registered but not got registered also can go for provisional assessment. And so who will do this provisional assessment? Proper officer. Any notice? No, because provisional assessment in GST is possible only when application is made by the registered person. But under customs, provisional assessment is possible if the application is made by the importer or exporter, or suo moto officer can initiate provisional assessment, where in customs. But in GST, suo moto proper officer cannot initiate provisional assessment. And situation where a taxable person is unable to determine the value or the rate of tax. And what is the time limit? the provisional assessment order should be passed within 90 days from the date of receipt of such request. So whenever we are filing provisional assessment application, from the time when we make application, within 90 days they need to pass the provisional assessment order. And final assessment order, from provisional assessment order to final assessment order, it should be done within 6 months, and it can be extended for a further period of 6 months, and it can be extended for a further period of 4 years. So 6 months is the statutory time limit, next 6 months is by ACDC, and next 4 years is by commissioner. Officers and all you don't have to remember, just the time limits you remember, that is 6 months plus 6 months plus 4 years, that is the time limit by which the final assessment order should be passed. And next, officer to take any permission, no need to take any permission, withdrawal of order, no. Now what happens upon finalization of the provisional assessment? Upon finalization, 3 things could happen. Final assessment amount is greater than provisional assessment amount. Now the differential tax will be payable. That differential tax will be payable along with interest. What is the rate of interest? 18% per annum. From when it should be computed? From the first date after due date of the month for which we went for provisional assessment, not from the first date after due date of the month in which provisional assessment order is given. So order may be given 90 days. So we will be going for provisional assessment for July month. The order will be given in August month, and thereafter somewhere in December it will be finalized. So then we need to take July month. For July month only we went for provisional assessment na. So for July month, what is the due date? Generally 20th or 22nd or 24th. GST 3B due date only pa. So 20th or 22nd or 24th, from that date, first date after that date till the date of payment. So means when you will pay, definitely after finalization of assessment you will pay till that time. But whenever you pay, even you can pay before finalization of assessment also. So whatever the case may be, up to the date you are making payment. But a very important point that we need to apply here is that in every provisional assessment interest computation, so there will be section 50 interest also that will be connected. There are 2 interest here, section 50 interest and section 60 interest. Here we are talking about section 60 interest. But what about section 50 interest, when that will arise? Now say for example, so I am reiterating the same, July 2022, we went for provisional assessment, and so we made application for provisional assessment, for the month of July 2022, and then the provisional assessment order is passed on say 15th of September 2022. Yes, we can, because 90 days is the time limit. So the provisional assessment order is passed on 15 September 2022. And what is the amount? The amount for which provisional assessment order is passed is for 10 lakhs, means we need to pay a GST of 10 lakhs. Then again final assessment order. The final assessment order is passed on so 25th of December 2022, because 6 months is the time limit. So they have passed in 25th December. So within 6 months itself they pass, and the final assessment amount is 15 lakhs. So now what everyone will do is that they will be computing the interest under section 60, but there is a hidden interest under section 50 that we will miss. Okay, what is that hidden interest under section 60? For July month, what is the time limit? What is the due date of payment? August 20th. But here on 15th September only we are getting the provisional assessment order. Means this 10 lakhs itself we are paying late. The 10 lakhs also we are paying late. So therefore, say if this 10 lakhs is paid on same date, it is paid, and this 15 lakhs is also paid on same date. Immediately we made the payment. How we can make the payment on the same date? So we can make the payment through DRC3. So through DRC3 we can make the payment, not necessary that we have to make the payment through 3B. So therefore, don't take always that assumption that next month 20th only we need to make the payment of tax. We can pay the tax on the same date also. So therefore, suppose if the question is silent, then there are 2 answers that are possible. That is, you can take the date of payment as the date of assessment order, but that much of vagueness will not be there. So they will be clearly giving the date on which it is paid. Okay. Otherwise, you can take both the assumptions. Either you can take next month 20th as the GSTR 3B due date as the date of payment, or the same date you can pay through DRC3. So here they paid it on the same date. Now, what will be the interest under section 50? Interest under section 50. Interest under section 50 will be computed on 10 lakhs. 10 lakhs into 18% into. So for July it will be 20th of August. So therefore in August you take 11 days, and in September you take 15 days. So 26 divided by 365. This is the interest under section 50. Whereas interest under section 60 is on the differential amount. What is the differential amount? 5 lakhs. 5 lakhs into 18% into, from when to when? So it will be calculated again from the first date after due date. What is the first date after due date? That is 20th August is the due date. So in August 11 days, and in September 30 days, August it will be 11 days, and September 30 days, October 31 days, November 30 days, and in December 25 days, because we are making the payment on the same day. So for 127 days, we need to compute the interest under section 60. So these are the two interests. So generally we will be computing this interest under section 60 and we will leave, but interest under section 50 also will arise in this case. Okay. So that is with respect to this. Liability under provisional assessment. So if positive, then pay the difference along with interest from the first date after due date till the date of payment. What if it is negative? Negative means what? That is, whenever the final assessment amount is less than the provisional assessment amount, then we will get a refund. To get that refund, what we need to do? So we need to make an application for refund. When we make an application for refund, that refund application is in RFD 1. So when we make an application for refund, within 60 days from the date when we made the refund application, they need to grant the refund. If they are not granting the refund within 60 days, from 61st day, interest will be computed at the rate of 6% per annum. Say this. If it is negative, then get refund plus interest at the rate of 6% per annum from 61st day till the date of refund. Okay. So 61st day from the date of application. Actually 61st day from the date of application. First we need to make application, not from the date of final assessment order. But in customs, refund is computed 3 months. Refund is computed in case of provisional assessment gets finalized 3 months after final assessment order. If they are not giving, so then the interest will be computed at the rate of 6%. So here GST also provisional assessment is there, customs also provisional assessment is there, and in both cases I am just discussing now itself so that you can remember this. That is, in case of GST provisional assessment, when you need to pay interest at the rate of 18% per annum. Under customs provisional assessment, when you need to pay the differential, you need to pay at the rate of 15% per annum, and here 18% per annum computed from the first date after due date of the month in which that provisional assessment we have made for. Whereas in case of customs, that 15% per annum from the first day of the month in which provisional assessment order is passed. So whenever they pass the provisional assessment order in that month first, suppose if the provisional assessment order is passed on 28th March, it is from 1st of March, okay, till the date of payment. So that is the difference between interest in case of provisional assessment in GST and provisional assessment in customs. Whereas refund interest also there is a difference. In case of refund on account of finalization of assessment in GST, it will be, so 61st day, 60 days, once we make application within 60 days they need to give refund, otherwise from 61st day interest will be computed at the rate of 6% per annum. Whereas in case of customs provisional assessment, so no need, like application and all is not there, so 3 months from the rate of finalization of assessment they need to give refund. If they are not giving 6% per annum from the third month, after 3 months, it will be computed, but both cases the interest rate is 6%. So remember, kindly remember these differences so that it will help you. Okay, then so we completed provisional assessment section 60, then scrutiny assessment section 61. So here scrutiny assessment is, first of all, scrutiny assessment will come into picture only when there is a self-assessed return file. For provisional assessment and all, scrutiny assessment not applicable. For self-assessment return file, so they will be taking up the return for scrutiny. So therefore, registered person, and who will do the scrutiny assessment? By proper officer. Will they give any notice? Yes. If there is any deficiency in the assessment done by the person, so then upon scrutinization they will be giving a notice, and suppose if that person accepts that notice and makes the payment of differential amount, he can pay. Otherwise, he can give a reply, and if department is satisfied with the reply, they will leave it. If the department is not satisfied with the reply, so they may do any one thing. What is that? Either they can conduct audit or they can do the recovery. Okay, either they can conduct audit or they can do the recovery or they can do the inspection. So total 4 options will be there. Number 1, so they can order for this departmental audit, section 65, or they can order for special audit, section 66. There are 2 audits in GST at present, that is department audit 65 and special audit 66. Any of these 2 audits can be audited, or they can do the inspection, search, etc. in the business premises, or if they have the evidence that this much of tax is evaded, they can initiate the demand and recovery under section 73 and 74. Notice they can give under 73, 74 and do the recovery. Okay, so that is what they can do. But what is the time limit within which the explanation to be given after notice within 30 days. Within 30 days, we need to give the explanation for that notice. Means in that 30 days, either we can accept and pay or we can give the reply to that notice. And whether a notice to be given, yes. And is there any time limit for this? No, they have not given any time limit for scrutiny assessment. But logically, this scrutiny assessment they need to complete before the time limit given under 73-74. What is 73-74 time limit? 73 is, that is, there are 5 cases: non-payment of tax, short payment of tax, wrong availment of ITC, wrong utilization of ITC, erroneous refund. Non-payment, short payment, wrong availment, wrong utilization, erroneous refund. On account of fraud, collusion, willful misstatement, suppression of facts, contravention with an intent to evade payment of tax, means extended period of limitation will be applicable and the demand and recovery will be under section 74. Mens rea, guilty mind is present, they have intention to evade. So therefore the demand and recovery will be under section 74. Suppose if it is other than fraud, collusion, etc., then in that case they don't have intention to evade but they have not paid the tax, then it will be 73, demand and recovery under section 73. So what is the time limit for passing order under section 73? 3 years from the due date of furnishing annual return. What is the time limit for passing order under section 74? 5 years. 5 years from the due date of furnishing annual return. So which means by the time they need to complete, otherwise they cannot give notice and pass the order. So therefore scrutiny assessment should logically be completed within the time limit under section 73-74. Then officer to take permission, no. Withdrawal of order, not applicable. So that is about scrutiny assessment. Then next, best judgment assessment. Best judgment assessment is applicable in case of section 62 and section 63. Section 62 is applicable in case of non-filers of return. Section 63 is applicable in case of an unregistered person but liable to pay tax. So the difference between section 62 and 63 is registered person and unregistered person. 62 is a registered person that has not filed returns. 63 is an unregistered person liable to pay tax. But both the assessments will be done. Best judgment assessment will be done by the proper officer. And opportunity of being heard. In case of section 62, already they gave a notice. That is under GSTR 3A, notice to return defaulters. So in returns chapter we have seen. So therefore that notice is given and 15 days they are waiting, then only they will pass an order. So separately a notice will not be given under this section because already a notice is given under section 46. Whereas in case of section 63 best judgment assessment, so they need to give a notice on that person under this section. Then what is the situation? So he has not filed the returns within 15 days from the notice, and in this case where a taxable person failed to obtain registration or registration has been cancelled but they are liable to pay tax. So registration, after cancellation of registration, suo motu by the proper officer. There are some cases where proper officer can cancel the registration of a person. In that case, that registered person should pay whatever taxes that are required to be filed, because one of the reason for cancellation of registration is non-filing of returns for the consecutive 6 months. So in that case they need to pay the taxes for those 6 months. So the assessment needs to be completed. For that purpose they can do a best judgment assessment. And what is the time limit within which it should be done? So like 74 time limit. 74 time limit. What is 74 time limit? 5 years from the due date of furnishing annual return. That is the time limit here. So what is the time limit by which best judgment assessment order should be completed? 5 years from the due date of furnishing annual return for that relevant financial year. That is the time limit for completion. And whether officer to take any previous permission not required. Withdrawal of order. In case of section 62 order, it can be withdrawn because 62 is best judgment assessment because of non-filing of returns based on the information available with the proper officer will proceed to do the assessment. But so that assessment may not be correct amount because proper officer would have taken whatever is the gross receipts in the bank account will be taken as a revenue of that person and might be computing the GST, but that may not be the correct amount. So therefore this person within 30 days can make a request for withdrawal of the best judgment assessment order and agree to file the returns and proceed for self-assessment. So is there a possibility of withdrawal of order under section 62? Yes, but 63 order cannot be withdrawn. 63 best judgment assessment order cannot be withdrawn. That is the difference, important point. And what is the time limit within which he need to request for the purpose of withdrawal? Within 30 days of the order. Within 30 days, he need to file the returns. What is the request here? Nothing but filing the returns. First of all, best judgment assessment order under section 62 is passed because that person has not filed returns. So therefore, if he files the returns within 30 days, then whatever best judgment assessment order that is passed will be withdrawn. Whereas, In case of best judgment assessment order under section 63, that is on account of unregistered person liable to pay tax, that order will not be withdrawn. Suppose if I am not satisfied with that order, what can I do? I should go for appeal. Okay. So on this order, appeals if such person not satisfied. If such person not satisfied, then that is about best judgment assessment. Then look into summary assessment, section 64. Summary assessment is done on the taxable person. So there are two assessments which are done on the taxable person: provisional assessment, summary assessment. There are two assessments that are done on the registered person, that is self-assessment, scrutiny assessment. There are two assessments that are done on the unregistered person. Only one, that is best judgment assessment, not two, only one, that is best judgment assessment under section 63. Okay. And so this proper officer will be doing summary assessment. Opportunity of being heard, no. There is only one assessment where without notice directly assessment order will be passed, that is summary assessment. That you need to remember. There is only one assessment where without passing summary, without giving any notice, directly an order will be passed, that is summary assessment order. And this summary assessment order, in which case if the proper officer has evidence that a person has incurred a liability, so he has evaded tax, and proper officer has sufficient grounds to believe, first he should have evidence that he has evaded, and he should have reasons to believe that, so delay in passing assessment order may adversely affect, means he may escape from payment of tax. In that case they will pass a summary assessment order, and any time limit, they have not given any time limit. And officer to take permission, yes. So while passing summary assessment order, as they are not giving any opportunity of being heard, so that's why they need to take previous approval of the officer, that is additional or joint commissioner approval is required. Withdrawal of order, yes, this order can be withdrawn, because that summary assessment order is just to collect the taxes if the person is escaping from tax, but that may not be the actual amount. So due to that reason, so if that person is making the, either he can pay the amount as per the order, or he can request the officer to withdraw the order, or officer also, if he feels that the order is erroneous, he can withdraw the order. So there are two orders which can be withdrawn. Two orders that can be withdrawn. What are the two orders that can be withdrawn? Best judgment assessment order under section 62 and summary assessment order under section 64. That is with respect to this assessment. We completed assessment. So after returns, what will happen? Assessment or audit. Either assessment will happen or audit can happen. So audit, that is based on the returns, they may identify that a person has not properly paying the taxes. Some reasonable doubts could be there, but they wanted to gather the evidence about that person. To gather the evidence, what is the route? Audit is one route. Is there any other route to gather the evidence? Yes. Search seizure is another route. So either they can do audit or they can do search and seizure. If they are doing the audit, so that audit, previously statutory audit was there, that is now omitted. So therefore voluntarily that person, like a professional conducting the audit, is omitted. So therefore either department can now conduct the audit or special audit can be conducted. So departmental audit will be conducted under section 65 and special audit will be under section 66. Who will be conducting the departmental audit? By department. And who will conduct the special audit? By CA or CMA. But that CA or CMA selected by the registered person or appointed by the officer. Appointed by the officer, not selected by the registered person. If registered person can select, then the chart accountant will listen to him. So but in case of special audit, so definitely the chart accountant will not listen to the client. Okay, because they have been appointed, nominated by the officer. And what is the scope? That is when the audit will be conducted. Department audit randomly. Whenever department feels like they want to conduct the audit, based on their mood swings, they can conduct. Whereas in case of special audit, so whenever they are having doubt about the truth and accuracy about the value and ITC. So truth and accuracy about the value and ITC. So then in that case, special audit will be conducted. Only two cases special audit, that is value ITC, value ITC. So two important chapters. Okay. So then time period for conducting the audit. What is the time period in which department can conduct the audit? That is, they should complete the audit. That is within 3 months, and it can be extended for a further period of 6 months. Sir, can the audit be conducted every year? Department audit be conducted every year? Yes. Previously in old indirect tax law and all there were time limits, but now there is no such time limits. Means every year also they can conduct the audit. Means 3 months, it can be extended for 6 months, and thereafter 3 months they go for a vacation and again they will come back. So then in case of special audit within 90 days, and it can be extended for a further period of 90 days. So same only in days it is given. So 3 months, that is 90 days. It can be extended for a further period of 3 months, that is 90 days. And audit report should be submitted. This is important. Departmental audit report will be submitted to both. That is registered person also they will submit, and to the officer, commissioner also they will submit. And the person will know what are all the identifications of the department. But special audit is like a surprise. So that is the registered person will not know whatever the report that the auditor is submitting. Okay. So it's not like bank audit. That is bonded labor will identify all the points, and finally bank manager sit with the principal and will remove all the points. Okay. But not like this. So therefore report in the jurisdictional ACR DC, and that is about audit report. Then expenses of audit. Who will bear the expenses of audit? So department only will bear the expenses for audit. Scope of audit, in case of departmental audit they can check everything, all books of accounts and records maintained by the person during the audit. Whereas in case of special audit, as the audit is restricted only to value and ITC, so they need to audit the records only pertaining to value and ITC, the relevant invoices, purchase invoices, GSTR 2B, 3B, whatever they have filed, that only they can verify. Notice for audit. So 15 working days prior notice to be given before commencement of audit in case of departmental audit. So not maintain any books of accounts, then you can ask the bonded labor to do. So 15 working days prior to the commencement of audit. Suppose in case of special audit, no notice, which means like surprise, they will come and knock the door. So therefore that is special audit. Then what if already is completed? Let it be. Again it will be done. What is your problem? We will do again and again. So audit under this section is mandatory. Can the audit be conducted for part of year also by department? Yes. Sir, I started business last month only, sir. Okay, 2 months we will conduct audit. So therefore they can conduct for part of a year also. Not necessary that only for a financial year they need to conduct. So this is about audit. So first we file returns and assessment is over, or if they want to gather the evidence, they will be doing the audit. And if they want to gather the evidence, one more idea is also there for them, that is search and seizure. Take that search and seizure. So search, seizure, page number 114, segment 15, seizure and confiscation under GST. Here in this seizure, so there are like I'm reducing the speed because lot of amendments are there in this. Definitely this will be tested. Okay, if you are not getting question on this search and seizure, you return the paper and come. That is not your indirect tax paper, some other exam you went for. Okay, so situation 1 and situation 2. There are two situations where there will be seizure order. Situation number 1, they may inspect the business premises of the taxable person or transporter or warehouse keeper. And situation 2, they may inspect the goods which are in transit. A conveyance which is carrying the goods in transit, they can intercept and inspect. So in situation 1, the inspection is in the place of business, whereas in situation 2, the inspection will be in transit. Okay, even though situation 1 says the inspection is in the place of business, but as per section 67, they use the word any other premises. Any other premises means even the residential premises of that person can also be inspected. Not necessary that it is business premises. So because the law uses the word any other premises where the business is ordinarily carried out. So which means, suppose if he is having anything at his house, lot of traders will be keeping some stock at their house also. So therefore in that case, so their house also they can do the inspection. That is the point here. Okay, then whereas in case of situation 2, the inspection will be during the transit. So a conveyance which is carrying the goods, that will be intercepted and that will be inspected. So here inspection and search both are synonyms only, even though there is a difference between inspection and search in reality, but this can be interchangeably used. Either you can use the word inspection or you can use the word search also. Now I am completing first the situation 1. In situation 1, what will happen? So they are coming to the business premises. They are identifying the goods which are liable for confiscation. So now if any unaccounted goods are found, such goods are liable for confiscation and they will pass a seizure order. that seizure order is for seizure of goods or documents that will be passed. That seizure order is for seizure of goods or documents, and this seizure order, when they are passing, there are two options that they are giving to that person. So first, what is seizure? Taking over the possession, that is known as seizure, and they do first search, thereafter seizure, and after seizure order, two options are given to that person. That person can either pay the tax and get the goods released, and he need to pay the tax and penalty to get the goods released. So both should be paid. Tax should be paid and penalty also should be paid. Pay applicable tax and penalty under section 122 subsection 1. What is the penalty under section 122 subsection 1? So that is 100% of tax. 100% of tax or 10,000, whichever is higher. That is the penalty under section 120 subsection 1. So 100% of tax or 10,000, whichever is higher, will be taken as the penalty. And what will happen if we pay the tax and penalty? The goods shall be released and all the proceedings in respect shall be deemed to be concluded. So this is option 1. That is, they have identified some goods. What are the goods that are liable for confiscation? Unaccounted goods. Underline that. Unaccounted goods are liable for confiscation. Unaccounted goods means what? Unaccounted goods means we have to maintain necessary records, accounts and records. If we are not maintaining necessary accounts and records, or if we are maintaining accounts and records but these goods are not present in that accounts and records, then these goods are known as unaccounted goods. So in case of unaccounted goods, that goods are liable for confiscation. So now, actually you are not selling those goods, you have not accounted those goods, that's it. But even then you need to pay the tax and penalty if you want that goods. No, I don't want to pay the tax now because I am not selling, I have not accounted only. Then okay, you have another option. What is that another option? Execute a bond. Execute a bond and security. We will release the goods provisionally. Whenever you sell the goods, at the time you pay the tax along with penalty. So which means this order for release of goods is final order or the provisional order? Only provisional order, which means we need to pay the tax and penalty in future. So we don't have to pay now. But now we are executing a bond and giving a security. What if we are not paying the penalty in future? They have already bond and security. Using that bond, they will recover the money from you. Okay. So therefore, option 2, furnish security and get provisional release. But in option 1, final release and get it released unconditionally. Option 1 is unconditional release, but option 2 is provisional release, because here you are executing only the bond, you are not giving any tax or penalty, and you will pay tax and penalty in future, then the bond will be released. Both options not exercised. Both options not exercised. Then as per section 130, a confiscation order will be passed. That confiscation means transfer of possession. Search to inspect the premises, seizure to take over the possession, confiscation to take over the ownership. Okay. Seizure, first search or inspection to identify the unaccounted goods. Number 2, seizure to take the possession, but ownership is still with that person only. And thereafter confiscation to take the ownership also. Once confiscation order is passed, still they are giving one option, that is redemption option. So that is, they will pass a confiscation order and they will be giving a redemption option. Option to redeem goods by paying fine within 3 months. Suppose if you pay that fine within 3 months, so then no need to pay, that is the goods will be released, which means what is the extra that we are paying? Tax already we have, penalty already we are paying, now extra fine. Suppose if you don't want to pay this redemption fine, you should have exercised any of that first option and second option and you should have got your goods. As you are delaying, they passed a confiscation order, now you need to pay an extra one more fine called as redemption fine. So this redemption fine should be paid within 3 months, and now if you pay tax, penalty and this redemption fine, the goods will be released. But what is the time limit that you have? From the date when they pass confiscation order, we have time limit of 3 months. Within that 3 months, we need to make payment of that fine. What will happen if we are not paying that fine also? So then that ownership already transferred to the department, they will dispose of the goods and whatever money they have got, they will retain and they will not be returning it to that person. So that is this. Maximum redemption fine equals to, how much is the maximum redemption fine that they can levy? Market value of the goods minus tax chargeable thereon. So whatever is the market value of such goods minus tax payable thereon, that will be taken as the maximum redemption fine. Suppose if there are any unaccounted goods that were present in the vehicle, in the business premises, then that vehicle also will be confiscated. There is a vehicle inside the business premises. In that vehicle, we were loading the goods and they have come to the business premises and they have identified the unaccounted goods inside the vehicle. That vehicle also they can confiscate. Okay, means that vehicle also they can seize and that vehicle also they can confiscate. And if you want that vehicle to be released, so whatever is the tax payable on the goods transported thereon, that is the redemption fine in case of conveyance. Okay, this is about section 67 and section 130. These are the two sections, section 67 and section 130. So that is what we have discussed so far. In this, no amendments. In this, there is no amendments. Up to this, whatever we have discussed, there is no amendments. Now, there is amendments in situation 2. So that amendments in situation 2, that is section 68. So first of all, there are some corrections here, because by the time I released the That's It book, so this was not proper because they have not given that circular and all. So later on they gave a circular. So few corrections are there here. Few corrections are there here. Extremely sorry. So that's why I am just doing these corrections now itself. Situation 2, section 68 says the proper officer is having power to intercept the vehicle which is in the transit. So a vehicle which is in the transit, they can intercept that vehicle. And if transporter was found transporting or storing such goods which are removed in contravention of the provisions of the act, means if the goods are transported without e-way bill or with wrong e-way bill or with wrong invoice or without invoice, etc., both goods and conveyance is liable for confiscation. And they can pass a seizure order for goods and conveyance. They can pass a seizure order for goods and conveyance. Up to this, no change. Okay, they can pass a seizure order for goods and conveyance. That is given in section 68 with section 129. Now, section 130 is now dealing with section 129. 129 itself is now a separate section, and previously 129 and 130 was connected. If you are not paying the tax and penalty under 129, they will do the confiscation order, like that it was there. But now section 129 is dealing with section 130. Okay, and what is the penalty payable? Now no need to pay tax. No need to pay tax under situation 2. In situation 1 we were paying both tax and penalty, but in situation 2 no need to pay tax. Tax no need to pay. Why? Because these are goods transported without e-way bill, without invoice. No need to pay tax. Then when you will pay tax? Whenever you sell, at the time you pay tax. Now we identified. So which means it will become automatically accounted. So you have to report it in GSTR 3B and GSTR 1 and you pay the tax. Okay. But now at this moment you pay penalty. You pay penalty. Bond, no bond, that is removed. So this is removed. Option 2 is removed. Option 2 is removed. There is no bond now. There is no bond. There is no bond. So please make this correction. There is no bond. Okay. But in case of section 67, there is bond. In case of 68, there is no bond. Which means, sir, only option 1. Only option 1, there is no option 2, only option 1 means pay the penalty and get the goods released. Okay, so pay the penalty and get the goods released. What is that we need to do? First, you will be given a notice. First, you will be given a notice for levying the penalty. Notice for levying the penalty. And how many days notice? 7 days notice. You will be given a 7 days notice. First they identified the conveyance which is in transit. They will give a notice for within 7 days for levying penalty. And within 7 days after service of notice, they will pass a seizure order. Got it? Within 7 days after notice. Previously it was 14 days. Previously within 14 days we need to pay, like that it was there. Now it is simple. First they will identify the conveyance. And after identifying the conveyance, they will pass a seizure order. They will pass a seizure order. Please concentrate. They will pass a seizure order. Then they will be giving a notice for levying penalty. Now, after 7 days from the notice, that is not called as seizure order, that is penalty order. Already seizure order is passed. Then why again it is called as seizure order? So this is not seizure order. This is called as what, pa? Penalty order. This is called as penalty order. That is the correction. So two corrections you have made so far. Correction number 1, there is no bond. Correction number 2, so that seizure order already passed. So therefore it is penalty order. So can you tell me the steps first? So inspection during transit, correct? Inspection during transit. After inspection during transit, what is next? Seizure order. So the power to inspect is given in section 68 and seizure order will be passed. For what? If they identify the goods and conveyance. Seizure order is for both goods plus conveyance. Seizure order is for both goods and conveyance. Thereafter, next what will happen? So after passing seizure order, there will be notice for penalty. Notice for penalty. And that notice for penalty should be given within 7 days from seizure order. Got it? Within 7 days from seizure order, they need to give notice for penalty. And again, for levying this penalty, they need to pass a penalty order. That penalty order should be passed within 7 days. Within 7 days, they need to pass a penalty order. Now, they will give 15 days time limit to you. 15 days time limit to you to pay the penalty. Otherwise, disposal of goods. Okay. So previously what has happened? If you are not making the tax and penalty, they used to pass a confiscation order. After confiscation order, only disposal. But now they have reduced that speed. Okay. That is in the sense they have increased the speed of recovery. First notice they are giving, then order, penalty order they are passing. 15 days only time limit. If you are not paying that penalty, then disposal of goods. So this is the order that you need to remember. That is, this is the sequence of the transaction. First inspection, then seizure order for goods and conveyance, notice for penalty within 7 days of seizure order. Within 7 days, penalty order will be passed. Within 15 days, you need to make the payment. Upon payment of penalty within 15 days of receipt of order, all proceedings in this respect shall be deemed to be concluded. What will happen if you are not paying within 15 days? Then disposal will happen. That is given here in Rule 144A. Rule 144A, where a person transporting any goods or the owner of such goods fails to pay the amount of penalty under section 129 within 15 days, the proper officer shall proceed for sale or disposal of the goods or conveyance through the process of auction. Whereas in case of perishable goods, directly also they can do disposal. In case of perishable goods, this 15 days time limit is also not there. They can reduce that. The set period of 15 days may be reduced if goods are perishable or hazardous in nature or likely to depreciate in value. Got it? So that 15 days is the general time limit, and in case of perishable goods, they can reduce the time limit of 15 days. So these are the amendments. Next. Now we will come to the crucial point, penalty. What is that penalty? So far what we have seen is the procedure. Now penalty. What is the penalty payable? Because they are asking us to pay the penalty na. This penalty order will be section 129 penalty order. This section 129 penalty order. What is that section 129 penalty order? How much penalty is payable? Now there is two divisions. Owner of the goods come forward, owner of the goods does not come forward. This no change. Previously also we had. Owner of the goods come forward means the owner of those goods will come forward. Owner of the goods not come forward means the transporter is coming forward. If owner of the goods is coming forward to claim release, the penalty will be 200% of the tax payable. Okay. So no need to pay tax, but penalty will be 200% of tax. Okay. Sir, suppose if the penalty payable, if the goods value, see this, goods value is 10 lakhs. Goods value is 10 lakhs. And GST, that is CGST at 9%, SGST at 9%. what will be the tax? That is 90,000, 90,000. Now tell me what is the penalty payable if owner of the goods is coming forward. 3,60,000. What is the penalty payable under CGST Act? 1,80,000. Understood. So when they are asking in MCQ what is the penalty payable under CGST Act, you take the CGST component, multiply it 200%. That is 1,80,000. Suppose if they are asking what is the penalty payable under section 129, they stopped. So then it will be 3,60,000. Whatever is the tax, total tax into 200%. Is it clear? So therefore, penalty payable, penalty under section 129, so of CGST Act. So usually they will be asking CGST Act only. So then we need to take the CGST penalty, that is 90,000 into 200%, that is 1,80,000. When if the owner of goods come forward. So this is penalty payable for release of goods. Previously if you pay the penalty, both goods and conveyance was released. But now you need to pay separate penalty for goods, separate penalty for conveyance. Okay. So this is the penalty payable for release of goods. Taxable goods this much. What if it is exempted goods? 2% of the value of goods or 25,000, whichever is lower, there is no change in that, the same point only previously also. Sir, why in case of exempted goods there will be seizure? If the exempted goods are transported without bill of supply, so that is also an offence, because bill of supply used to be there for exempted goods. For taxable goods it is tax invoice, whereas in case of exempted goods it is bill of supply. For exempted goods also, if the documents is not there, they can levy, but the maximum penalty is only 25,000. 2% of value of goods or 25,000, whichever is lower, means like a general penalty. The general penalty under GST is up to 25,000. So that 25,000 is the penalty that is applicable here. Then for release of conveyance, what is the penalty? How much is the penalty payable for goods? What is the penalty payable for goods? 200% of tax or 1 lakh, whichever is lower. So maximum penalty for release of conveyance is only 1 lakh. So maximum penalty, previously for release of conveyance, we had a redemption fine, tax payable on such goods. If the tax payable on such goods was some 40 lakhs, that person used to say, sir, you take the lorry, you keep, sir, I don't need. Because why, who will pay 40 lakhs to get the lorry? So therefore that's why they changed this, that is 200% of the tax or 1 lakh, whichever is lower. So therefore the maximum penalty will be 1 lakh. When the owner of the goods is not coming forward to claim release, owner is not coming forward means then who is coming forward to claim release? Transporter is coming forward. So for release of goods, what is the penalty? 50% of value of goods. Actually law uses the word 200% of tax or 50% of value, whichever is higher. Which is higher? You see this, 200% of tax. 200% of tax, that is 1,80,000. Yeah? I am talking about CGST provisions. 200% of value. Oh, here. Sorry. 200% of tax. So third correction, 200% of tax or 1 lakh, whichever is lower. Third correction. First correction is that no bond. Second correction is this seizure order, that seizure should be changed to penalty, and the third correction is penalty equals to 200% of tax. Fine. So see this, the law says 200% of tax or 50% of value, whichever is higher. 200% of tax 1,80,000, 50% of value, whichever is higher. Okay, then why always it is the same? Always it will be the same, because 200, what is the maximum rate of GST? CGST 14 into 200%, 28 or 50%, whichever is higher is always 50%. Okay, so maybe the provision who created, he might be high on weed, so therefore penalty is 50% of value of goods. Okay, and that is the conclusion. And then if it is exempted goods, 5% of value of goods or 25,000, whichever is lower. So there it is 2% or 25,000. Here it is 5% or 25,000, whichever is lower. And sir, when it is IGST, suppose if the penalty is payable under IGST, then the penalty will be 100% of value of goods. Yes, 50% of value CGST purpose. This is the penalty under CGST. Then 50% of the value is the penalty under SGST. Then IGST it will be 100% penalty, 100% of the value of the goods. You have to pay as penalty. Then only the goods will be released. But that person will say, you keep that goods, you celebrate a festival, I don't need that goods. Because after paying the penalty, again we need to pay tax also. Who will pay tax as well as penalty on that goods? So 50% of the value. Sir, why in case of transporter they kept a higher penalty? In order to bring the real culprit, owner of the goods. So transporter will say, go to hell, why should I pay 50% of the value? I will not pay. So then the owner of the goods will come forward. Mainly for that reason only they made a penalty like this. Then exempted goods, 5% of value of goods or 25,000, whichever is lower. And here what is the penalty for release of conveyance? So same, whatever is the penalty payable for release of goods, whatever is the penalty payable for release of goods, or 1 lakh, whichever is lower. What is the penalty payable for release of goods? If owner of goods not coming forward, 50% of value. So that 50% of value or 1 lakh, whichever is lower. Understood pa? So for always release of conveyance, what is the penalty? Release of conveyance, whatever is the penalty for release of goods, either 200% of tax or 50% of the value, depending upon who come forward, or 1 lakh, whichever is lower. So therefore, what is the maximum penalty for release of conveyance? 1 lakh. If you pay this penalty, the goods will be released. Otherwise, they will dispose of the goods. Now, the important point is the difference between this disposal versus disposal under confiscation. Listen, listen. There are two disposals in GST law. One is disposal under the section 129. Under 129, if the penalty you are not paying within 15 days, they will dispose it off. Now, what they will do after disposal? The balance of the sale proceeds, the balance amount shall be credited to the electronic cash ledger of the owner of goods or conveyance if they are registered, else credited to their bank account. But under confiscation, the balance, if any, will not be given to the owner, because in confiscation the ownership is already transferred. That is the difference. Got it? Previously, confiscation was the only way. Now they are telling you have to pay penalty. If you are not paying penalty, okay, don't pay. We will dispose of the goods, we will take that penalty, and we will take whatever the charges on account of disposal, and balance we will give it to you. Balance we will give it to you. Balance amount shall be credited to the electronic cash ledger of the owner of the goods or conveyance if they are registered, otherwise it will be credited to their bank account. But see that fourth point, a very interesting point. If the balance of the sale proceeds cannot be so paid within 6 months from the date of sale, why sir they cannot pay? Because one lorry came, the driver saw the officer, he jumped and ran away. Now in that case, department don't know who is the owner of the goods, so therefore they will not be able to identify to whom they need to give. Disposal will happen. Seizure order passed, notice given, notice to whom it will be given. Whichever address is there, they will give. That vehicle address will be there, that person they will give. And no one is coming. So then they will pass a penalty order, disposal they will do, and thereafter whatever balance proceeds within 6 months, that person can come and claim. If they are not at all returning, so then it shall be deposited in consumer welfare fund. Okay, then. So for what purpose it will be used? The disposal amount will be first adjusted towards administrative cost and apportioned against the amount to be recovered or to the payment of penalty. So this is the difference between this disposal on account of section 129 versus disposal on account of section 130. Now here you need to make some corrections in 130, because as 130 is now delinked. 130 is now delinked. So you just write down here section 129 delinked, section 129 delinked with section 130. And next, tax and penalty payable. So this under 129 you remove. Tax and penalty payable along with redemption fine. If option not opted, confiscated goods shall be disposed of. Whether they will give any balance to the person? Balance not returned to, balance not returned. So why not returned? Fully they will be keeping it, because the ownership already transferred. Then this, however, total of penalty and redemption fine cannot be less than penalty leviable under 129 is omitted. Because as 129 is now or disconnected to 130, wherever the references of 129 that comes in 130 is now omitted. Remaining is there. So total 4 corrections pa. Again I am repeating. First correction is this, seizure order to penalty order, and second correction is for release of conveyance 200% of tax or 1 lakh, whichever is lower, and next correction is that this bond is not there, and next section 129 dealing with 130 in that, so wherever 129 references come in this, so that needs to be omitted. Okay, so with this we completed search, seizure and confiscation. So we'll take a break. 10 minutes enough? Okay, no? 10 minutes and thereafter we will continue. Okay, we'll start. So after completing this search, seizure, confiscation, the next area is offences and penalties. As there is a connection for penalties, so we'll complete all the penalties. Already we completed the penalty under section 129. So the remaining penalties also we will see. So penalty under section 122, 123, 124, 125. These are the overall penalties that we have under GST apart from that 129 penalty. So section 122 subsection 1 says that there are some list of offences. So that list of offences I have just kept it under bio discredits TFT. So what is that bio discredits TFT? B for books of accounts default. Books of accounts default means not maintaining. You can see in the next page, not maintaining books of accounts or maintaining false books of accounts or faking the books of accounts. Then I for invoice default. Invoice default means supply without invoice or invoice without supply or supply with incorrect invoice. Then O, obstructing an officer from doing duty. An officer is coming for inspection and you hate him. So that is obstructing an officer from doing duty. Dealing in goods liable for confiscation. That is goods that is are liable for confiscation means unaccounted goods or goods without invoices, etc. So those goods you are dealing with. Dealing with means what? Dealing with means you are storing those goods or you are selling those goods or you are buying those goods. So then it will be coming. But transporting those goods will not come under this offence. That will come under transport related default T. Last point it will come. So that is all transport related default. Transport without valid documents will come under transport default. Then bio dis DI in IT ISD default. You are not supposed to distribute the credit, but you distributed the credit. Then supply with GSTN of another person. So some other person GSTN you have noted down and you are giving invoice in his name. Okay. So and you kept the money in your pocket. That is supply with GSTN of another person. Collected tax not deposited within 3 months. Collected amount as tax not deposited within 3 months. The difference here is collected tax, collected amount as tax. Collected tax means you are supposed to collect tax. You collected it, but you did not pay. Whereas collected amount as tax means you are not supposed to collect tax. You are making exempted supplies, but on that you are collecting. You are required to collect 5%, but you collected 12%. Or you are unregistered person, you are collecting. So that is known as collected an amount as tax. And that is not paid within 3 months. Then credit CR, R for registration default. In registration default, you are required to get registration, but you have not obtained, or registration obtained by fraud, or you need to give amendment to the registration. That is, whenever there is a change in name, change in address, etc., you need to file an amendment application, but you did not do. That is also an offence. E for erroneous refund. You are not supposed to get the refund, but you got the refund. That is erroneous refund. Then disposal of goods while detention or seizure is operational. So detention or seizure is operational means the goods are seized. When the goods are seized, the possession is with the department, and when the department officers are sleeping at the night, you went, you opened the door and you took the goods and you came out. So that is known as disposal of goods while detention or seizure is operational. Then ITC default. ITC default means you are not supposed to take the credit, but you took the credit. Then tampering with material evidence. Tampering with material evidence means department has got some evidence. Suppose a person is writing all the supplies without invoice in one small pocket book and he kept it. That pocket book department has identified. So now you are asking, sir, show me that book. You are taking, you are tearing the page and swallowing. So that is known as tampering material evidence. Okay. So then suppression of turnover. Suppression of turnover means even though you crossed 20 lakhs or 40 lakhs threshold limit, you are trying to reduce it so that you are not required to get registered. That is suppression of turnover. Then TDS or TCS default. So tax deducted at source and tax collected at source, you need to deduct and remit, but you have not deducted, or you deducted but you have not remitted. That is TDS, TCS default. Failure to furnish information or furnishing false information or document. That is, they are asking to submit some information, but you did not submit. So these are all the offences that leads to penalty under 122 subsection 1. Now, the first area that we are going to discuss is what are the offences that leads to penalties. Second, what are the offences that leads to imprisonment. Third, what are the offences that leads to arrest. And then what are the offences so that will have compounding of offences. Okay, then cognizable, non-cognizable, like that in order we are discussing. First we are discussing what are the offences that leads to penalties. First offences 122 subsection 1. What is the list of offences? Bio discredits TFT. B for books of accounts default. I for invoice default. O for obstructing an officer from doing duty. D for disposal, that is dealing in goods liable for confiscation. I for input service distributor default. S for supply with GST of some other person. C for collected tax not paid within 3 months or collected amount as tax not paid within 3 months. And R for registration default. E for erroneous refund. D for disposal of goods while detention or seizure is operational. I for ITC default. T tampering material evidence. Yes, suppression of turnover. TFT TDS TCS default, failure to supply information and transport related default. Now what you need to do is that when you see an offence, you need to run through whether it is covered in this list. If it is covered in this list, then the penalty under 122 subsection 1 will be 10,000 rupees or tax or ITC involved, whichever is higher. So whatever is the tax involved or ITC or TDS or TCS or refund, whatever is the amount involved in that offence, or 10,000, whichever is higher. This is the penalty payable under CGST Act. The same penalty will be payable under SGST Act also. For example, if it is say 9,000 rupees is the CGST, 9,000 CGST, 9,000 SGST, 18,000 is the IGST. Now what we will do, 18,000 rupees into 100%, 18,000 or 10,000, whichever is higher, 18,000 we will write as answer. But it is wrong. Why it is wrong? Because we should never do the computation like that. Even though it is IGST Act, you need to do the computation separately under CGST, separately under SGST. What is the computation under CGST? That is 100% of the tax, that is 9,000 or 10,000, whichever is higher, 10,000. And SGST 10,000, so the answer will be 20,000. Then, so 122 subsection 1A, 122 subsection 1A is on the person who is beneficiary of invoice default, ITC default or ISD default. I will come to 122 subsection 1A little later. So look into 122 subsection 3. Offences where the person is not directly involved in the offence, means he is not the main character, supporting artist. Okay. So on main character it will be 122 subsection 1. On supporting artist it will be 122 subsection 3. For example, I am making supply to you without invoice. You are unregistered person. So now, so on me the penalty will be under 122 subsection 1. That is 100% of the tax or 10,000, whichever is higher. On you, you have accepted the goods without invoice, means you are also a culprit, not only me. So therefore on you the penalty will be 122 subsection 3, because you are not a registered person. If you are a registered person, on you also penalty will be 122 subsection 1. Which offence? ITC. On me it will be 122 subsection 1. And on you, because you have not taken any ITC or unregistered person, there is no default under 122 subsection 1, but you are party to the offence. Because of you only, I could make the offence. So therefore, on you the penalty will be 122 subsection 3. What is that penalty? 25,000, up to 25,000. That is the penalty here. Offences where the person is not directly involved in any evasion, but may be party to evasion, or summons were issued to a person and he did not appear before the officer. Say one driver who transported the goods without valid documents, he said that my owner only asked me to do that, and he was asked to come before the court, because that leads to imprisonment. So he was asked to come before the court to give the evidence, but he is not coming to the court. So on him, because summons were issued but he did not come, so therefore the penalty will be up to 25,000 rupees. So we studied two penalties. 122 subsection 1, bio discredits TFT, penalty will be 100% of the tax or 10,000, whichever is higher. Whereas 122 subsection 3, that is on the supporting character who is not a main party to the offence, and it is not covered under 122 subsection 1, but because of that person, so chartered accountants, then even this company secretaries of the company or accountants of the company, directors of the company, all them will be covered under 122 subsection 3, because they are party to the offence, and the penalty will be up to 25,000 under CGST Act. Now we are coming back to 122 subsection 1A. What has happened? Say for example, I created some 10 fake registrations. These 10 fake registrations, I have created by taking the Aadhaar card of some 10 people. So my investment is only 1 lakh rupees. 10,000 rupees I will give. So 10,000 rupees if I give, they will give their kidney also. So therefore they just gave their Aadhaar card only. So using that Aadhaar card, I have opened the 10 different registrations. Then I approached various traders. You want any ITC? Yes, I want ITC because they need to adjust with their liability. So therefore what I am doing, I am filing GSTR1 in these 10 registrations and I am giving the invoices to those people. I have not made any supply of goods, but I just created the invoices to those traders and those traders took the credit and say I have created a liability of 5 crores in these 10 registrations. So those traders have taken 5 crores of credit and I am asking them to give some 20%. So 20% of 5 crores is what? Somewhere like 1 crore I am taking. I am not taking much, just 1 crore only I have taken. And now in this case, the penalty on these 10 registrations will be 122 subsection 1. Which case? Invoice default. And the penalty on the traders, recipients who took the ITC is also 122 subsection 1, ITC default. On me, no penalty. How? Even if penalty is there, it will be 122 subsection 3. I will give 25,000. Already I invested 1 lakh. I will give 25,000 and I will go to Mauritius. Sorry, sir, no. And I will go to there. So, therefore, that can be done. And due to that reason, so what they brought in 122 subsection 1A. What does 122 subsection 1A says? It says that the person who is party to the offence, that is at his instance only the offence is happening. He is not a party, at his instance. So if I am not there, this offence will not happen. So I am the mastermind behind these offences. Catch that mastermind. So on that person, the penalty will be how much? Not the money I earned. How much I got? 1 crore. But I have to pay 5 crores. 5, 122 subsection 1. 5 crores, 120 subsection 1 on the recipient. On me also 5. So 5 crores. You understood or not? 5 like that. Okay. So see this 122 subsection 1A. Person who is beneficiary of invoice default, ITC default or ISD default. Beneficiary, the one who enjoys the benefit. That is like in Mumbai, 2 bonded laborers were caught in this offence. Mainly for them only it is created. So because they were harassed by the principal, so they did not sign form and all properly. So these 2 article students, what they did, so they identified too much intelligent, basically article students are. So they created these offences and enjoyed some 500 crores, okay. 500 crores they have transferred ITC this way, fake invoices for them only. So therefore this will be attributable to them only, credits goes to them. And 122 subsection 1A, so what will be the penalty? The penalty is not whatever they earned. The penalty is how much ever is the tax evaded or ITC availed or passed on. That is with respect to 122 subsection 1A. Then 122 subsection 2. 122 subsection 2 penalty is in case of 73-74. That is non-payment of tax, short payment of tax, wrong availment of ITC, wrong utilization of ITC or erroneous refund. 5 cases are there na. In those 5 cases, so 73 means other than fraud, 74 fraud. What will be the penalty in case of 73? 10% of the tax or ITC or refund or 10,000 whichever is higher. What is the penalty under 74? Just like 122 subsection 1 penalty. 122 subsection 1 penalty is what? 100% of the tax or ITC or refund or 10,000 whichever is higher. Okay. So therefore, this 122 subsection 2 is not an independent section. This 122 subsection 2 comes into the picture only when there is recovery under section 73-74. If 73-74 not there, this penalty 122 subsection 2 will not come. So therefore, 122 subsection 1 also we have some cases. Refund is there, erroneous refund is there in 122 subsection 1 also. 122 subsection 2 also is on account of erroneous refund. Non-payment of tax, short payment of tax, wrong availment of ITC, wrong utilization of ITC, erroneous refund. These offences are there even in 122 subsection 1. So 122 subsection 1 and 122 subsection 2 are mutually exclusive. Which means whenever recovery is initiated under 122 subsection 2, so recovery under section 73 or 74, then only 122 subsection 2 will come. And suppose if it is 122 subsection 1, if there is no recovery under no recovery under section 73 or 74, but only penalty they want to levy. In that case, it will be 122 subsection 1, or recovery under any other section. Any other section means through best judgment assessment order or summary assessment order or seizure order, any order, they will be able to recover. Na? In that case, the penalty will be 122 subsection 1. That is the difference. Then next, 123. 123 is applicable in case when an information written is not filed. So in 122, we have 4 subsections that we completed. And 123 is coming into picture in case information written not filed within 90 days from the date of notice. That you need to remember. As per section 150, a person to whom information written is served upon is required to file the information. For example, a bank manager is asked to give the bank statement of a particular registered person, and if the bank manager is not giving the data within 90 days from the date when notice is issued to the bank manager, in that case, the penalty will be under section 123, and the penalty will be 100 rupees per day subject to maximum 5,000 rupees. That is 123. So 123 is connected to 150 information written. So 150, so information can be obtained from any person by the GST department. So it can be obtained from bank manager or a stock exchange, or they can get it from electricity department. Anywhere they will be able to get the information. So they are asking information, that person, including a chartered accountant, cost accountant, company secretary, everyone has to share the information. Suppose if they are not sharing the information, then in that case a notice will be served, and within 90 days if the information is not submitted after notice, then the penalty will be from 91st day, that is 100 rupees per day subject to maximum 5,000 rupees. Whereas in case of 124, 124 will come into the picture whenever information under 151 is not furnished. What is information under 151? Both are informations only, but what is the difference? In case of 150, it is about a specific person, that is information about a registered person. Whereas under 151, it is about the data. Data in the sense, suppose if the same bank manager is asked by the department, I want the report of all the people whose gross receipts in the year exceeds 40 lakhs. So now that is known as data. So that data has to be submitted under 151. So 150 is about a particular person. 151 is a filter. Based on a criteria, I will get it the data. So this data not given within the time stipulated. Then in that case, for normal cases means first time, fresher, okay, up to 10,000 rupees will be the penalty. Continuing, so he is like senior, okay, continuing offence, already he did not do and again asked, again he is not doing, then it will be 100 rupees per day subject to maximum 25,000, okay. First time offence up to 10,000, subsequent offence 100 rupees per day subject to maximum 25,000. So that is with respect to 151. 151 empowers the jurisdictional commissioner to call for information from any person relating to any matter dealt with in connection with the act. But 150 information is basically information about a person. Information about a person. Whereas 151 is information based on a criteria. Information based on a criteria. Information based on a criteria. Then section 152 is there, which is amended now, which says that whatever information that is obtained under 150 and 151 cannot be just like that used to pass an order before giving an opportunity of being heard. Suppose, for example, there is one person, that person is having a gross receipts of 40 lakhs. So immediately the data is obtained from the bank manager by the officer. So 40 lakhs. And this person's income is service income. They identified that it is not sale of goods, it is service income. So immediately they cannot proceed to order, because 20 lakhs if he crosses, he need to register and he need to pay. Now this evidence, that is whatever bank manager gave the account statement, cannot be taken as the evidence for the purpose of recovery, because that account 40 lakhs might be credited, maybe some loan also he would have taken, some housing loan would have been taken, that money might have been credited here. So therefore some capital receipts could be there. How can you say that that will be his turnover? So therefore an opportunity of being heard should be given, and then only you need to proceed against passing an order based on that information. That is this. So information obtained under 150, 151 cannot be used without giving opportunity of being heard to the person concerned. Then section 125 is general penalty part, that is for whatever offence which is not covered under above sections. Then the general penalty will be applicable under section 125. That will be up to 25,000 rupees under CGST. So far whatever we have seen, all these penalties are under CGST only, but not under IGST, which means the same penalty is payable even under SGST. Then 126, 122, 123, 124, 125. These are the 4 sections related to penalties. And section 126, general disciplines relating to penalty. What does it say? If there is any minor breach means when the tax is less than 5,000, not equal to 5,000, less than 5,000, underline that. Tax is less than 5,000, less than 5,000. When the amount of tax or ITC is less than 5,000, then it is known as minor offence. In case of minor offence, penalty may not be levied, or if it is an offence which is easily rectifiable. For example, not displaying the GSTIN, easily rectifiable, like that, any offence which is easily rectifiable, then in that case also penalty may not be levied. So, or which penalty easily rectifiable and made without a fraudulent intent. But this particular section 126 is not applicable in all penalties. Wherever department is having power to not levy penalty, there only. Which case, wherever you can see up to. First case, it is not up to. 122 subsection 1, it is not up to. 122 subsection 1A, not up to. 122 subsection 2, not up to. But 122 subsection 3, up to 25,000. Up to 25,000 includes 0 also. So, which means that officer can waive off that penalty, 122 subsection 3. Then 124 is not up, 123 is not up to. But in 124, first time offence, it is up to 10,000. So, there also power is there for the officer to not levy penalty. Then again general penalty 125, up to is there. So, which means that there also they have power not to levy the penalty. So, therefore, this 126 is applicable only in case of 122 subsection 3, 124 and 125. Okay. So, that is what I have given, applicable in case of 122 subsection 3, 124 and 125. Then section 127 says, where proper officer is of the view that person is liable to penalty and same is not covered under any other proceedings, he may levy penalty after giving an opportunity of being heard. What does it mean? Only for levying penalty also they can pass an order. Only for levying penalty also they can pass an order, and but definitely an opportunity of being heard should be given, and then only they need to pass a penalty order also. That is where in case of 129, penalty order is passed after giving a notice. First seizure order, then a notice for levying penalty, and then penalty order is passed. Are you understanding this? Then next 128. 128 is government by notification can waive off the penalty. What is the difference between 126 and 128? 126 officer can waive the penalty, no penalty. But 128 government can waive the penalty. When government can waive the penalty, all sections other than 124. All sections other than 124 means 122 full they can waive off. 123 fully they can waive off. 125 also they can waive off, not 124. Even late fee also they can waive off. Government is having that power. But one important point is that whenever government waives off the penalty, and if a person is already paid the penalty or late fee, he can ask for refund. No, he cannot ask for refund. Okay, because he is not a CA faculty. Because CA faculty, if they announce a discount, no. So then the student will be coming and asking, sir, I purchased at that time, sir. Now you are giving discount, give. So I stopped giving discount. Okay. So therefore, very difficult to par with you. Then that is 128. But government, we cannot ask. Okay. We cannot ask that. Then 133. This is penalty on the officer who discloses the information, or any person who discloses the information that is under their control. That is, usually GST returns will have sensitive data. That sensitive data should not be disclosed with anyone. So suppose if the officer or the person who is working in the GST network, so if they disclose the information in the GST return to any other person, then the penalty will be up to 25,000 or imprisonment of 6 months or both. Officer engaged under this act willfully disclose any information or the contents of any return otherwise than in execution of duties. So, it is a penalty pa 25,000 or imprisonment of 6 months or both. So, these are the various offences that leads to penalty. Now, we are moving on to offences that leads to imprisonment, that we will see. First we completed offences that leads to penalty. Now we are discussing offences that leads to imprisonment. Easily you can remember what are the offences that leads to imprisonment. Biodiscredits TFT, okay, biodiscredits TFT minus ISRDSTT. What is that ISRDSTT? So, in that list biodiscredits TFT, we have 3 I's, 3 I. Invoice default, ITC default, ISD default. So, which is not that much serious for imprisonment? ISD default. So, take out. ISD default is taken out. ISD default is taken out. Okay. So, ISD default. Then ITC default, yes. Invoice default, yes, for imprisonment. Okay. Then next, yes, 2 yes are there. In that biodiscredits TFT, 2 yes is there. Supply with GSTN of another person, suppression of turnover. Both you take out. Both you take out. Okay. Both are taken out for imprisonment. That is not attracting imprisonment. ISR, only 1 R is there. Registration default. That also will not lead to imprisonment. Then ISRD, there are 2 Ds. Dealing in goods liable for confiscation, disposal of goods while detention or seizure is operational. So, which D is taken out for imprisonment? Disposal of goods while detention or seizure is operational is taken out. Means dealing in goods liable for confiscation is an offence for imprisonment. Okay. Then ISRD, yes, yes, already we have seen. TT, there are total 3 T's. Tampering material evidence, transport default, TDS TCS default, which is very serious. Tampering material evidence, that attracts imprisonment. Other 2 will not attract imprisonment. That is TDS TCS and transportation default. Okay pa. So therefore we need to take the list of offences we studied for penalty biodiscredits TFT minus ISRD STT, take out. So remaining offences plus attempt to commit or abetting this commission also attracts imprisonment. Sir, I have not done. I obstructed an officer, but I did not do. He asked me, I stopped him and I stopped with my gundas, but I did not do anything to him. So one scratch also not there on him, but you attempted na. So therefore, this will come under attempted to commit an offence. You loaded the goods in the vehicle and the vehicle is going to the gate. Officer, come and stop. So then you attempted to transport the goods. You understood like that. Attempted to commit an offence or abetting commission of an offence. That is, you encourage the person to do the offence. Okay. So that we should be careful before talking anything. Okay. Otherwise, chartered accountants and all will be coming under abetting commission of an offence. You understood? So recently only 2 people got arrested. So therefore, attempted to commit an offence or abetting commission of an offence, both attracts imprisonment. Okay. Not only these offences who committed. So even if they tried that committing of offence or abetting the commission of the offence, so that also attracts imprisonment. That is this. Then one important point here. So in C, collected an amount as tax. 2 C's are there, but collected an amount as tax is only an offence for imprisonment. Collected tax but not paid is not an offence for imprisonment, because which is serious? Collecting an amount as tax is only serious, that only attracts imprisonment. You understood or not? So tell me what are the offences which will not attract imprisonment? ISD. Next. Yes. Supply with GST of another person. R. Registration default. D. Disposal while detention or seizure is operational. Yes. Supply with GST of another person or suppression of turnover. Then TDS TCS. So ISRD STT. TDS TCS default, transportation default, and one more also, collected tax but not paid within 3 months. But collected an amount as tax not paid within 3 months is offence for imprisonment. Now what will be the imprisonment? What will be the imprisonment? So easily you can remember this part. That is, say this, 1, 2, 5, 1, 3, 5, 1, 2, 5, 1, 3, 5, 1, 2, 5, 1, 3, 5, 1, 2, 5, 1, 3, 5, 1, 2, 5 is crores, 1, 3, 5 is years. Okay, greater than 1 crore, greater than 2 crore, greater than 5 crore, greater than 1 crore, 1 year, greater than 2 crore, 3 years, greater than 5 crore, 5 years, standard, fixed, no, up to 1 year, up to 3 years, up to 5 years. What is minimum? 6 months. All three cases minimum 6 months is common, and fine is also common. Okay, so it is the imprisonment up to 1 year, sorry, up to 1 crore, no imprisonment, greater than 1 crore only, up to 1 crore 0, greater than 1 crore 1 year, up to 1 year, and greater than 2 crores up to 3 years, greater than 5 crore up to 5 years, minimum imprisonment. And what is the fine payable? Yes or no? Yes. All three cases, yes. This is for the fresher. Okay. Whereas if he is a senior repeater, then always it will be up to 5 years plus fine. You understood or not? And then there are 3 offences for which the amount involved in the offence is difficult to determine. Sir, what is this 1 crore, 2 crore, 5 crore? This 1 crore, 2 crore, 5 crore is tax. 1 crore, 2 crore, 5 crore is tax. And for 3 offences, it is difficult to determine the tax amount. BOT, B-O-T, books of accounts default, obstructing an officer from doing duty, and tampering material evidence. In these 3 cases, it is difficult to determine the tax amount. Correct? Yes or no? That's why for these 3 offences, the imprisonment will be up to 6 months or fine or both. Sir, what if it is senior? All cases, even this case also, it is up to 5 years plus fine, that is constant. Okay, so this is the imprisonment that you need to remember. So this is BOT, you remember, books of accounts default, obstructing an officer from doing duty, and tampering material evidence. And other offences only, that amount we need to check. So with this we completed offences that leads to imprisonment. First we have seen offences that leads to penalty. Second we have seen offences that leads to imprisonment. Now we are discussing offences that leads to arrest. You need to remember IIC. IIC. What is IIC? What are the 2 I's covered under imprisonment? Invoice default, ITC default. What is 1C which is covered under imprisonment? Collected an amount as tax. That only attracts arrest. So 3 offences that attracts arrest is invoice default, ITC default, collected an amount as tax and not paid within 3 months. And that too, the amount should exceed 2 crore. Then only arrest will be there. Up to 2 crores, no arrest. Okay. And imprisonment, yes. Imprisonment without arrest, yes. Arrest is different, imprisonment is different. Arrest is taking a person into custody, and imprisonment is court passing the imprisonment order. A person can be imprisoned even without an arrest, and a person can be imprisoned with arrest. Arrest is interrogation. Suppose if you killed another person, they will come and arrest you, and they will interrogate you what is the motive behind killing, because motive is very important before giving a judgment. So therefore you will tell, sir, he was scolding me, sir, that's why I killed him, sir. Okay, very good motive. So therefore, accordingly the imprisonment will be. So therefore, now you did one mistake, that is you hit one person and he did not die and all, and he went to the court and he filed attempt to murder case and all against you. Arrest and all will not be made. Police will call you. What, we have any intention to kill him? No, sir. Out of anger, I hit him, sir. So then fine. But case is there in the court. You directly come to the court. And now the court may give imprisonment. That is the difference. You understood or not? Interrogating a person requires arrest. So therefore, arrest may be there with or, that is with or, imprisonment does not require arrest. Imprisonment can be independent of the arrest. And arrest is required only in case of 3 offences. That too when the amount exceeds 2 crores. What are those 3 offences? Invoice default, ITC default, collected an amount as tax and not paid within 3 months. Then amount should exceed 2 crores. Then what is the offences that is called as cognizable or non-cognizable? Cognizable offences means a person can be arrested without a warrant, whereas non-cognizable means a person can be arrested only with the warrant. All cognizable offences are non-bailable offences. Means the arresting officer cannot grant the bail. The bail should be given only by the magistrate. Whereas non-cognizable offences are bailable. So which means the arresting officer can grant the bail. Now, what are the offences which are cognizable and non-bailable? Same three offences. That is IIC, invoice default, ITC default, collected amount as tax and not paid within 3 months. But if the amount exceeds 5 crores. If the amount does not exceed 5 crores, it is exceeds 2 crores. Listen carefully. It exceeds 2 crores. It exceeds 2 crores. These three offences exceeds 2 crores but does not exceed 5 crore. Is arrest there? Yes. But that is what offence? Non-cognizable plus bailable. Arrest can be made. Suppose if it exceeds 5 crore, then it is what offences? Cognizable plus non-bailable. So once arrest is there, then only we call it as cognizable, non-cognizable. But in study material in one question, they just said everywhere non-cognizable and bailable. That is wrong pa. Only when the arrest is there, then only cognizable, non-cognizable will come. When the arrest itself is not there, what is the point in talking about bailability, etc. So therefore in exam, be careful. You write that note clearly. When there is no arrest, the bailability of offence shall not arise. Okay. Then next, so here what is the meaning of a cognizable? Means inform the ground of arrest produced before the magistrate within 24 hours. So means bail cannot be granted by the arresting officer in case of cognizable. But in case of non-cognizable, ACDC can give bail. If bail not taken, then forwarded to the custody of the magistrate. And imprisonment already we know, whatever it is. What about other cases? Any other offence? Any other offence will not be called as cognizable or non-cognizable. But this is what I told you. In study material, they gave it as non-cognizable plus bailable. But this is wrong. This is wrong. Because when there is no arrest, any other offence there is no arrest na. When there is no arrest, so cognizability of the offence should not arise. But it is given this way. So that is a mistake. That's what I told you. Write a note clearly in the exam. That you first write it as non-cognizable plus bailable. Then write a note that when there is no arrest, the bailability of offence shall not arise. Like that you need to write a note. But first answer wise if you see, answer is non-cognizable plus bailable. Then next, arrest can be made or arrest cannot be made. Arrest cannot be made because all other offences will not lead to arrest. So with this we completed offences that leads to penalty, offences that leads to imprisonment, offences that leads to arrest, offences that leads to cognizability and non-cognizability. Okay. So with this we completed offences and penalties also. Now we will see demand and recovery. So what happens? First returns, then assessment is done, thereafter either audit or inspection, and then what are the penalties that are possible we have seen. Finally they will pass a demand order asking us to pay. Okay. So the demand order we will see. So demand and recovery segment 18. And many students are asking me that sir, I have May 22 book, that's it book, is that sufficient? Sufficient pa. That book plus amendments, already amendments material and amendments video I uploaded in my YouTube channel and in my website also. In downloads amendments book is there, you can download and study from there. Okay. So no sir, I want to buy a new book. Buy, I will not stop you. So who am I to stop you? So therefore if you want to continue with that old book also you can continue. Okay. And if you buy the book or if you are not buying the book, I am not going to get any benefit. So therefore why should I do marketing for that pa? Okay. So because you can use the old book also plus amendments. Because if you buy the 300 rupees book, I cannot construct one house in Ananagar. So therefore, no, it's up to you. It's as you wish. Then see this demand and recovery under GST. So when there will be demand order, 5 cases. Non-payment of GST, short payment of GST, wrong availment of ITC, wrong utilization of ITC, erroneous refund. Non-payment means you are required to pay but you did not pay. Short payment means you are required to pay but you paid less. Wrong availment of ITC means you are not supposed to take credit but you have taken the credit. Wrong utilization of ITC means you have taken the credit which you should not supposed to use but you have used. Erroneous refund, you are not supposed to get the refund but you got the refund. In these 5 cases, these 2 sections get subtracted. Which 2 sections? 73 and 74. What is the difference between 73 and 74? If it is on account of If it is on account of next 5, fraud, collusion, willful misstatement, suppression of facts, contravention with an intent to evade payment of tax, these 5 cases, 74. If it is other cases, 73. You can also remember it like malified cases, bona fide cases. Malified cases means 74, bona fide cases means 73. And first we will complete 73 other reasons. What is the time limit by which the order should be passed? The order should be passed within 3 years from the due date of annual return in case of first 4. What is that first 4? Non-payment, short payment, wrong ITC, wrong availment, wrong utilization of ITC. These 4 cases, what is the time limit by which order should be passed? 3 years from the due date of annual return. Whereas, in case of erroneous refund, 3 years should be counted from the date of refund. For example, you take a financial year 2021-22. For 2021-22, what is the due date of GSTR 9 annual return? So that is 31st December 2022. That is the due date of filing annual return. From that date, what is the time limit by which order should be passed? Order should be passed OIO. OIO means order in original or adjudication order or demand order. These are the 3 different names, synonyms for the same order. Order in original or demand order or adjudication order. Anyway, you can call it as. And this order, demand order, should be passed by when? Should be passed by 31/12/2025. That is the time limit by which the order should be passed. Whereas, what is the time limit by which notice to be given? At least 3 months before the notice to be given. So, therefore, the show cause notice in this case to be given 3 months before, which means that it is 30/9/2025 is the time limit by which notice to be given. This is what in some books it will be written as 2 years 9 months. That is also correct. Actually, 3 years minus 3 months is what? 2 years 9 months. That is also correct. And the notice to be given within 2 years 9 months. But why to remember that way? We can easily remember 3 years is the order time limit minus 3 months is the time limit by which the notice to be given. Which means from the notice to the order, what should be the minimum time limit? 3 months. Means there should be a minimum of 3 months gap between the notice and the order. If the notice to order, if the gap is less than 3 months, which means that notice is not considered as a valid notice. Or in other words, that order is not a valid order. Now, so this is the time limit in case of non-payment of tax, short payment of tax, wrong availment of ITC, wrong utilization of ITC under section 73. If it is erroneous refund, don't see GSTR 9 due date. We need to see the date on which we got the refund. Now, in this place, if at all ICAI want to test, one super question they can give. That is, they will give composition scheme dealer. Composition scheme dealer, the recovery annual return time limit is not 31st December. It is 30th April. You understood or not? So, like that also they will twist. And we will be applying 31st December always. But 30th April is the due date of filing annual return for them. So, the 3 years should be counted from 30th April. For a person who is opting for composition scheme also, the demand and recovery can be done. So, in that case, the demand and recovery, because composition scheme section 10 subsection 5 says that, so 73 and 74 mutatis mutandis applicable in case of section 10, which means that for composition scheme also the recovery will be under 73, 74. In that case, the order will be 30th April of the succeeding financial year. Don't forget, that can be tested, possible, okay. Next, suppose if it is 74 will be, what is the time limit by which the order should be passed? At least order 5 years. So 73 3 years, 74 it will be 5 years. 5 years from the due date of filing and return in case of non-payment, short payment, wrong availment of ITC, wrong utilization of ITC. In case of erroneous refund, it will be 5 years from the date of refund. And what is the time limit by which the notice to be given? Notice to be given at least 6 months before the order date. And that is this time limit for notice, time limit for passing order. Whether a supplementary notice can be given? Yes, supplementary notice can be given. Supplementary notice is like already 1 year they gave a notice. Now for another year also same offence is repeated. Same grounds, that is important. Only if it is same ground, same offence is repeated for the next year. Again no need to give another notice for the second year, because anyhow the offence is same. So which means the adjudication order, the demand order should be one only. So due to that reason, For the first year already they gave a notice, but demand order is yet to be passed. So they can give a supplementary notice for the second year rather than giving a new notice. The advantage is that already to the original notice, when the supplementary notice is given, these two notices together they can pass a single demand order rather than passing two separate demand order. But here a noteworthy point is that supplementary notice to the order also should be 3 months gap should be there, or 6 months gap should be there. Already year 1 notice is given, order is not yet passed, so order it is taking time. Now second year again they completed the audit, they identified the same offence. For that same offence of the previous year, already notice is given, no need to give a new notice. For the same notice they can give an annexure for the second year also. These 2 years together they can pass a single order. But what is that they need to keep in mind? For the supplementary notice to the order, it should be a gap of minimum 3 months. Original notice to order, there should be a minimum gap 3 months, that is already there. Sir, minimum gap 3 months does not mean 3 months only should be there. There can be a gap of 1 year also, there can be gap of 2 years also, correct or not? So whenever they give a supplementary notice, 2 conditions we need to check. What are the first condition? The supplementary notice can be given on the same grounds, and the supplementary notice to the order should be within 3 months or 6 months, as the case may be, 73 or 74. Then what will be the amount in the order? TIP, tax, interest, penalty. Penalty under which section? 122 subsection 2. Just now we discussed here 122 subsection 2 penalty. What is that 122 subsection 2 penalty? 73, 10% of the tax or ITC or refund, or 10,000 whichever is higher. If it is 74, 122 subsection 2 penalty, that is 100% of the tax, or 10,000 whichever is higher, that will be the penalty payable. So the amount of penalty here is this, and this penalty is in terms of section. This penalty is in terms of section 122 subsection 2. Already we gave a reference there, I am just writing it here. And then, so we have a discount offer in this. What is the discount offer? 73 you see, 73. So no penalty if paid before show cause notice. 73 first you see, no penalty if you pay before show cause notice, means if you pay the tax and interest before show cause notice, penalty you are not required to pay. Suppose if you are paying after show cause notice, within 30 days also you don't have to pay the penalty, full penalty waived, okay, 100% discount. And suppose if you pay thereafter, you have to pay the original penalty, there is no discount, okay. So 3 limits, what is the 3 limits? Before notice, no penalty. Pay before notice, tax and interest, penalty waived. Pay within 30 days after notice, tax and interest, penalty waived. Pay beyond 30 days from notice, you have to pay the original penalty. That is in case of 73. In case of 74, pay before notice, tax, interest, and 15% of the penalty. 15%, check how much? 15%. So remaining 85% will be waived. You understood or not? Before notice you have to pay 15%, so 85% will be waived. Suppose after the date, within 30 days from the notice, if you pay, you have to pay only 25% of the penalty, remaining 75% is waived. And thereafter if you pay within 30 days from the order, first before notice here, before notice if you pay 15% only penalty, after notice within 30 days 25%, and after that any time within 30 days from the order, after that any time, after 30 days from notice any time, within 30 days from the order, how much will be the penalty? 50%, remaining 50% waived. Beyond 30 days from the adjudication order, if you pay, you have to pay the original penalty, whatever it is there. That is this. Then here, this benefit of no penalty is not applicable in case of self-assessed tax. You can see that footnote, one amendment is there, you can see. So the benefit of no penalty or reduced penalty, so where is which case? 73 case. So it's not applicable in case of self-assessment tax. What is a self-assessment tax? Self-assessment tax means the tax which is reported in GSTR 1 but not paid in GSTR 3B is known as a self-assessed tax. Again I am repeating, what is the meaning of a self-assessed tax? We are shown that invoices in GSTR 1 but GSTR 3B not yet filed, means we have not paid it in 3B, that is known as a self-assessed tax. For that self-assessed tax, how the recovery will be? The recovery will be either direct recovery. This is a very important point part. This can be definitely tested. If I am setting a question paper, I will test this. So if it is direct recovery, 79, Because already he accepted this much tax I need to pay. Then why to give a notice to him? It appears from our records that you have to pay. Why? Already it is there. Okay, so he accepted. Directly you can do the recovery under 79. Or if the officer is a very good boy, so he will be giving a notice and then he will do the recovery under 73. 74 will not come. This is not a fraud. If it is a fraud, why he is reporting in GSTR1? Are you understanding this? So therefore he reported, means it is not a fraud. So 73. So therefore there are two options available for recovery of the self-assessed tax. What are the two options? Direct recovery under 79 or recovery under 73. Suppose if 73 is initiated, then the penalty will be 10% of the tax or 10,000, whichever is higher. And even if he makes the payment before notice or within 30 days from notice, etc., this penalty will be there. Generally, there is no penalty if you pay within 30 days from notice, correct or not? But that is not applicable in case of self-assessed tax if the recovery is under 73. Suppose if the recovery is under 79, the penalty will be section 125, general penalty up to 25,000. Now in question what you need to see is whether the recovery is done under 73 or not. If the recovery is, because in study material it is there, this question is there in study material. Check or not has made a self-assessed tax, like that one question is there. So self-assessed tax recovery, the moment you see self-assessed tax, two words should be highlighted in the question. Self-assessed tax 73, blindly penalty will be 10% of the tax or 10,000, whichever is higher. And no reduction, no RD offer, no discount offer. Okay, you have to pay. Suppose if you see self-assessed tax, but in microscope also you are seeing 73 is not there, then the penalty 125 up to 25,000. You understood or not? So see this, benefit of no penalty not applicable in case of self-assessed tax, that is recovery of GST with respect to invoices furnished in GSTR1 but not paid through 3B. Okay, and here itself you just write down. So direct recovery 79 is there na. So you just take section 79. So wherever 79, so 79 it is there in page number 122. So there you write down penalty for self-assessed tax not recovered through 73, not recovered through 73, section 73 is up to 25,000. So there is a CBIC circular, in this regard, and because of that CBIC circular, penalty for self-assessed tax not recovered through section 73 is up to 25,000. There is one CBIC circular, that's why. I am making you write these extra points because, you know, everything I cannot give in the book. Then if everything I could give in the book, this is not called as a pocket book, pa. This will be my regular book. But wherever these kind of important points are there, I am writing, because how much I can also give. So therefore I gave all important, but this kind of critical points you need to write, no other go. And you remember this, pa, what is that you need to know? Come on. If it is self-assessed tax 73, penalty will be 10% of tax or 10,000, whichever is higher, and benefit of reduced penalty not applicable. Suppose if it is self-assessed tax recovery under 79, direct recovery under 79, means they did not pass any notice or order under 73, then in that case the penalty will be up to 25,000 general penalty, and there no waiver, we have to pay that penalty. Then next one is section 76. 73, 74 we have seen, 75 is there, that is general provisions relating to determination of tax, that you can see in the next page, but that we will see later. So come back to section 76. 76 talks about an amount collected as tax but not paid. To recover that, the order will be passed under 76. Amount collected as tax. What is amount collected as tax? Sir, 73, 74 will come only when the tax is collected. Short payment of tax, non-payment of tax means you are really supposed to pay the tax because you collected it as tax. Whereas any amount collected representing as tax but not paid, then recovery will be under 76. In case of 76, so the penalty will be 100% of that amount collected. The penalty will be 100%. Where is it given? Ayya, 122 subsection 1, ayya, collected an amount as tax not paid within 3 months. So therefore 10,000 rupees or 100% of the tax, whichever is higher. So that 100% of the tax will be payable as penalty. And then next, what is the time limit for issuing show cause notice? No time limit. Even after 100 years after also they can give notice. No period of limitation in that case. For 73, 74 there is a period of limitation. You did not pay tax. You evaded tax. 3 years, 5 years over. Then Dandanaka dance. You don't have to pay anything. They cannot recover also. You can voluntarily go and tell, Bo, I did not pay tax, like that. But in case of 76, no, don't speak. Gone. They can give notice. Even after 10 years, 20 years also they can give notice. See there. No time limit for show cause notice. And order should be passed within 1 year from notice. That 1 year is for what? Order, not for notice. Notice can be given any time, but from the time when notice is given, the order should be passed within 1 year. And what is the penalty that is payable? 100% of the tax. And interest will be 18% per annum. That is okay. But very, very important is from which date to which date? From the date of collection till the date of payment. From the date of collection till the date of payment. Today I collected. From today itself it should be calculated. Generally, interest we calculate from the first date after due date, but in this case from the date of collection till the date of payment. Then, what is the time limit for payment of the amount? That is, there are 3 orders for recovery. Number 1, 73 order, 74 order. Then number 3, 76 order. Once they pass an order, what is the time limit within which we need to pay? We need to pay within 3 months from the date of order. And either you pay within 3 months from the date of order or go for appeal within 3 months from the date of order, because appeal time limit also 3 months. Within 3 months we need to go for appeal. Either go for appeal within 3 months or make the payment within 3 months. So appeal time limit, first appeal time limit is 3 months plus condonation of delay 1 month. So therefore within 3 months as a registered person pay or go for appeal. If you are not doing anything, so then they will initiate the recovery. So 3 months is the time limit available. So that is given in section 78, within 3 months from the date of order, otherwise recovery shall be initiated. Then section 80 says that, so whatever money that you have to pay, order, they pass an order and you need to pay that money, na? So that EMI facility is available. How many months you can pay? So 24 months maximum. Maximum 24 months means it is up to their decision to give 6 months, 12 months, 18 months, like that. They will give different options for us, okay? And it is up to them. Suppose if they say only 18 months, now you cannot go against that order to the court of law. You cannot make an appeal against that order stating that I asked you 24 months, but officer gave only 18 months, like that and all. You cannot go, because it is up to the discretion of the officer whether to grant 24 months or not, because it is maximum 24 months. That is section 80. Then next one, other provisions. So these are all the very, very important areas related to demand and recovery that you need to remember. And other provisions, this is just for one time reading. So this is not that much important, but maybe tested in exam. So we should not take a chance. What is that? Section 75, general provisions relating to determination of tax, which says, if there is any stay that is granted by the court and that stay period should be excluded from the notice time limit and the order time limit. If the stay is given for notice, suppose if the stay is for 3 months, already what is the time limit for notice? 3 months. Now 3 plus 3, 6 months should be taken. Suppose if the stay is given for the order for 1 year, already time limit 3 years plus 1 year, so 4 years should be taken. So sir, it is said as excluded, sir, but you are telling you need to include. What does it mean? It means the overall time limit when we are computing, we should take 4 years, from that minus 1 year. So that 1 year is what? Stay period. That is the time limit within which order should be passed, which means when you are determining the end date, you take the regular due date plus that stay period you need to add. So in mind you remember that stay period should be added to the regular time limit if in question they have given the stay. Stay for notice means for the notice time limit you add that stay time limit, and if it is order time limit, if the stay is given, you just order that. Okay, you just add it to the order time limit. So that is this. Then notice issued under 74 not sustainable in the court. That is, first order is passed under 74 on account of fraud, and we went to the court and we are telling that it is not on account of fraud. Then in that case, whatever notice they have already given for 74 will be trimmed as 73 notice. Will be trimmed as 73 notice means, so if it is 73 notice, they can recover for some period, na, that much amount can be recovered. For example, for 2018, 2019, 2020 and 2021, for this, and 2022, for these 5 years they gave a order, single notice and single order, 74 notice they have given, and that show cause notice under section 74 is issued on so 14th July 2022. Is this valid? Is this notice valid? For 2018, what is the time limit by which the notice to be given? If it is 74 notice, 4 years 6 months, 5 years minus 6 months, 4 years 6 months. So first you take 5 years. So 2018, due date of furnishing and return 31st December 2019. So 2019, 5 years, 20, 21, 22, 23, 24. So 6 months before, which means, so September, correct? June. So June 2024, but 14 July 2022 they gave. Is it within time limit? Yes, that is the time limit by which they need to give notice, but they gave it in 2022, valid. If that itself is valid, 2019, 20, 21, 22, everything will be valid. Why? Sir, what is the maximum time limit by which the notice to be given? Is 30th June 2024. And the notice is given on 14 July. Is that a mistake? Sir, due date means that is the time limit by which. So just because your application to be filed by 10th September, it does not mean 10th September only you need to file. You can file before that also. Like that one option is there that you don't know. Okay. So therefore, here due date does not mean that date only it should be given. It can be given even before that. So therefore, the notice given before that also. So it is a valid notice. 2018, 19, 20, 21, 22, all these years they can recover by giving a notice under section 74 on 14/2. And order under section 74 on what should be the minimum gap from the notice to the order? 6 months should be there. So therefore, this order is passed on 31st January 2023. So is there a 6 months gap? Yes. Yes, there is a 6 months gap. So from the notice to the order. Okay. Now on this order, you went for the appeal. When you went for the appeal, so the first argument placed by our defense is that, sir, this is not a case of fraud. So when it is not a case of fraud, and court also agreed that it is not a case of fraud, if this case is disposed of, again he cannot come and give the notice to recover this money, because that is time barred. Now he cannot give the notice because we are in 2023. In 2023, again a new notice cannot be given at all. So for that reason, what they are telling is that whatever notice that is already given under 73, suppose if it is a 74, if it is a 73 notice, then for which periods we can recover? What is the due date for 73 notice? So 3 years from the minus 3 months. So therefore, for 2018, what is the due date? So 31st December 2018, that is 2018-19. 2018-19 means 31st December 2019. So 20, 21, 22. So 3 months before that, that is September 2022. So it is on time. So therefore, all these 4 years can be recovered even now. Why? Because even if we trim it after this, so still it is on time only. Got it? So therefore, notice is given on which date? 14/7/2022. Suppose if the notice is given, notice on say 15 July 2023. Now 15 July 2023. For 2018, what is the time limit by which the notice to be given if it is 73? 30th September 2022, but it is given on 15th July 2023, means 2018 cannot be recovered. Then 2019 it is on time? Yes. So therefore this 4 years tax can be recovered. Understood or not? So that is this point per notice issued under 74 not sustainable in court, then the same shall be converted to be section 73 notice. Actually I like this concept so much, that's why I gave it example, but don't know whether it will be tested in exam or not, but if it is tested like this a question can be given, because in old syllabus it was there. In excise duty it was there, excise act and service tax it was there, the same question was there at that period. So therefore that provision is copy pasted from old law only, so they can coin a question like this. Then when the matter remanded back for fresh adjudication, what is this fresh adjudication? When we go for appeal, then the tribunal will say, no, you have not dealt the case properly, go back for fresh adjudication. In that case, when the matter remanded back for adjudication, the adjudication order should be passed within 2 years. That is important for MCQ, remember. So adjudication order should be passed within 2 years when the matter is remanded back, for fresh adjudication. But 73 order should be passed within 31st December 2022 for 2018. Yes, that's what I am telling. It is not within the time limit. So due to that reason, 2018 amount cannot be recovered. In the previous question, someone asked me that. So 2018 cannot be recovered. So when you convert the same notice and order for 73, whichever years we cannot recover, the balance years only we can recover. Fine. So coming back to this, that is whenever the matter is remanded back for fresh adjudication. Generally, what is the time limit for passing an order under 73, 74? 3 years, 5 years. But the 3 year, 5 year is not applicable if this is second time it is coming back for adjudication. First time regular fresh adjudication, order passed, it went to the appeal stage. Now the appellate authority is telling no, you have not done it properly, and it will be sent back again to square one. So at that time, the order should be passed within 2 years from the date when it is remanded back for adjudication. And how many adjournments can be given by the adjudication authority before passing a demand order? Maximum 3 times. And even in appeals also it will come that maximum 3 adjournments can be given in appeals. So in adjudication also maximum 3 adjournments. Then interest is payable even if not specified in the order. That is, in the order they did not specify interest. Interest is a statutory liability. That interest has to be paid whether it is specified in the order or not. But penalty is not a statutory liability. So penalty is payable only if it is specified in the order. But interest is payable whether it is specified in the order or not. Then amount in the order should be less than or equals to amount in the notice. Suppose if the notice is given for 10 lakhs, the order cannot be for 12 lakhs because the amount in the order cannot be more than the notice amount. So therefore, if suppose the order is passed for an amount more than the amount in notice, that order is called as a void order. Okay. And next, in case of self-assessed tax, already I told you, direct recovery without order can be initiated under section 79. And suppose if there is a similar issue pending in some other proceedings in GST, AT or High Court or Supreme Court. For example, there is one dispute, and on that dispute, we went to the court, High Court or Supreme Court. Now the case is in High Court or Supreme Court. Now on the similar dispute in some other person's case, they cannot pass an order till the time High Court or the Supreme Court disposes of the case under this. Okay. So why? Because actually it is a case in the High Court or Supreme Court, and till the outcome of that, even department don't know what is the outcome. So due to that reason, they cannot pass an order. Means during that time they cannot pass an order. So like stay period, this period also should be added. Generally stay period we need to add now for adjudication order. Same way, this period also should be added. Similar issue pending in some other proceeding in GST, AT or High Court or Supreme Court, such period should be excluded in the due date of adjudication order. These are some general points related to 75. Then 77, 76 already we completed. 76 is amount collected as tax but not paid. 77, tax wrongfully collected and paid. That is by collecting, that is instead of intrastate, I treated it as interstate, and IGST is levied. So IGST I am paying. Now, can I leave it like that? No, I need to pay the correct tax. What is the correct tax? CGST, SGST I need to pay, and I need to get the refund of IGST. Same way, suppose if I have paid, CGST, SGST, thinking it as intrastate, but actually it is interstate, then I have to pay IGST and get the refund of CGST, SGST. Understood or not? So that is this, intrastate treated as interstate. Intrastate treated as interstate. So pay CGST, SGST and get refund of IGST. Interstate treated as intrastate. So then pay IGST and get refund of CGST, SGST. So pay the correct tax and get the refund of wrong tax. Should we pay any interest in this case? No need to pay any interest. Will there be any penalty in this case? No, because it is revenue neutral. Already we paid the tax, but only thing it is under the wrong head. Sir, but there is something called as PMT9. PMT9 is filed for the purpose of shifting the balance in the cells. Then won't that be connected here? No, that is before payment of tax. Before payment of tax in the cash ledger, if you want to shift the balances, we use PMT9. But the tax has already been paid. So when the tax has already been paid, then the only recourse is this. So pay the correct tax and get the refund of the wrong tax paid. Then section 79, what are the different modes of recovery? So that is, once recovery is initiated, how they will recover the money. First, deduction of any money owed from the government. So any amount that the person is required to get from the government, like refunds, etc. So withholding of refund. So suppose if he need to pay money with respect to an order, and with respect to some other transaction, he need to get some ITC refund or some other refund. So now that refund will be withheld, because on this demand they are initiating the recovery. So whatever refund that is payable to him, that will be withheld and it will be adjusted from there. So that is not necessary from CGST or SGST case, it can be even income tax refunds also. So from any law, under any law, if any amount is owed to him, so from the government, so there they can adjust that. Then sale of goods under the control of proper officer. So whatever goods that they have, they can sell it off if they have done any seizure. And garnishee proceedings, that is recovery from a third person, bank manager, or recovery from the tenant who is taken property on rent, or recovery from a debtor, that is known as garnishee proceedings. Then sale of movable or immovable property. So they can attach the property and they can dispose it off. Then as arrears of land revenue by collector. So they will be announcing in the locality where that person is living that there is one person in your locality is a defaulter, don't give any amount to him, and if you give amount to him he will not repay because he did not pay tax to government also, like that they will, even then also you did not pay. Then as a fine imposed by magistrate. So magistrate fine and all, it will be imposed. So whenever it is imposed, you need to go to the prison and you need to work whatever the jailer is telling. So washing clothes, washing toilet, etc. and all, whatever wages that you are earning, that will be adjusted towards the tax. That is known as fine imposed by magistrate. Then through surety. These are the various modes of recovery. Suppose if you get any short note question, you can write this. What are the various modes of recovery? Then section 81. Transfer of a property to be void in some cases. What is this? That is, generally whenever an order is passed on me, so they will do the recovery, attachment of property. So what I will do, I will transfer that property to my wife and I will say I don't have anything, sir. Then in that case, so the transfer is considered to be void. The transfer is considered to be void. Any amount that has become due from a person, when an amount will be due from the person? When the order is passed. But they missed one point. What is that? Before order, if I transfer, will that be valid or invalid? Valid. Because any amount has become due from the person, means order is passed. After the order is passed, creates a charge. Creates a charge, means takes a loan on that. Okay, takes a loan on the property. So I should not transfer, no, okay, fine. So I will take a loan, mortgage that, take a loan, and that loan amount I will be transferring to someone else. Okay, then, or transfer any of his property in favor of any other person with the intention of defrauding the government revenue, such charge or transfer shall be void. Okay, the transfer will be void. Provided the transfer is not void if it is made for adequate consideration. Okay, this is we have na income tax many places, adequate consideration, adequate consideration. So therefore, if I am transferring it to my wife for an adequate consideration, that transfer is valid, or with the permission of the officer if I transfer, that is valid, or in good faith and without notice or pendants of proceedings if I transfer, then also it is valid. So section 81 says transfer to be void when after the date of order. What if it is before the date of order, after the notice? After seeing notice itself, I come to know that I have to pay. Government will pass an order and they will do the recovery. If I transfer that, is it valid or not valid? Valid, valid. That's why they created another section now, provisional attachment to protect revenue, 83. 83, what they are telling, till the time order is passed, this idiot may transfer and he will say that it is valid. So provisionally we will attach his property till the time order is passed, immediately after notice. Got it? But this attachment is provisional attachment. For how many years? 1 year. Logically, notice to order minimum time limit 3 months, notice to order minimum time limit 6 months, means definitely within 1 year after giving notice they will pass the order. Correct or not? So 1 year is the provisional attachment time limit. So provisional attachment of any property after initiation of any proceeding, initiation, when it will be initiated, whenever the notice is given they will initiate, and for a period of 1 year from the date of order of provisional attachment. So whenever they pass the order for provisional attachment, that provisional attachment will be valid for next 1 year. Means in that 1 year what they need to do? They need to pass adjudication order. And they need to initiate the recovery there. You understood or not? Then section 82, tax to be first charge on the property. Yes. So that is amongst any other dues that a person is required to pay at the time of liquidation. Of course, subject to IBC. So at the time of liquidation, any amounts that are payable, tax will always be having first charge. Okay. So under statutory payments, we have now statutory payments as the first priority. In that income tax will come, GST also will come. And suppose if IBC is there, as per IBC only it will be there. Save as otherwise provided in IBC, any amount payable by any taxable person shall be first charge on the property. Section 84, continuation and validation of certain recovery proceedings. What is this? That is, appellate authority has enhanced. For example, notice is for 10 lakhs. Order is for 10 lakhs. Notice is for 10 lakhs. Order is for 10 lakhs. On that order, we went for appeal. And appellate authority said, no, not 10 lakhs. You are required to pay 12 lakhs. Understood? Because it's like, sir, during revaluation, will they reduce our marks, sir? Like that student will ask, no. So if there is really, they will enhance, they will not reduce. But department will do that in appeal. So in appeals, when we are going for appeal, so we went for appeal asking that 10 lakhs should not be there, less than 10 lakhs. But appellate authority identified the mistake and they are enhancing it to 12 lakhs. In that case, can they just like that enhance? No, they cannot enhance. They need to give an opportunity of being heard. So appeal against an order. Appellate authority enhanced the amount. Commissioner shall serve a notice purchase excess amount. The 2 lakhs, who should give the notice? Commissioner should give notice. And appeal order shall be passed on such enhanced amount without adjudication order for the excess amount. Got it? So just to notice to be given by the commissioner. That's what I said, opportunity of being heard. The commissioner has to give notice, but order is not for 12 lakhs or order is only for 10 lakhs, it's okay. So for the 2 lakhs, even if new order is not passed, because it is in the appeal stage, court stage, so therefore they can enhance that amount. That is this 84. Then this note, already we discussed, seizure and confiscation of goods and conveyance in transit, a separate proceeding from recovery of tax, and section 74 is not applicable. Even section 130 is delinked, section 74 also delinked. Means 74 also not applicable here, because 129 is now a separate section, already I told you. 129 is a separate section, 74 also will not come in that case. Okay. So with this we completed demand and recovery pa. Now what's after demand and recovery? Order passed. What's next? Appeals. See that appeals. You need break? I don't know what is the time. 1:30. Yeah. Okay. So up to what time you need break? 2:30? Fine. Okay. So take a break till 2:30 and after 2:30 don't eat heavily. Okay. So eat less and come and take a nap for some time so that that chemicals and all reaction will happen. So then you listen. So otherwise you will sleep. I will not stop. If it is a regular batch, I will stop. And fast track batch means also I can do, but no, I will continue. Okay. And suppose if you have lost anywhere, like you missed something, don't worry. So these videos are there in YouTube. Even after live, it will be there. 2019 I recorded, that also is there in my YouTube channel. Don't worry about it. It will be there forever. Okay. Anyhow, YouTube free only cost. So therefore it will be there. You can watch anytime and timestamp and all. So my team will be making after completion of this batch. So right now you have to just crawl and see, and thereafter timestamps will be done as to like each and every chapter. So then you can watch it later also, and this will be there, and make use of this one day before the exam. You will have time na, so there it will help you. Okay. Thank you. We'll meet at 2:30 pa. Okay. So before break we completed up to this offences, penalties, demand and recovery, etc. Now look into appeals under GST. So we have difference between adjudication authority and the appellate authority. Adjudication authority means the authority who can pass the demand order, and appellate authority means against the demand order to whom we can go for appeal. And here the adjudication authority is additional or joint commissioner appeals, assistant or deputy commissioner and superintendent. Commissioner is not an adjudication authority, which means can commissioner pass the order? No, commissioner cannot give notice. Only three: superintendent, above that ACDC, assistant commissioner or deputy commissioner, and above that additional or joint commissioner. Even anti-profiteering authority is also an adjudication authority. So whenever we make an appeal to the appellate authority, the first appellate authority will be commissioner appeals or additional commissioner appeals, and the second appellate authority will be GST-80, that is GST appellate tribunal, and the third appellate authority is High Court, and the fourth will be Supreme Court. So the first appeal is commissioner appeals or additional commissioner appeals, and thereafter GST-80. This GST-80 is having two benches, national or regional bench to hear place of supply issues, whereas state or area bench to hear other issues. So therefore whenever the appeal is made to the GST-80, if it is related to place of supply, we need to go to the national bench or regional bench. Thereafter from there we will skip the High Court and directly we go to the Supreme Court, which means for place of supply matters High Court will not hear those cases, so the appeal will be made directly to the Supreme Court. So for the matters relating to place of supply after GST-80, further appeal lies with Supreme Court only. Whereas if it is any other case other than place of supply, after commissioner appeals or additional commissioner appeals, the next appeal is with GST-80. But in GST-80, which bench? State bench or area bench, not national or regional bench, state or area bench. Thereafter again the appeal will be to High Court and thereafter to Supreme Court. So that is the appeal procedure. And in case whenever the order is passed by the adjudication authority, that order is known as adjudication order, demand order or order in original. These are the synonyms. So adjudication order, demand order or order in original. Whenever appellate authority passes an order, that is known as appellate order or order in appeals. Then whenever we are making appeal to High Court and Supreme Court, the provisions related to appeal to High Court and Supreme Court is not in GST, that are governed under the provisions of CPC, Civil Procedure Code, and therefore we don't have any procedures related to that in GST Act. So GST law talks only about the appeal to appellate authority, that is first appellate authority, commissioner appeals or additional commissioner appeals, then only to the tribunal. And what is that procedures or what is the provisions that we have? First appeal is made to commissioner appeals against the order of the additional commissioner or joint commissioner, whereas against the order of the additional commissioner below the rank of additional or joint commissioner, it will be to additional commissioner appeals. So simply we can understand this in a logic, that is, who is the adjudication authority? Commissioner, that is additional or joint commissioner, additional or joint commissioner, then ACDC or superintendent. So this is the regular adjudication authority. So order will be passed by this authority. Whereas when we take the appellate authority, in the first appellate authority we have commissioner appeals, and below that commissioner appeals we have additional commissioner appeals. These two will come under first appellate authority, additional commissioner appeals. Now against the order of additional or joint commissioner, definitely we cannot go to additional commissioner appeals, because they both are in the same hierarchy. Even though this is separate adjudication, this is separate appeals, so as they both are in the same hierarchy, so we should definitely not go to additional commissioner appeals against the order of the additional or joint commissioner. So the appeal should be made to commissioner appeals. Suppose below the rank of additional or joint commissioner passes any order, then on that the appeal will be made to additional commissioner appeals. So this is what is given. Suppose if commissioner that is additional or joint commissioner passes an order, then the appeal will be made to commissioner appeals. Whereas if below the rank of additional or joint commissioner, that is ACDC or superintendent passes the order, then the appeal will be made to additional commissioner appeals. Okay, so this is something which is given in the study material. So maybe this could be tested in MCQ somewhere, like which of the following statement is correct, incorrect, like that, there it will be tested. And then what is the time limit for appeal? If the assessee is going for appeal, it will be within 3 months plus 1 month. So already we discussed in demand and recovery chapter that once the demand order is passed, within 3 months either we need to accept the payment and pay it, or we need to go for appeal. So therefore the statutory time limit for going for appeal is 3 months and 1 month condonation of delay for the first appeal. Department also can go for first appeal, but that is not called as appeal, that we will call as review. That is called as review. Okay, that is called as review. So against the department order, department itself is going for appeal, we call it as review. So against the department order, its own order it will go. Who will go for appeal? So against the department order, which department? Personnel commissioner. So their boss is there na, these 3 people's boss. So additional or joint commissioner, assistant commissioner, deputy commissioner, superintendent. So their boss is who? Commissioner. So here department means who will go for review? Commissioner will go for review. When the commissioner is of the opinion that the adjudication order is not passed properly and the department is going for appeal, that is commissioner is going for appeal, we call it as review. Suppose if the order is correct, the assessee would have went for appeal. You understood? From department point of view, if the order is correct, then the assessee will go for appeal. So therefore department may file it as review. Then pre-deposit. What is the pre-deposit? Pre-deposit means whenever they make an appeal, they need to pay whatever the pre-deposit amount that is specified. But this pre-deposit is not applicable for department appeal, only in case of the registered person, that is the assessee who is going for appeal. How much is the pre-deposit? 100% of the admitted due. Due refers to tax, penalty, interest. Whatever is admitted, that is 100% should be paid, plus 10% of the disputed tax. So tax only 10%. So for example, order is 10 lakhs. The order is for 10 lakhs. So adjudication order is for 10 lakhs. Tax 10 lakhs, interest as applicable, penalty is 1 lakh. Okay, 10 lakhs, interest is as applicable 18%, and penalty is 1 lakh. Now against this order, I need to go for appeal. But when I am going for appeal, full order there is no dispute. In this order, so some amount already I have accepted. Yes, I have to pay. What is that admitted? What is that admitted? So say the admitted is 6 lakhs and 18% on that 6 lakhs and the penalty proportionately 60,000. Then what is disputed here? What is disputed? So the disputed amount, if you see, 4 lakhs and the interest on that 4 lakhs 18%, and it is 40,000. Now what will be taken as the pre-deposit? So the pre-deposit will be 100% of the admitted due. So this 100% I need to pay. So means admitted due means 6 lakhs plus interest 18% on that 6 lakhs for the period due date to date of payment, and 60,000 rupees penalty that I need to pay. Plus in this only disputed tax, not disputed due. On the disputed tax 10%. So that comes to 40,000 rupees. So literally what I am paying extra is only 40,000 rupees, because anyhow that 100% of the admitted due I have to pay and I have paid. So that is not extra. There is no dispute in that. That is the meaning. So anyhow you need to pay, you paid that. Whereas in whatever dispute is there, in the disputed tax alone 10%. So therefore 4 lakhs into 10%, 40,000. What if everything is disputed? What if everything is disputed? So 1 lakh will be paid. Simple. That is 10 lakhs into 10%. 1 lakh will be payable. That is this. And whenever you pay this 10%, that is subject to maximum 25 crores. For example, 500 crores is the disputed. 500 crores into 10%, 50 crores. But maximum 25 crores only. Under CGST, darlings, don't sleep. Okay. So 25 crores is only payable, but that is under CGST, and the same amount will be payable under SGST also. So which means that this 25 crores is under CGST, equal amount will be payable under SGST. So therefore total amount will be 50 crores. And in case when we are computing, be careful. So compute it on CGST, means whatever numbers that I have given is CGST only. So like this you need to separate CGST, SGST. On CGST only you need to compute pre-deposit if the question is about CGST Act. If the question is about general pre-deposit, then you take the total tax and you need to do the computation. Then in case of 129 penalty order, so on penalty order also we can go for appeal. Sir, that is route has changed, sir. What happened is that in e-way one location to another location we have given, but actually we could not go in that route. We are going in a different route. Because of going in a different route, so officer has stopped and he is telling that this route is not there in the e-way bill. As per e-way bill you should not go in this route. So therefore they have passed the seizure order, penalty order to pay. I don't have to pay penalty because I did not do any breach. So tax, that is whatever invoice I have generated, e-way bill I generated, but just because of the route I should not go. That is, I should not pay penalty. Why should I pay penalty? So therefore I am going to the first appeal against the penalty order. So in that case what will be the pre-deposit? As there is no tax involved, what will be the pre-deposit pa? 25% of the penalty, that will be pre-deposit. For example, if the penalty is somewhere 8 lakhs, so then how much I need to pay as pre-deposit? 25%. That is 2 lakhs I need to pay as pre-deposit. But this is applicable only in case of first appeal, not in case of second appeal. In second appeal there is no pre-deposit for penalty 129. Got it? This is only in case of first appeal, not in case of second appeal. For second appeal they did not give this. So this proviso is given only in case of first appeal, that is appeal to appellate authority. Whereas appeal to appellate tribunal they have not given. Because if you see the next row, even appeal for appellate tribunal also you can see pre-deposit. What is the pre-deposit in case of appeal to appellate tribunal? 100% of the admitted due in that second appeal plus 20% of the disputed tax, but this note is not there for the second appeal, that is appeal to appellate tribunal, which means be careful. Whenever you see the question that is against penalty order, they are going for appeal to the Commissioner Appeals or GST-80. If they are going for appeal to GST-80, you don't do any pre-deposit computation. The pre-deposit computation is only in case of first appeal, Commissioner Appeals in case of penalty order. Okay, so that is important. Then is there any appeal fee? No. So then pre-deposit we are paying, pre-deposit is not appeal fee. Pre-deposit is refundable. Actually how much extra we are paying? 10% in case of normal situations, 10% of disputed tax. In case of penalty it is 25% of the penalty. So suppose if we win the case, that amount will be refunded to us. But appeal fee, if you win the case, you will not be refunding the appeal fee. So that appeal fee is your cost. And in case of first appeal there is no appeal fee. Understood or not? Whereas what is the maximum time limit by which they need to pass the appeal order? So 1 year, but that is not mandatory, that is advisory only. So which means that appellate authority, that is first appellate authority is who? Commissioner Appeals or Additional Commissioner Appeals should ensure that they are passing the appeal order within 1 year, but that is an advisory time limit, not a mandatory time limit. So these are the provisions that is related to the first appeal. Now second appeal is made to whom? GST-80, appellate tribunal, and that appeal, second appeal is made against whose order? First appellate order, means Commissioner Appeals order or Additional Commissioner's Appeals order. So we will go to the GST-80, appellate tribunal, and in that case, so department also can go for appeal and that person also can go for appeal. Both will be called as appeal only, not called as review. So both will be called as appeal because the first appellate authority gave an order. Now the order is not adjudication order. Now the order is an appellate order. On the appellate order when you go to the tribunal, so that is normal appeal only. And for department, what is the time limit? 6 months plus 3 months. Assessee, what is the time limit? 3 months plus 3 months. Actually the same time limits are there. Extra condonation of delay only it is changing. So first appeal also 3 and 6. Here also 3 and 6. There 3 plus 1, 6 plus 1. Here 3 plus 3, 6 plus 3. That condonation of delay extra time limit only it is changing. But otherwise the regular time limit is same 3 months and 6 months. And pre-deposit again not applicable in case of department appeal. Pre-deposit is only in case that assessee is going for appeal, not to the department. And what is the amount of pre-deposit? 100% of the admitted due plus 20% of disputed tax. Sir, already I paid something. So differential amount I need to pay? No. So for example, continuation to this, order in original, tax, interest, penalties passed this way, and in that admitted this much, disputed this much. Now say this is confirmed, then we need to pay. So appellate order is not against our favor, so it is in favor of the department. Now what is OIA? What is OIA? Order in appeals. Tax 4 lakhs, interest 18%, penalty 40,000. Means whatever disputed, they confirm that we need to pay. So that is the outcome of the first appeal order. Now on this, what is admitted? What is admitted you need to see. During the first appeal proceedings, you might be knowing that yes, still we need to pay some more amount, that is known as admitted. Say 1 lakh is admitted, 18% and 10,000 rupees. And thereafter, what is disputed? So say the disputed amount is, so 3 lakhs and interest will be 18% and 30,000. Now tell me what is the pre-deposit. Sir, this 1 lakh, 18% and 10,000 we need to pay because that is admitted in the second appeal. Whatever is admitted in the first appeal you need to pay at the time of first appeal. Whatever is admitted during the second appeal you need to pay. What if you have not admitted anything in the second appeal? Then no need to pay that amount. Okay. Whatever is the disputed on the 20%. So 3 lakhs is disputed on the 20%. So that will be 60,000 rupees. So in the first appeal I paid 40,000 rupees, in the second appeal I paid 60,000 rupees. So therefore this is the extra amount what I paid. Suppose if I win the case, then that 40,000 also refunded and the 60,000 also refunded. Suppose if I lose the case and I decided not to go for further appeal, then already whatever 40,000 and 60,000 I paid will be adjusted from this 3 lakhs. So the baki balance amount we need to pay. You understood or not? So that is about the pre-deposit. Then fee not applicable in case of department appeal, but in case of normal person. So for appellate tribunal there is a appeal fee. What is that appeal fee? 1 lakh for every, that is 1,000 rupees for every 1 lakh, subject to maximum 25,000 rupees. For example, I am going for appeal and in that the disputed tax is 3 lakhs. Then how much will be the appeal fee? 3,000. For every 1 lakh or part thereof. Disputed is 3 lakhs only na. So for every 1 lakh or part thereof, it will be 1,000. For example, 3 lakh 60,000, 4,000 rupees, 8 lakh 40,000, 9,000 rupees. Suppose if it is 48 lakhs, 25,000 rupees. Why? Because the maximum fee, appeal fee will be 25,000 rupees. Then what is the time limit for disposal of appeal? Within 1 year they need to dispose of the appeal. Again here also it is not mandatory, means it's advisory. Then third appeal. To whom we will go for third appeal? After tribunal, High Court. High Court. Suppose if it is place of supply, Supreme Court, but if it is normal it will be High Court. And what is the time limit within which we need to make appeal? So within 180 days plus unlimited condonation of delay. So there is no time limit for condonation of delay on account of proper reasons. So yes, High Court can condone the delay for any period. But the statutory time limit given is 180 days. And then who can go for appeal to High Court? So any person, department or assessee can go for appeal. Against which order? The order passed by state or area bench. State or area bench will pass order when? If it is other than place of supply. And pre-deposit and fee, we don't have any provisions because I told you the provisions related to appeal to High Court and Supreme Court are governed by CPC, Civil Procedure Code. Then fourth appeal. Fourth appeal we will be making to whom? Supreme Court. Against whose order? Either national bench or regional bench of GST-80 or High Court order. Okay. So then time limit, appeal fee, pre-deposit, everything we don't have because that is as per CPC. Then for the matters relating to question of law, so we can go up to Supreme Court. But for the matters relating to question of fact, we can go up to GST-80. So whether 12% is the rate or 18% is the rate. So it is a question of law. We can go up to Supreme Court. So what is the value to be taken? We can go to Supreme Court. Whether it is a supply or not a supply, we can go to Supreme Court. Whether e-way bill has been generated or not, that is a question of fact. For that and all issues related to that, we cannot go to Supreme Court and all. The ultimate fact finding authority is tribunal. Okay. So maximum we can go up to GST-80 only about the question of fact. But about the question of law, we can go up to Supreme Court. Then monetary limits for filing appeal. For department not yet notified. So that is beyond this amount only department can go for appeal, like that. There is no monetary limit, which is there in income tax but not there in GST. Then when assessee is going for appeal, that too to GST-80 may refuse if the amount does not exceed 50,000 rupees. Suppose if the disputed amount does not exceed 50,000 rupees, they may refuse, because for small cases and all, so why their time needs to be wasted. So that's why, but it is not shall, it is may. Suppose if there is a question of law, substantial question of law, amount may be small, but there is a substantial question of law, they may admit that appeal. So this restriction is to whom? For the first appeal, is there any limit? Sir, even 10,000 you can go for appeal, sir. Even 10,000. But for the second appeal only, that 50,000 point will be applicable. And interest on refund of pre-deposit. The interest rate is 6% per annum. On pre-deposit, the interest rate is 6% per annum, computed from the date of deposit till the date of refund, not 61st day. Generally, refund interest will be from 61st day. But in this case, it is not 61st day. Means the date when I am making the payment till the time I am getting the refund. So that interest will be paid at the rate of 6% per annum. And there are some non-appealable orders. What are non-appealable orders? So which means on that we cannot go for appeal. So number one, order related to transfer of proceeding from one officer to another officer. Suppose if they have changed the officer, proceedings from one officer to another officer, because that officer may be transferred to some other place. Then in that case you cannot say no, I like that officer only, I want that officer only, like that you cannot go for appeal. And seizure or detention of books of accounts. So for seizure or detention of books of accounts, registers or documents, on that seizure order you cannot go for appeal. For example, no, department will be coming directly to the premises and they will be taking away the registers, account books, computers, hard disk, etc. and all. On that you cannot go for appeal. But sir, on seizure of goods and conveyance, can we go for appeal? Yes. So because if you read carefully, only it is given as books of accounts, registers and documents. Then on seizure of goods, can we go for appeal? Yes. Seizure of conveyance, can we go for appeal? Yes. So only on this books of accounts, registers and documents we cannot. Then order sanctioning prosecution, that is imprisonment order. On imprisonment order also we cannot go for appeal. And order sanctioning payment of dues in installments, already I told you, that is they are giving 18 months but you want 24 months, on that you cannot go for appeal. Imprisonment order means already they have passed the imprisonment order, on that appeal is not possible. But sir, can I go for writ petition and all? Yes, writ petitions are possible, but these are the non-appealable orders in the regular appeals. But on that definitely you can file a writ petition to the High Court and Supreme Court, okay. But for exam purpose that will not be tested. For exam purpose, what are the non-appealable orders? These four. That is number one, order transferring the proceedings, seizure order for books, accounts and documents, prosecution order, and order for payment of money in installments. Then next, revisional authority under GST. Revisional authority is like a whistleblower mechanism in GST appeals. That is, whenever there is an adjudication order and against that adjudication order, department is not going for appeal and that registered person also not going for appeal. Means both of them are satisfied with the order. How come one order both of them are satisfied? So then there is something fishy. So maybe the officer would have taken some money and would have passed an order in favor of the registered person. For that reason, revision authority will take up that order for revision. So when the revision authority take up that order for revision, so they can enhance, modify, annul, so they can do anything with respect to that. So that is this. Revision authority is appointed for, underline, revision of adjudication orders. Appellate orders and all revision authority should not touch. So they should take only adjudication orders. And revision authority may on its own motion, that is voluntarily they can take, or upon information received by it. Sir, one officer constructed one big bungalow, sir. Okay, then you would have taken bribe, take up all the orders that he has passed. So that is that. On request from the commissioner. So commissioner is telling, sir, I did not get proper share, sir. So then also revision authority may take up the order for revision. You understood or not? So on its own motion, upon information received by it, or on request from the commissioner, call for and examine the record of any proceedings. And if it considers that any decision is erroneous in so far as it is prejudicial to the interest of revenue, what they can do, and if they feel like it is illegal or improper or has not taken certain material facts, these wordings you should register. That is, if it is prejudicial to the interest of revenue, if it is illegal or improper, or has not taken into certain material facts, then that revision authority can stay such order, and making after further inquiry they can either enhance, increase or modify. Modify means decrease, okay, or annul, that is cancel, so the said decision or order. But this modifying or annulling, I have a doubt. So it is only enhancing, because first of all they take up this order if it is prejudicial to the interest of the revenue, okay, due to that reason. But okay, so for fine, even other case also they are given illegal or improper, have not taken into material facts. But the motive is that whenever they feel like some extra amount needs to be collected, so then only they will take up that revision order. But as per revision order, can they increase, sir? Yes, they can increase. Can they decrease, sir? Yes. Annul? Yes. And whenever they are increasing, they should definitely give an opportunity of being heard, you remember. So whether appellate authority increases the amount or revision authority increases the amount, whomsoever is increasing the amount, they need to give an opportunity of being heard. Means a notice to be given before increasing. That is a common point. Then no revision in certain cases. What is this no revision in certain cases? On that order already appeal has been filed. So then in that case revision authority will not touch. Why revision authority will not touch? If it is going for appeal, anyhow appellate authority will verify that case. So due to that reason revision authority will not be touching. However, on that appeal there are some grounds on which we are going. For example, so adjudication order covers 4 transactions. On 3 transactions we went for appeal, but 1 transaction we accepted. Now revision authority can take up the order for revision with respect to that 1 transaction on which we did not go for appeal. That is this. However, revision authority may pass an order on the point which has not been decided or raised in an appeal. Then, so what is the first restriction with respect to revision authority? So if the order is subject to appeal, they will not revise that. And number 2, order has already been taken for revision. That is, already one order has been taken for revision and they have not revised anything. They drop that order on merits, which means that everything is proper. Now another revision authority will not come and touch that order. Okay. So in Tamil there is one dialogue. So nee tottadu na todamata andamari. Okay. So that is, if you are touching it, I will not touch it. In not double meaning, single meaning. So then order sought to be revised is a revision order. What is this? This example and all I cannot give. That is, order sought to be revised is a revision order. One officer has taken up the order and he revised that order. Everything completed. Another officer will not come and touch. Okay. So that is this. Then next part. So no revision in certain cases. What are they? Number 1. So order is subject to an appeal and already order taken up for revision, and order passed is on a revision order. Already revised. Again it will not be revised further. Then what is the time limit for taking the order for revision? Appeal filed. That is, what is the time limit within which revision authority should take up? Sir, revision authority cannot take up that order now, sir, because appeal is filed on that order. But however, there are few grounds on which they did not go for appeal. They can do the revision. What is the time limit? 1 year from the appellate order, 3 years from the adjudication order, whichever is later. Whichever is later. What does it mean? For example, you take say adjudication order is passed on 31st December 2022. Adjudication order is passed on that date, and on that the assessee went for appeal. So there are total 4 transactions. So with respect to 3 transactions, they went for appeal. And this appeal is filed on 4th February 2023. With respect to 1 transaction, appeal is not filed. So now, what is the time limit within which revision authority can pass a revision order with respect to this 1 transaction? So revisional order, what is the time limit? Come on, tell me. Revisional order time limit. With respect to this 1 transaction, they can do the revision. So what is the time limit for revisional order? A, that is 3 years from the adjudication order. 3 years from adjudication order means 31/12/2022 plus 3 years, 31/12/2025, and 1 year from the appellate order. So when you go for appeal 4/2/2023, the appeal might have come out, that is the decision might have come out, 1 year is only recommendatory. It is not mandatory, which means that can take even 2 years also. Say for example, somewhere on 7th July 2024 it came. So 7th July 2024 outcome of the appeal. Now B, 1 year from the appeal outcome. What is the appeal outcome? 7/7/2014 1 year, 7/7/2025, 7/7/2024 plus 1 year, 7/7/2025, whichever is earlier or whichever is later, that is revision authority can pass the revision order by 31/12/2025. So that should be taken as the answer for this. So 1 year from the appellate order, not appeal date. Appellate order means appeal outcome, or 3 years from the adjudication order, whichever is earlier. Suppose if appeal is not at all filed, after 6 months from the date of adjudication order, means they can take up the order for revision only after 6 months. What is the logic behind this 6 months? In this 6 months, either department can go for appeal or the assessee can go for appeal. Because if you see the first appeal time limit, 3 months for registered person and 6 months for the department. So within that time they can go for appeal. That's the reason why revision authority will take up the order after 6 months from the adjudication order, and thereafter within 3 years from adjudication order, means in the 2.5 year time limit only they can do the revision. Understood? After 6 months and within 3 years from the order. And while computing this 3 years, two limits should be taken out. Already we discussed in adjudication order itself, we discussed the 2 limits: stay, and then already that case is in appeal. So see that. So when the issuance of revision is stayed, so that should be excluded while computing 3 years. And period spent in the appeal under similar issue in tribunal or high court, that should also be excluded. So these 2 points is same in demand order. This is also there in demand order. Okay. So that is with respect to appeals. We completed. These are the points which will be tested. And now look into accounts and records. Look into accounts and records, page number 106. Page number 106. It's a small topic, only 2 sections are there, section 35 and section 36. 35 talks about what are the accounts and records to be maintained by a person and for how much period he need to maintain that accounts and records. So what are the accounts and records to be maintained by a person? I formats. Remember with the keyword I formats. I for inward supplies. F for foreign trade, that is import and export. O for outward supplies. Then R for RCM supplies. That is whatever is the inward supplies, on that he need to pay GST and or RCM, he need to separate RCM purchases. Okay. And then M for manufacture and production related details. A for advances received, paid and adjusted. So whenever we have received some advances from the sales, so that to be adjusted in future, that one. Suppose on purchases we paid any advances, that one. So advances should be separately maintained. And then so T, that is tax details, input tax and output tax, and S is stock details, that is which place, how much stock we are maintaining with respect to the produced quantity. So these are the accounts and records to be maintained by every registered person as per section 35. However, a person opting for composition scheme is also required to maintain accounts and records, but not the last 2 ones, that is tax details and tax stock details not required. So it is I forma for a person opting for composition scheme, but for a regular person who is opting for normal scheme, it will be I formats. And here it says that where these accounts and records to be maintained. So whenever you write this, suppose if you get a short note question, what are the accounts and records to be maintained by a registered person, don't write literally like this. Okay, if you write like this, maybe 2 marks you will get for 4 marks. So then what you need to do? So write it like auditing paper, how you will write. So a lot of things you will add and write now. So that is inward supplies along with the details of invoices, debit notes and credit notes issued by the suppliers, and with the details and names of the suppliers. Correct? Right. So then only you will get marks. Okay. So if you write like this, inward supplies like that, no. So fully you need to. So along with inward supplies, you need to write the documents. What are the documents? purchase invoices, debit notes, credit notes, and the supplier name and address details. Then outward supplies. So sales invoices, tax invoices, if it is exempted supply, bill of supply, if it is not under supply, delivery challan, right? Whatever you learnt in GST, you write pa, okay? So then, as per section 35, the above records to be maintained by every registered person in where principal place of business and records pertaining to additional place of business in each additional place of business. So all the businesses records should be there in principal place. But in additional place, what records should be there? The records pertaining to that additional place should be there in the additional place of business. And what is the period for which this accounts and records will be retained? Suppose if it is normal cases, 72 months. 72 months from the due date of furnishing annual return, which means that 6 years. 6 years, but don't write it as 6 years, you write it as 72 months because in the law they have given it as 72 months only. So 72 months from when? From the due date of furnishing annual return. And if it is appeal, suppose in any one financial year you went for an appeal, then accounts and records you need to maintain till 72 months from the due date of furnishing annual return or 1 year from the outcome of appeal, whichever is later. Whichever is later. Somewhere this point came already. Revision authority, 1 year from the outcome of appeal, 3 years from the adjudication order, whichever is later. Here it is like 1 year from the date of appeal and 72 months from the due date of filing annual return, whichever is later. And every transporter or warehouse keeper, sir, even though not registered, they should also maintain some accounts and records in GST. So even unregistered transporters and unregistered warehouse keepers should get a unique enrollment number. And UEN, not UIN, UEN, unique enrollment number, and they should also maintain some accounts and records. That is this note, okay? So this is about accounts and records, and next you take advance ruling pa. Where is it? So page number 120, advance ruling. So who is the authority? Advance ruling authority. So that will be appointed by the government, and we don't have national advance ruling authority. First of all, advance ruling is for the purpose of giving a decision with respect to a particular question. What is the question on which advance ruling will be given? So generally, when we learn the syllabus, okay, subject, so first what we will learn? Supply. Then we will learn exemptions, liability to pay tax. Next, value of supply, time of supply, place of supply, input tax credit, registration. Up to this registration chapter, except place of supply, on remaining chapters we can go to advanced ruling. So what are the questions on which we can go for advanced ruling? Supply, okay, then classification, that is supply of goods versus supply of services, valuation, registration, tax liability determination, time of supply, input tax credit, and exemptions. Applicability of notifications means exemptions, okay. So from introduction to GST to registration, module 1, okay. So that except place of supply, on all chapters we can go. Place of supply is not there. Sir, place of supply, offences, penalties, appeals, returns, departmental procedures, we cannot go for advanced ruling. You understood or not? And then some ineligible questions, place of supply, returns and payment process, penalties, appeals, etc. we cannot go for advanced ruling. And whenever we go to advanced ruling, they pronounce a ruling. That ruling will be binding on whom? On the applicant and the department only. Suppose I also have the same issue. So can I rely on that advance ruling? No. Advance ruling given on an applicant will be applicable only to that applicant and will not be applicable to other person, and every other person who want advance ruling also they need to go. Moreover, so as this advance ruling is a state level advance ruling authority, for example, so you take a MNC which is there in say 5 states. So in one state they got an advance ruling. Can they rely on that advance ruling in the other states? No. Then in all 5 states they need to get the advance ruling separately, okay. So authority for advance ruling. So this is a state level authority. There is no central AAR. So separate AAR is there for each state. Now this advance ruling authority will be one person or group of persons, so they will give the ruling, they will pronounce the ruling. What if there is difference of opinion among them? So then the question will be forwarded to appellate authority for advanced ruling, triple AR, double AR and triple AR. Double AR is authority for advanced ruling, triple AR is appellate authority for advanced ruling. Possibility of difference in opinion, in such situation application shall be referred to triple AR. And when the application can be made? Sir, only before starting that activity I should make application? No. So even with respect to ongoing activity, already I started that supply. So now also I can go for advanced ruling. And whether registered person only should go for advanced ruling? No. Whether registered or unregistered can go for advanced ruling. What is the advanced ruling fee? 5,000 rupees under CGST and 5,000 rupees under SGST. And is there any withdrawal of application? We don't have any provision. What is the time limit within which they will give the ruling? Within 90 days from the date on which we make application, they need to pronounce the ruling. Okay. Somewhere already we discussed 90 days. Where is that? Provisional assessment order should be passed within 90 days from the date when we make application for provisional assessment. Okay. So that is this. See, this time limits, monetary limits, be strong. Okay. Because that is the place where MCQs are being tested. Okay. So lot of, because if it is an open book system, it will be good. We can refer and write, but it is not an open book system, not yet. Maybe in future it will be coming in new syllabus. They are announcing that it will be open book system. Let it come. Okay. So it's good only, no, for you. So for you it is good only. For teachers only it is bad. What will happen? We don't. What will happen? I don't have any problem. So I will go for some other subject or Nungambakam. Lot of areas are there. One day, one area I will go. So they will put money. So no issue. But I am telling. So therefore, this 90 days from the date of application and rejection of application. Yes, if the matter is pending in or decided by any court or tribunal, on which advanced ruling cannot be given. That is, if the question is already in appeals. So the dispute, that is, there is a issue whether services provided by employer to employee for a consideration but at a nominal amount, is it supply or not a supply? The case is in the court of law. On that, if you go for advanced ruling, they will not pronounce the advanced ruling because the issue is in appeals. Clear or not? Then next, once advanced ruling authority passes an order, on that we can go for appellate authority for advanced ruling. And this appellate authority for advanced ruling, same time limit, 90 days from the date of application they need to pronounce. But what is the time limit in which we need to go for appeal? Generally, what is the time limit for going for appeal? General appeal, 3 months. But here it is not 3 months, it is 30 days. Remember, 30 days plus it can be extended for a further period of 30 days. This is the time limit within which we need to go for appeal to appellate authority for advanced ruling. And suppose, is this appellate authority a national level appellate authority? No, again this is also a state level authority only. And if there is any difference of opinion amongst the members, what will happen? They will not pronounce the ruling and advanced ruling is not possible, so they reject the application, which means that ruling cannot be made. Then what we need to do? Go to a chartered accountant, he will help. Then what is the fees? The fees will be 10,000 rupees CGST and 10,000 rupees SGST. So there, so double AR 5,000, triple AR extra one is there na. So that's why 10,000 rupees double. 10,000 plus 10,000. 10,000 under CGST, 10,000 under SGST. So this is about advanced ruling. And we completed all small topics which are irritating ones and which you will not be preparing. So which you will feel like lot of things are there here, how to remember all those things, this much only. Okay. So but when I take the regular class, so I have to explain everything in detail, so that's why it will be taking time. Okay. So but otherwise this much only it is there. And now we will look into this practical areas. Okay. So morning we completed all theory areas. So now we will move on to value of supply. So please look into valuation under GST. What's the page number? And after value of supply, we will complete composition scheme also. Okay. So look into page number 46, value of supply, section 15. So section 15 is the only section that we have on value of supply, but we have many rules related to this, starting from rule 27 to rule 35. So value of supply section 15 subsection 1 says that value will be transaction value. What is transaction value? Price actually paid or payable. And this value of supply so will be taken as transaction value if two conditions are satisfied. What are those two conditions? Price must be the sole consideration. Supplier and recipient are not related. So morning onwards, one point also you didn't tell. And now you are telling this. Why? So that much you prepared this. Good. So then what are the inclusions to be made in the value of supply? See this. Section 15 subsection 2 talks about the inclusions, and in that section 15 subsection 2, so along with clause you remember, okay, like how you will be learning very much like this, so everyone will write sections, okay, so you need to write with clause, then only your paper will be separate, okay. So section 15 subsection 2, section 15 subsection 2 clause A. Okay, section 15 subsection 2 clause A says that all taxes, duties and cess by whatever name called other than GST should be included. So which means whether we need to include GST while determining the value? No, but all other taxes we need to include. And what about this TCS? Whether TCS should be included? No. TCS is not a tax, it is an interim levy and that is not required to be included. What about TDS deducted by the recipient? Should that be included? Yes. TDS deducted by the recipient should be included because TDS is nothing but our indirect consideration only. So therefore that should be included. What about equalization levy? Whether equalization levy also to be included? Yes. Equalization levy also to be included while computing the value. So any tax, duty and cess by whatever name called other than GST should be included in the value. And in this regard, so rule 35 we need to learn. Rule 35 says whenever we are collecting from the recipient a total amount and that is inclusive of GST we need to take, because if we are not charging GST separately, generally every person has to charge GST separately as per section 33. There is one section 33 which says that the tax component should be shown separately in invoice. Suppose if you are not collecting tax, means you don't know that you need to collect the tax, you collected some amount, then whatever amount that we are collecting itself will be inclusive of GST, will be inclusive of GST. So that is what section rule 35 says, okay. And this taxes, duties or cess by whatever name called other than GST should be included in the value. That is 15.2a. Section 15.2b. Section 15.2b says, so recipient incurring expenditure on behalf of the supplier. So recipient is incurring some expenditure on behalf of the supplier. Any amount that the supplier is liable to pay, but which is paid by the recipient should be included in the value. Supplier has to meet a liability, but which is paid by the recipient. It's indirect consideration to the supplier. For example, supplier purchased the raw material for which recipient is making the payment. Why recipient is making payment to the raw material supplier on behalf of the supplier, original supplier, which means that any amount that the supplier is liable to pay but which is paid by the recipient should be included in the value. That is recipient incurring expenditure on behalf of the supplier. Section 15 subsection 2 clause C, that is supplier incurring expenses and thereafter it will be recovered from the recipient. So that is known as, reimbursable expenses or incidental expenses or ancillary expenses should be taken. But in this regard, there is one important point, that is any expenditure incurred by the supplier and charged to the recipient will be divided into two. That is incidental expenses and other expenses. Incidental expenses means without that the supply cannot be made. Other expenses means even without that the supply can be made. So usually I will be telling in the class that if you order dosa, chutney and sambar is incidental expense. Without that you cannot eat. So whereas vadakari or vada, etc. will be coming under other expenses. It will not be required to eat dosa, but it will add value to the dosa. Therefore, it will be other expenses. So, incidental expenses, whenever it will be charged, it should be included in the value. Whether it is before delivery or after delivery, or before supply of service or after supply of service, incidental expenses should always be included in the value. But sir, already supply made, I prepared the invoice. You said that it should be included in the value. How I can include in the value? Give debit note. Give debit note. That is not a separate transaction. Give debit note. Debit note is issued by the supplier to the recipient whenever there is an increase to the invoice value. For example, installation. Installation is an incidental expenses. Installation of AC. First you purchase the AC. They did not collect the installation amount along with the sale of AC. So they collected some 35,000 rupees for AC and they need to only do the installation. They are coming to your place and they are doing the installation. For the 2,000 rupees they are collecting. This installation they should not give a separate invoice. For this installation they should give a debit note. Why? Because it is just enhancement to the value. So incidental expenses should always be included in the value whenever it is incurred. Whereas other expenses, the other expenses again divided into two. Whether it is incurred or charged before or at the time of delivery of goods or supply of services, then include it. If it is charged or incurred after delivery of goods or after supply of service, it will not be included. For example, the sale is X showroom. X showroom. X showroom means, so at the showroom itself the sale is concluded. Now you are requesting them to do the transportation. They do the transportation. Will that be included in the value? No. Because the transportation is other expenses and when it is other expenses incurred after delivery of the goods, because in X showroom case the goods are delivered at the showroom, then the sale is completed. Thereafter if they are recovering from you some extra amount, that will be after delivery of the goods, it will not be included in the value. So there then some customization charges etc. and all will be post supply and that will not be included. Suppose if it is packing charges is incidental, so definitely it should be included in the value whenever it may be. Usually it will be before delivery. Whereas packing at the request of the buyer, is not incidental, it is other expenses because it is at the request of the buyer. Generally there will be some packing, but this is a special packing at the request of the buyer, so therefore it is to be included in the value. Why? Because it is other expenses. When is it charged? Before delivery of goods or after delivery of goods? Before delivery of goods. So therefore it should be included. So this analysis you need to do in the exam hall when you see the question about inclusions and exclusions, because in case of 15(2)(a) it will not be a problem, directly it will be given. In case of 15(2)(b) also not a problem, it will be directly given. 15(2)(c) is the place where we get confused whether it should be included in the value or not. So that's why you follow this thumb rule. Is it incidental or other? Incidental, definitely include, don't see anything else. If it is other expenses, you need to include it in the value provided it is charged to the buyer before or at the time of supply of goods or supply of services. Suppose if it is after delivery of goods or after supply of service, it will not be included. That is about yes. And whenever you are applying this expenses point, one more point also you need to check whether it is expenditure incurred as a pure agent. So pure agent expenses should not be included in the value. What is expenditure incurred as a pure agent? First, to be called as a pure agent expenditure, it should be the liability of the recipient incurred by the supplier as a pure agent of the recipient. Then only it will be excluded. So expenditure, both are expenses only, expenditure incurred by the supplier and charged to recipient. But check whether that expenditure is the liability of the supplier or the liability of the recipient. If it is liability of the recipient, for example, income tax return filed where income tax is paid. Income tax is the liability of the recipient, but which is paid by the supplier on behalf of the recipient as a pure agent. So that income tax will not be included. Suppose if it is for filing income tax return, if there is any charges that are incurred, traveling charges are incurred, so then in that case should it be included? Yes, because it is not the liability of the recipient. Supplier has to incur the charges. So he incurred it and he is recovering it from the recipient, therefore it should be included in the value. And here when a person will be called as a pure agent, so 4 conditions should be satisfied, then only a person will be called as pure agent. So the moment you see the expenses, what you need to interpret, is that expenses the liability of the recipient? Yes. Incurred by supplier? Yes. As a pure agent? Yes. When he will be called as a pure agent? 4 conditions. Condition number 1, So recipient should authorize the supplier to incur that expenditure as a pure agent. Means there should be a contractual agreement between the supplier and the recipient authorizing the supplier to incur the expenditure. Condition number 2. So supplier recovers only the actual amount. He is not adding any margin, he is not adding any profit to it. Recovers only the actual amount. And condition number 3 says that so the title for that goods or services so procured should not be in the name of the supplier, should be in the name of the recipient. And number 4, so that is the so goods and services so procured, whatever expenditure that supplier is incurring is not for the personal purpose of the supplier, it is purely for the recipient. Now in this case, so 4 conditions you can see in the next page. Supplier should enter into agreement with recipient to act as a pure agent. Supplier should recover only the actual amount incurred. Supplier should not hold title to the goods or services so procured, and supplier should not use the said goods for his personal purpose. Then one more point. Okay, so see this, that is I was discussing about this pure agent 4 conditions. Then one important point here is that my expenditure is exempted. The expenditure is exempted, but when I recover that expenditure, I have to pay GST on that. So many students will get this doubt. For example, toll charges is exempted. When toll charges is exempted, so what I will do when I incurring that, I am travel service provider, I incur some toll charges. Generally toll charges are exempted, so therefore I will not pay any GST on toll charges, and along with the regular amount I will add the toll charges also, and I will recover from you, correct or not? Trip charges plus toll charges, whatever is paid. Now suppose if 5% is the GST payable, now that 5% I am paying even on toll charges. Sir, but toll charges is exempted na. Toll charges exempted, but the moment when I recover it from you, it is not called as toll charges, it is reimbursable expenses. It will be included in the value of original supply, so its character will change, so it will derive the character of the original supply. Is it clear or not? Means reimbursable expenses. For example, Resident Welfare Association will be incurring some electricity charges. That electricity is actually exempted. So now that electricity charges, they will average on all the flats and they will be recovering it from the flat owners. I am not talking about flat electricity charges, I am talking about common area electricity charges. In that case, actually electricity is exempted, but when they are recovering it from the flat owners, so then suppose if the maintenance charges per month exceed 7,500, entirely it will be taxable, correct or not? There is one point about Resident Welfare Association collecting maintenance charges per month per member. If it exceeds 7,500, entirely taxable. Now in that case, that electricity charges is exempted. So the moment when you are recovering it as maintenance charges, adding these electricity charges, then that electricity charges also will be taxed. So don't forget this point. Even though that is exempted, that service is exempted, but when you are recovering that as a expenses, and in that case if that expenses needs to be included, so definitely you need to pay GST on that expenses also. But when it is included, you don't have to worry about the rate, you need to take the rate applicable to the original, whatever is the original supply, that will only be taken. In all the inclusions, we need to follow the rate applicable to the original supply, because it is just inclusion into the value. Got it? It is not an independent supply. If it is an independent supply involved in a similar transaction, then we are applying composite supply, mixed supply concept, and we are arriving at the rate of GST. Okay pa? Then that is this point about pure agent. So expenditure incurred by the supplier and recovered from the recipient, that is 15.2c. Section 15.2d. Section 15.2d is what? Interest. Interest, late fee, penalty for delay in receipt of consideration. That interest should be included in the value. And usually in the absence of information in the question, you need to take interest alone on inclusive basis. So generally every amount will be taken on exclusive basis in the absence of information in the question, but interest alone please calculate on inclusive basis and give a clear cut note that as there is no information in the question, so interest is assumed to be inclusive of GST, that you need to take as a common assumption. And this interest assumed to be inclusive of GST at what rate? So interest is never a separate supply. Interest is included in the value of original supply. So if the original supply is taxable, this interest also taxable. If the original supply is exempted, this interest is also exempted. Don't forget this. Interest is not a standalone supply. Interest is to be included in the value of supply and needs to be taxable accordingly. Suppose in that invoice, if we have a taxable supply and the tax rate, then the interest on account of delay in payment of that invoice, this interest also will be taxable at the same rate. Suppose in the invoice, if there are exempted goods, for that invoice, if for that bill of supply, if the money is not paid, then if we are collecting interest, on that interest there won't be any GST, because this interest will derive the character of the original supply. And what if in the original supply, there are more than one rate? For example, invoice has product A, product B and product C. So this product A, B, C is having a rate of 12%, 5% and 18%. Now in that case, so say 1,12,000, 1,05,000 and 1,18,000. Now put together some total is there. Now for this invoice, some interest is collected. So interest is say 15,000. 15,000 is collected as interest. Now what we need to do this 15,000? We need to divide this 15,000 with respect to three products A, B, C. In what ratio? In this ratio. So 1,12,000 is to 1,05,000 is to 1,18,000 ratio. We need to divide this interest. So interest 15,000 into, so 112 divided by, what is the total? 335. So that will be, so 5,015. 5,015 will be taken as the interest for product A. Now this 5,015 will be chargeable to GST at what rate? 12%, because product A is at 12%. So therefore this will also be at 12%. So into 12 divided by 112 will be taken on inclusive basis. So into 12 divided by 112, if you see, so that will be 537 will be taken as the GST payable on this interest. So this is how we need to compute the interest. Be careful with respect to this. So don't take the general rate applicable 18% and all on interest. So interest derives the character of the original supply. So that is with respect to 15.2D. So 15.2D, interest, late fee or penalty for delay in receipt of consideration. And 15.2E. 15.2E is subsidy from other than central government or state government. So first, subsidy needs to be understood as, an amount received. So irrespective of supply, if you have received it, that is not directly linked to the price. Irrespective of supply means what? So not related to the supply of goods or services. Generally you are receiving some subsidy that is not directly linked to the price. Ignore that subsidy. Don't take any treatment for that subsidy. Ignore it. It will never come into the value because it is not having a connection to the value. But if the subsidy is from any person and that is directly connected to the price, when it is directly connected to the price, with respect to every product sold, I am receiving some subsidy. With respect to every service rendered, I am receiving subsidy. Then in that case, subsidy is directly connected to the price. Then what should I do? I need to take that subsidy from CG or SG or others. If it is from CG, SG, it will not come into the value. Why it will not come into the value? Subsidy from CG or SG is not treated as consideration as per the definition of consideration, section 2 clause 31. So therefore it will never be coming into the value. But subsidy from others directly into the price, it should be included in the value. So that is this. So subsidy received by supplier from central government or state government, it will never come. And from others directly into the price, it should be included in the value. So general subsidy, you treat it as donation and you should not take it into the value. Simply you need to ignore this. Simply you need to ignore this and we will be treating it as donations. Okay. Then there are two views that will be possible in a question. The question says the given price is after considering subsidy, the given price is without considering subsidy. Like the two views will be there. Suppose if the price is after considering subsidy, what does it mean? Means they deducted this subsidy already. Whatever subsidy given is deducted and they arrived at the price. So that is known as price after considering the subsidy. For example, let's take the price given is 15,000 and subsidy from SG. subsidy from SG 2000, and subsidy from NGO is 3000. So now there are two views that can be taken. View 1 says what? You take that 15,000 as after considering the subsidy. After considering the subsidy means let 18,000 be 20,000 be the price, 20,000 minus 5,000, we got 15,000. So this 15,000 is after reducing that 5,000. This 15,000 is after reducing that 5,000. So therefore what will be taken as value? So value will be first 15,000 we will take. Subsidy from state government to be excluded, and in the given price it is already excluded. So therefore ignore. Subsidy from state government we will not take. And subsidy from NGO to be included or to be excluded? To be included. In the given price it is not included. So we need to add back. So therefore 18,000 will be taken as a value. This is view 1. When you take the view that the given price is after considering the subsidy. Whereas another view can be taken, that is view 2, the given price is without considering the subsidy. Means this 15,000 itself is the price before subsidy. Still they have not reduced 2,000 and 3,000 rupees. Then again you take the same way. Value will be 15,000. Subsidy from state government to be excluded. In the given price it is not excluded. So we need to deduct. And subsidy from NGO to be included. Correct? And it is already included. So therefore ignore. So therefore 13,000 will be taken as the value. So which view we need to follow? It depends upon the question. Question clearly says the given price is after considering subsidy or the given price is without considering the subsidy. Suppose if the question is silent, you follow view 1. You follow view 1 because ICI in many questions have followed view 1 only when the question is silent about the price after considering subsidy or without considering the subsidy. So you need to always follow view 1. So that already I gave as a note. When the question is silent, assume that the price is given after deducting a subsidy is an income. Okay, so we need to consider the price is after deducting subsidy when the question is silent. Otherwise we need to follow whatever the question says. So that is with respect to the subsidy. So what are the various inclusions pa? You remember TRSIS. Okay, TRSIS. So TR, like that one actor used to be there, and he is famous for sister sentiment. Okay, so TRSIS. This is the inclusions to be made in the value of supply. Okay, so section 15(2)(a), come on, taxes, duties and cess other than GST. 15(2)(b), recipient incurring expenditure on behalf of supplier. 15(2)(c), supplier incurring the expenditure and charging it to the recipient. 15(2)(d), interest, late fee or penalty for delay in receipt of consideration. 15(2)(e), subsidy from other than CG or SG directly linked to the price. Then so there is one circular related to passenger service fee and user development fee, that is generally airport will be charging passenger service fee and user development fee from the passengers because they are giving the passengers the access to the airport. But this amount will not be directly collected by the airport but will be collected by the airport from the airlines. And whenever airlines we book one ticket, along with the ticket airlines will be collecting from us that user development fee and passenger service fee, and they will be remitting it to the airport. So now airlines is acting as a pure agent with respect to this UDF and PSF. This UDF and PSF will be not expenditure incurred by the supplier and charge it to recipient, but they are acting as a pure agent. How? First of all, it is not the liability of the airlines, it is the liability of the passenger, but which is paid by the airlines, and there is a contractual agreement where airlines will be incurring that expenditure, and that UDF PSF, whatever they have paid, that much only they will be recovering, and that is not for their purpose, it is for the passengers purpose. And then the invoice, usually invoice and all will not be there, airport will not raise any invoice. Suppose if airport raises any invoice, definitely that will not be in the name of airlines, that will be in the name of the passenger only, but usually that will not be there. So therefore it will be treated as expenditure incurred as a pure agent and it will not be included in the value. So airlines will be collecting ticket fare. Along with ticket fare, they are collecting UDF and PSF. Should that UDF and PSF be included? No, it is not required to be included. That is this circular. Okay. So passenger service fee and user development fee are collected by airline operators from passengers, are remitted to airport operator and falls under the expenditure incurred as a pure agent. Next, exclusions from the value of supply. section 15 subsection 3. Section 15 subsection 3 says that discount will be excluded from the value of supply, and discount is divided into 3: trade discount, cash discount, end of season sale discount. These are examples. So what is this trade discount? Discount is given before or at the time of supply. And cash discount, discount is given after supply, but the terms are agreed before or at the time of supply. And discount is given after supply and the terms are not agreed, so before or at the time of supply. So we have pre-supply discount and post-supply discount. Pre-supply discount is always allowed as deduction, because at the time of preparing invoice itself we know that we are giving a discount. So that much discount we will show as a reduction to the price, and the balance amount only we will be collecting from the recipient. So GST naturally payable on the balance amount. Whereas when it is a post-supply discount, then only the problem will arise, because already we prepared the invoice. So in that case, whether the post-supply discount is allowed as a reduction. If it is terms already agreed at the time of supply or before supply, yes, it is allowed as a reduction. How it will be allowed as a reduction? By way of credit note. So supplier can give a credit note to the recipient, and because of it the supplier's liability will come down. Suppose if the invoice value is 10,000 plus GST of 1,200, and now in this case a cash discount of 5% is given. So then cash discount 5% means it will be 560. 560 is the cash discount, 5%. Now in this case what supplier should do? Supplier should give a credit note for 560, and in that case what happens? The supplier already would have had a liability of 1,200, paid a liability of 1,200. Now whenever they give a credit note in that month, when they report that credit note in GSTR1, who report the credit note in GSTR1? Supplier report the credit note in GSTR1. The supplier's liability will come down by 60 rupees. Okay. So in this 560, what will be the value? 500, and GST component will be 60 rupees. So therefore, whenever they issue credit note, supplier issues credit note to the recipient in that month, so the liability of the recipient will come down by 60 rupees. In 3B they need to do the adjustment. They need to report it in GSTR1, and 3B they need to do that adjustment, reduction of liability. And what happens to the recipient? Recipient would have taken ITC for 1,200. So recipient has to reverse the ITC. How recipient will reverse the ITC? So he need to take 3B. In that 3B under reversal, he need to do the reversal, and now that is automatically captured in GSTR 2B. So GSTR 2B we have eligible ITC, ineligible ITC, like that ITC available, ITC not available, like that clearly they are giving. In that ITC not available, this information will come, this 60 rupees will come automatically, because supplier is reporting it in GSTR1, the credit note, and in that credit note he is also mentioning as to GSTN of the recipient. So therefore this data will come in 2B. But whatever the case may be, they have given a condition that the recipient should reverse the proportionate ITC. So therefore, when the discount is given after supply, post supply, and the terms are agreed before at the time of supply, it is allowed as a reduction, and a credit note should be issued in this case, and recipient should reverse the proportionate ITC. However, if the discount is a post supply discount, but the terms are not agreed before at the time of supply, this discount is not allowed as a reduction, means a credit note cannot be issued in this case. Credit note cannot be issued in this case. For example, 50% discount I am giving, 1 lakh is the value, 50% discount I am giving, even though I receive 50,000, but GST payable on 1 lakh, that is this case. Then whether GST is applicable on additional interest or penal interest on overdue loan. So we need to understand what type of a loan it is. Is it a hire purchase transaction or is it a hire purchase financing? If it is a hire purchase transaction, means the seller of the goods is only giving the finance, then in that case that interest will not come under interest on account of loans, advances, deposits, but it will come under interest on account of delay in receipt of consideration. In the entire GST, interest comes in two places: interest on loans, advances, deposits, interest on account of delay in receipt of consideration. Interest on loans, advances, deposits is exempted, whereas interest on account of delay in receipt of consideration will be included in the value. Under section 15 subsection 2 clause D, it should be included in the value and chargeable to GST. So therefore, here it is a hire purchase transaction. In hire purchase transaction, there are only two parties, that is hire vendor and the hire buyer. So hire purchaser. So then here hire vendor, when he recovers the money in the form of installments, so there is an unearned interest income. So which means that hire vendor is getting this interest on account of delay in receipt of consideration. So that should be included in the value and chargeable to GST accordingly. So when this interest is taxable, then the penal interest on account of non-repayment of an installment is also taxable. If interest is taxable, penal interest also taxable. If interest is exempted, penal interest is also exempted. So when that interest is exempted, in hire purchase financing the interest is exempted, because in hire purchase financing what will happen, that there will be three parties, hire vendor, hire purchaser and a financier will be there. So here the finance is not given by the hire vendor, but it will be given by the financier. So therefore the person will make the payment of installment to the financier. So financier will be receiving principal plus interest. Principal will be not a supply because transaction in money, whereas interest will be coming under exempted. So there is no GST on that interest component. Got it? As there is no interest, no GST on that interest component, so even if that installment, one installment is not paid, one EMI is missed, so there will be some penal interest, and that penal interest is also exempted. So in simple words, if the main interest is taxable, penal interest is taxable. If the main interest is exempted, penal interest is also exempted. Okay. So that is this. And whenever you are doing the treatment of inclusions or exclusions, so in the given price, you ensure that these 4 points are being followed. That is, first as per the provision, you need to check whether it is to be included or to be excluded. In the given price, if it is already included, so ignore. For example, municipal taxes to be included in the value, and suppose in the given price it is already included. Why municipal taxes to be included? Because it is other than GST, it is to be included. In the given price it is already inclusive of all taxes, so then ignore, don't need to add anything. And then an expense is to be excluded and it is already excluded, ignore. That is, generally we have to exclude the discount, and in the given price already the price is after excluding the discount, so ignore, no need to do anything. Then an expenditure is to be included, but in the given price it is not included. And so design and development charges which are charged by the supplier to the recipient is a pre-supply charges before supply of goods. So therefore it is to be included. In the given price it is not included. So we need to add. And an expenditure or an amount is to be excluded. In the given price it is not excluded. So we need to deduct. For example, subsidy from CG or SG is to be excluded and the given price is without considering the subsidy. Then we need to deduct that amount. Okay. Then so this is for the purpose of computing the value. So section 15 subsection 1, 2 and 3 we have, and there are two conditions for application of transaction value. That is, price must be the sole consideration. What if the price is not sole consideration? Then the transaction value fails. And what if the buyer and seller are related? Then also transaction value fails. Then we need to refer to the value as per CGST rules. Not only this, but also there are some transactions which are notified. That is, transaction between distinct persons and principal agent transactions are notified. For that we need to take the value as per rules only. That is what section 15 subsection 4 and 15 subsection 5 says. So 15 subsection 4 says that when the value cannot be determined as per 15 subsection 1, the value should be determined as prescribed. 15 subsection 5 says that there are some notified transactions. With respect to that notified transactions, notwithstanding anything in section 15 subsection 1, even transaction value is applicable, we need to go for this rules only. So therefore accordingly, in case of transaction between distinct persons, in case of principal agent transaction, even though transaction value is applicable, but always we need to do the valuation as per this rule 28 and rule 29. You can see three main rules that we have. Rule 27 is applicable in case when price is not the sole consideration. 28 is applicable in case of related party transactions or distinct persons, and 29 is applicable in case of principal agent transactions. And rule 27 says when price is not the sole consideration, which means there is consideration but that is not wholly in price, that is partly in money and partly in other form or fully in other form. Partly in money and partly in other form, example, exchange. That is, whenever we are buying a product in exchange of the old product. So an iPhone 14 has launched. iPhone 14, some 1.5 lakh the price is, okay. and for that you have already iPhone 13. You are basically rich kids, okay. So therefore you are giving iPhone 13 in exchange of iPhone 14, and iPhone 13 you purchased for 1 lakh, but now they will take only for 40,000 rupees. So therefore you will give 40,000 rupees in exchange, and you pay the balance some 1,10,000 and get the new iPhone. In that case, price is not the sole consideration. Why price is not the sole consideration? Partly in money and partly in other form. So then rule 27 will be applicable. Or if the consideration is fully in other form, then also rule 27 will be applicable. But rule 27 is applicable only when there is consideration. And what should be taken as a value? First we need to take open market value. Open market value. And this is just like our fair market value income tax logic. And open market value is, so between two unrelated parties on the same day, that should be taken as a open market value. Between two unrelated parties on the same day, that should be taken as open market value. And suppose if that is not available, then we need to take money received plus money value of non-monetary consideration. So in this example, 1,10,000 plus money value of that iPhone 13. So iPhone 13, sir, 40,000 rupees they are taking. They are taking for 40,000, but what is its money value? So means will they sell in second hand at 40,000? No, they will be selling at a different value. So we should take the value of the old product here. So that is money value plus money value of the old product. Suppose if the money value of the old product is not ascertainable, then this is also not possible. Then we need to take like kind and quality. When you take like kind and quality, not necessary same day, any nearest date transaction also can be taken, and minor modifications are permissible. That is like kind and quality. Suppose if that is also not available, then rule 30 will come into the picture. Rule 30 says you need to take cost plus 10%. What will be taken as cost? If you are a manufacturer, you need to take cost of production. If you are a trader, you need to take cost of acquisition, and if you are a service provider, you need to take the cost of providing the service, okay. So that should be taken, cost plus 10% should be taken, okay. And this cost plus 10%, suppose this is also not available, sir, that is also not identifiable, rule 30 also not possible, then rule 31, so then the value will be determined as per rule 31 by GST officer. So that is like best judgment assessment case. So wherein officer will determine the value, that is where we need to go for provisional assessment. When we are unable to determine the value or rate, we will be making application for provisional assessment. That is a connection here, okay. So therefore rule 27 says that price must be the sole consideration. If the price is not sole consideration, 27 is applicable, and which says that open market value not available, money received plus money value of non-monetary consideration. If that is also not available, like kind and quality. If that is also not available, cost plus 10%. Then rule 28, transaction between related parties or distinct persons. So in that case, first we need to take open market value, and the second point is missing here, money received plus money value of non-monetary consideration. So directly third point, what is that? Like kind and quality. Open market value, like kind and quality, cost plus 10%. And in case of open market value, what should be taken as the open market value? Whether the actual open market value should be taken. If recipient is not eligible for full ITC, you need to determine the open market value. If recipient is eligible for full ITC, then whatever transaction value will be taken as open market value. What is the meaning of recipient eligible for full ITC? Suppose on their inward supplies, that is for your recipient, you are making supply to one person. So that person's outward supply is taxable. You are making supply to me, my outward supply is taxable, then I am eligible for full ITC. If my outward supply is partly taxable, partly exempted, I am not eligible for full ITC. If my outward supply is exempted, I am not eligible for full ITC, correct or not? So therefore, whenever recipient is eligible for full ITC, we will take the transaction value itself. Whatever transaction value that you reported in the invoice, that itself will be taken as the open market value. And suppose if you report 1 rupee as invoice, that 1 rupee itself will be taken as the transaction value. Suppose if recipient is not eligible for full ITC, then I need to take whatever, that is you need to take whatever is the value, that is whatever is the open market value for that actual open market value you need to determine. Recipient eligible for 100% ITC, open market value is deemed to be transaction value. Recipient not eligible for 100% ITC, then open market value should be determined. Suppose if open market value is not available, then we will be taking like kind and quality. If that is also not available, then we need to take cost plus 10%. And alternatively, what we can do in case of goods, it is applicable only in case of goods. Only in case of goods, this alternative is applicable. So that is, we will take 90% of the resale price, the price at which that related person or distinct person subsequently sells to an unrelated buyer. Out of that 90%, we will take 90% of the resale price. Okay, and so here we need to ensure that it is applicable only in case of goods and they have not processed those goods. Means whatever we supply to the related person or distinct person, they have supplied it as such to an unrelated buyer. Then only we will be taking it. So at the option of the supplier for each supply, can the supplier choose, sir? Yes, the supplier can choose between the transaction value, that is whatever value as per this alternative, or this. For example, you take open market value is 4 lakhs, open market value is 4 lakhs, and 90% of resale price, 90% of resale price is say somewhere 3,90,000. So definitely they will go for 3,90,000. Why they need to go for 4 lakhs? So they can choose between this open market value, like kind and quality, then cost plus 10%. That is one line. Or alternatively, they can take 90% of the resale price, but with respect to each invoice they can choose. It is not like option once avail will be valid throughout the financial year, like that it is not there. And one more point, recipient should not process those goods but should have been sold as such. And rule 27 is applicable for both goods and services. Rule 28 is also applicable for both goods and services, but in this rule 28 that alternative is applicable only for goods. Then principal agent transaction, that principal agent transaction is only in case of goods. Why? Because principal agent transaction without consideration is coming under 7(1)(c) only if it is related to goods. So due to that reason, so here rule 29 is also applicable only in the context of goods. There is a transaction between the principal and the agent, and in that case, and it is goods, so we need to take open market value or 90% of the resale price by the agent at the option of the principal. So open market value or 90% of the price at which recipient supplies like kind and quality to unrelated buyer at the option of the supplier for each supply. Suppose if that is not available, then they can go for cost plus 10%. So wherever rule 27, 28, 29, they are not able to determine, in all these three places the reference to cost plus 10% is there, that is given in rule 30. If rule 30 also not satisfied, then only it will be rule 31. Officer will determine. And what will be taken as rule 30 for cost? So it will be cost of production in case of manufacturer. So we need to take the regular cost of production. So whatever we determine as per the cost sheet, that regular cost of production should be taken. And suppose if there is any abnormal cost and all, we should not take, that is machinery breakdown cost, etc. we will not take in the cost sheet. And we need to remember that cost of production only related to factory should be taken in the factory overheads, and administration overheads also related to the factory. Administration overheads relating to the sales office should not be taken into the cost of production. And suppose if there is any trial production, and if we get this scrap from realization of the trial production quantity, we will be disposing as scrap. So then we will get some money that will be reduced from the cost of production. So regular cost sheet principles, whatever we follow, the same cost sheet principles plus 10%. And cost of acquisition in case of trader, that is purchase price. And in case of a service provider, cost of providing the service. And in case when we take, this open market value deemed as transaction value, we will be taking as the value at the invoice we will give. So even 1 rupee invoice can also be given in that case, that is this. In case of services, we can skip rule 30 because cost of providing service is difficult to determine. So we can skip rule 30 and directly we can go to rule 31. What is the difference between open market value and like kind and quality? So that is very important, because when open market value fails, then only we will be touching the like kind and quality. So therefore in the question you need to observe whether on the same date you are able to find the value, and that too it should be a transaction value of the same supplier or any other supplier, and it should be same goods. Then only it will be called as a open market value. Suppose, so like kind and quality, so not necessary same date, any nearest date, and we need to go for either a transaction value as well as rules, means identical, that is like kind and quality. That like kind and quality need not be transaction value. For example, some other transaction taken place last week, that last week the value we have determined using some rules, so that also can be taken now as like kind and quality. And it should be by the same supplier, and same goods but minor modifications will be acceptable, minor differences will be acceptable. That is about like, kind and quality. Okay. So if recipient is supplying both taxable goods and exempted goods, so can we call it as recipient is eligible for full ITC? No, recipient is not eligible for full ITC. When recipient is eligible for full ITC, if the recipient is supplying only taxable goods, then only recipient is eligible for full ITC. Then look into this GST implications on debit note and credit note. So we completed rule 31 up to rule 31. So that is rule 27 is what? When price is not sole consideration. Rule 28 related parties distinct persons. Rule 29 principal agent transaction. Rule 30 cost plus 10%. Rule 31, so in case of residual value by the GST officer. And rule 32 is there. Rule 32 is there, but that rule 32, rule 31 a little bit we will see later. So because we have section 34 debit note and credit note, because we have come across this debit note and credit note so far, that is whenever interest is to be recovered, we need to give a debit note, and whenever the discount is to be given after supply, we will be giving a credit note. So what is this debit note and credit note? The provisions related to debit note and credit note is given under section 34. Whenever there is an increase in the invoice value, debit note. Whenever there is a decrease in the invoice value, credit note. That may be on account of value or tax. Suppose if we charge 5%, but we are supposed to charge 12%. For recovery of that 7%, can we give debit note? Yes. Suppose if we charged 18%, but we need to charge only 12%. For the purpose of refunding that 6%, can we give credit note? Yes. And credit note can be given even in case of sales returns or in case of deficiency in the quality of service. But for bad debt specifically, it is given in the law that a credit note cannot be issued. And what is the time limit for debit note? There is no time limit for debit note. Because of debit note, what happens to the supplier? Supplier liability increases, means extra money government gets. That's why no time limit. But in case of credit note, what will happen to the supplier liability? Supplier liability will be reduced, means it is lost to the government. So there is a time limit. What is the time limit? 30th September of the succeeding financial year or date of filing annual return, whichever is earlier. And where the debit note and credit note should be reported by the supplier, he need to report it in two places, GSTR 1 as well as GSTR 3B. GSTR 1, they need to report debit notes and credit notes, and the effect of that debit notes, credit notes, increase in liability or decrease in liability, they need to show it in GSTR 3B. Whether debit notes and credit notes is given even in case of unregistered persons, yes. Debit note and credit note can be given for registered persons as well as unregistered persons. We have that facility in GSTR 1. And what will happen to the recipient's liability? Suppose if it is debit note, what will happen to the recipient? Recipient will take excess ITC based on debit note. So debit note is also one of the tax paying document for the purpose of availment of ITC. So recipient will be able to take the ITC based on debit note. Based on credit note, what recipient should do? Recipient should reverse the ITC. Suppose if he is not having ITC balance, then he need to add it to the liability. Suppose if when I require to do the reversal, if I have balance, I will reverse. If I don't have balance, I need to add to my liability. And where this will be done by the recipient? In 3B, his 3B. Got it? So that is with respect to this section 34, and as this is connected here, that's why I discussed. Now coming back to rules, we have rule 31A we will see. Rule 31A, look into page number 51. So up to rule 30 we completed. Up to rule 30 we completed. So now look into rule 31A. So rule 31A says that in case of lottery, betting and gambling transaction, what should be taken as the value? For lottery, it will be always face value of the lottery or price notified by the organizing state, whichever is higher or whichever is lower, whichever is higher, into 28 by 128 is the GST and into 100 by 128 is the value, which means lottery price always taken as inclusive of GST at what rate? 28%. So which means that we need to take the face value of the ticket and price notified by the organizing state. Sometimes because of the demand, the price may be increased. So then we need to take the enhanced price. So whichever is higher, into 28 by 128 is GST, into 100 by 128 is the value. Whereas in case of betting and gambling transactions, so whatever is the total amount collected by the totalizer or organizer, so that should be taken into value. For example, there is a horse race and 10 horses are there. Different people are placing bet on different horses, but definitely the probability is only 1 by 10. Only one will be the winning horse, and on that winning horse, those who place the bet, to that people only they will be getting. But the total bet value means that all the horses people will place the bet na. That is the total bet value. On the total bet value, GST is payable. So why, sir? Only on the commission they need to pay na? No, they need to pay on the total bet value. Even though on this already Supreme Court gave a judgment that they should not be paying on the total bet value. But when government listen to Supreme Court, they will not. So therefore, so they say that no, this is only we will make a law amendment accordingly like that. Okay. So but we don't have to write about Supreme Court judgment and all. We need to write that on total bet value will be GST will be payable. 100% of the face value of bet or the amount paid to the totalizer, not on the commission earned by the totalizer. Okay. And then, so when I am telling something of this sort about government and all, so many students they commented in my YouTube channel stating that, sir, why are you so much against BJP? Who said I am against BJP? I am against government, I am not against BJP. So let it be Congress, let it be BJP, let it be some other person tomorrow. I am talking about the policies that they are taking. Okay, I like Modi so much. I love him. Okay, and I am member of BJP party also. Yes, I am a member of BJP party. Tomorrow some problem should not happen because of this mouth. That's why I have taken membership of BJP party also. Because I can so see I am a member of BJP party. Because as a member we can speak anything. So therefore, so I am not against BJP, I am against government, I am against the policies, I am not against the government also literally, I am against the government policies, I am against Chechi only, I am not against anyone. Okay, so therefore that is this, and there are a lot of bhakts pa, no, so lot of people are there who are, literally they pray to BJP government on a daily basis. Maybe daily morning they will not see God also, they will be seeing BJP party only. To all of them I am telling I am not against BJP party. You can check my name, it is there in the BJP's website. Okay, so I am the member of BJP, proud member. I donated 10,000 rupees for the membership also. Okay, so because if we go to jail and all, that will be more than that. So see this, 100% of the face value of bet or amount paid to the totalizer and not commission earned by the totalizer. Then TCS not to be included in the value. Already we discussed that TCS is not a tax. Why TCS is not a tax? TCS is not on income, it is on expenditure. When someone is spending some money, on that government is collecting. So one person with hard earned money, so he is out of poverty, he will be purchasing one car. So on that car also TCS is being collected. So that is his expenditure, and therefore it is just to identify his source of income only they are collecting. So that is not a tax, but TDS is the tax. TDS is a tax, that's why. Then what should be taken as the value for the purpose of computing GST by a business facilitator or a business correspondent? Business facilitator or business correspondents are the agents appointed by the banking company, and these agents will be working on behalf of the bank, and in that business facilitator's role is only to do the money remittances, nothing else. Their role is only to do the money remittances, and whatever money remittances that they are doing, for that they will get a commission. Why business facilitators are appointed? In order to save the ATM cost, because one ATM means definitely emission cost will be there, rental will be there, AC will be there, then one security will be there. But business facilitators, if we appoint, for every transaction we will pay some 10 rupees or 15 rupees to them, so that the cost will come down. Same way business correspondent, whatever work that a branch has to do, that will be done by a business correspondent, and business correspondents are literally like bank managers, and no need to have a branch. So these people will do all the work that a branch manager will be doing: account opening, loan processing, check collection, etc. So these people basically collect even service charges also from the customers and remit it to the bank. So these service charges are payable to the bank, not for them. So even though they are collecting and remitting, they are not required to pay GST on that, so it will not be included in their value. However, what will be included in their value of supply is only the commission that they get. For all these transactions, they get a commission. That commission is only the value of supply in their hands. then that service charges, whatever they are collecting and remitting, will be included in the value in the hands of a bank. So that is this. Then coming back to rule 32. Rule 32, you see, rule 32 is what should be taken as value of supply in some special transactions. What is this special transactions? There are total 5 special transactions. For that, they have given a simplified valuation methodology. Those 5 transactions are foreign exchange transactions including money changing, and then air travel agent and life insurance company, and then second hand dealer in goods and vouchers. So these are the 5 cases wherein rather than transaction value, we can do the value as per rule 32. So transaction value versus rule 32 is at the option of the supplier with respect to each invoice. So transaction value versus this. So either transaction value or value under this rule at the option of supplier for each supply. For every invoice they can choose between this. Now in this, what is that we have? Rule 32 sub rule 2, which talks about foreign exchange transactions including money changing. In that, 2 options are available. So option 1 or option 2. What is that option 1? If one of the currency exchange involves Indian rupee and RBI reference rate is available for that currency. For example, so $10,000 is exchanged, and for this $10,000, so the buying rate of RBI, bid rate of a bank is 78 rupees per dollar, and RBI reference rate, if we are selling, bank is buying na, so therefore bid rate, RBI reference rate is say 76 rupees per dollar. Then what will be taken as the value? Value will be simple. We will take bid rate or RBI reference rate difference. This 2 difference, 2 rupees per dollar. So $10,000 into 2 rupees per dollar, that will be 20,000 taken as the value. If one of the currency exchange involves Indian rupee and RBI reference rate available, bid rate or ask rate minus RBI reference rate into units of currency. So ignore the negative. Suppose if there is any negative values and all, that is you ignore the negative. Okay, ignore the negative means so that plus or minus is relevant because they use the word difference. So difference can be plus or difference can be minus. So the value will be 20,000 rupees only will be taken here. Suppose if one of the currency exchange involves Indian rupee and RBI reference rate not available. So in that case what we will do? Simple, we will take $10,000 into what is the exchange rate? 78 rupees per dollar. 78 per dollar into 1%, gross amount in Indian rupees into 1%. So that is 10,000 into 78 rupees per dollar into 1%. How much it will be? 7,800. 7,800 will be taken as the value. If both of the currencies exchange involves foreign currency. So say for example, $10,000 are converted into 6,000 pounds. I'll take 6,000 pounds. Okay, 6,000 pounds. Then what we need to do when both the currencies exchange involves foreign currency? So then for this $10,000 and 6,000 pounds, both cases you need to arrive at the RBI reference rate. Say 76 rupees per dollar, and here it is 145 rupees per pound. So then convert both the currencies into Indian rupees and you will be getting some value, that is 76,000, 7,60,000, 7,60,000, and here 8,70,000 into 1%. Into 1% we will take into 1%. So what is that? 7,600, 8,700, whichever is lower, that is 7,600 will be taken. Okay, 7,600 will be taken as the value in this case. So when one of the currencies in Indian rupee and we have RBI reference rate not available, when both the currencies exchange or foreign currencies, convert both into Indian rupees using RBI reference rate into 1%, whichever is lower. And when this option rule 32 2A will fail. So when both the currencies are foreign currencies and RBI reference rate is not available, then it will fail. Then in that case what we need to do? So can we stop paying GST? No, we have to pay GST. We will have transaction value. What is the transaction value? For doing this transaction, some currency conversion fee or currency markup fee will be charged. That currency conversion fee or currency markup fee will be taken as the value. Then rule 32 2B. So there is another option. So what is that? Slab rate model. That is, if it is from 0 to 1 lakh, if it is from 0 to 1 lakh and 1 lakh to 10 lakhs and above 10 lakhs, like that we have 3 slabs. Suppose if it is 0 to 1 lakh, so we need to take 1% of the gross amount, 1% of gross amount, and there is a minimum value. What is that minimum value? 250. For example, it is 10,000. 10,000 into 1% will be 100. 100 or 250, whichever is higher. So 250 should be taken. Suppose if it is 80,000. 80,000 into 1%, 800, or 250, whichever is higher, 800. So the moment when we go into the next slab, the fixed amount will be 1000, because 1 lakh into 1% 1000 plus 0.5% of gross. So that is on the amount exceeding 1 lakh 0.5%. For example, if it is 8 lakhs, on 1 lakh it is 1000, and on the remaining amount of 7 lakhs 0.5%, that is 3500. 3500 plus 1000, 4500 will be taken as a value. Suppose if it is 9 lakhs, for 1 lakh it is 1000, 8 lakhs into 0.5% 4000, 4000 plus 1000 5000. Suppose if it is exactly 10 lakhs, on 1 lakh it is 1000, remaining 9 lakhs, 9 lakhs into 0.5% 4500, 4500 plus 1000 5500. So the moment we touch the third slab, 5500 plus 0.1% of gross amount exceeding 10 lakhs. For example, if it is 40 lakhs, for 10 lakhs it is 5500, for remaining 30 lakhs it will be 0.1%, that is 3000. 3000 plus 5500, it will be 8500, but this value is subject to maximum 60,000. So which means what will be taken here? So suppose if it is like 550 lakhs, for 550 lakhs, so it will be, for 10 lakhs it is 5500, and 540 lakhs into 0.1%, 5400. Sorry, 54,000. 54,000 plus 5,500, 59,500, we take 59,500 only. Beyond that only, it will be going to maximum 60,000 and all. So therefore, here this numbers you need to remember. Then rule 32 sub rule 3. Rule 32 sub rule 3 is applicable in case of air travel agent services. What should be taken as value in case of air travel agent services? So we need to see the base fare in case of domestic bookings. What is base fare? In every ticket there will be 3 components: base fare, fuel surcharge and taxes. We need to take the base fare. On that base fare we need to multiply 5% in case of domestic bookings. In case of international bookings, 10%, double. So that should be taken. And all these rules are optional, which means we can go for transaction value also. And rule 32 sub rule 4 in case of life insurance business. In life insurance business, the policies are divided into total 4. If it is risk cover policy, that is term insurance. So whatever premium paid, that will be income to the insurance company. So entire premium will be taken as a value. Suppose if it is a single premium annuity policy, rather than paying every year premium, a single premium will be paid. In that case, 10% of that single premium will be taken as the value, 10% of the single premium. If it is a reinvestment policy, whatever is the premium collected minus amount allocated for investment will be taken, the difference will be taken as the value. Suppose if the amount allocated for investment is communicated to the policyholder at the time of collecting the premium. Suppose if the amount allocated for investment is not communicated to the policyholder at the time of collecting premium, then it will be treated like other policies. In case of other policies, what should be taken? 25% of the premium in case of first year policies, and subsequent year policies 12.5%. Every year insurance company will have first year premium and subsequent year premium. That year to whom they are giving new policies, that is first year premium, and already they gave policies in the last year. So for that they will receive premium this year, that is known as subsequent year premium. For first year premium we need to take 25%, for subsequent year premium we need to take 12.5%. Then in case of second hand goods, so there is a margin scheme that is applicable to a person. So therefore we need to take selling price minus purchase price. So the difference will be taken as a margin, and on that only GST is payable. However, if the margin is negative, no need to pay GST. So GST value will become 0. For example, I am purchasing a car for 1,50,000. I am selling the car for 1,25,000. Now the value will be 0. I am purchasing the car for 1,50,000. I am selling the car for 2,10,000. The value will be 60,000. So GST payable only on 60,000 rupees. And there is one important condition. ITC should not have been availed. So ITC should not be availed on purchase. Then this margin scheme is also applicable to a financier who will do the repossession of the assets. So whenever they repossess the asset, they will be disposing of those assets. On account of non-payment of installments or EMIs, they will repossess the asset and thereafter they will dispose it off. When they are disposing it off, they are also eligible for margin scheme, because what they dispose of is not the new goods, what they dispose of is the used goods. So therefore we need to take sale price. And what should be taken as purchase price? Here purchase price, they have not purchased, they have done the repossession. So what should be taken as a purchase price? They gave a purchase price formula, that is original purchase price to the defaulting borrower. So defaulting borrower would have purchased that asset at some price, na? That original purchase price of the defaulting borrower as reduced by 5% for every quarter or part thereof from the date of purchase till the date of disposal of the repossessed asset. Okay. And here the defaulting borrower should be unregistered. What if the defaulting borrower is registered? This is not applicable. So we need to go for the regular value only. What is the regular value in this case? Transaction value. The price at which that vehicle is sold or the price at which that asset is sold, that will be taken. Then rule 32 sub rule 6, in case of vouchers or coupons. In case of vouchers or coupons, we need to see the redeemable value. Basically vouchers or coupons, if it is non-identifiable voucher, amount is already mentioned on the voucher. So that amount mentioned on the voucher itself is the value of that voucher. Whereas in case of identifiable voucher, the product or the service will be mentioned on the voucher. So what should be taken as the value of that voucher? Because in case of identifiable voucher, the time of supply is at the time of issuance of voucher. For example, you have got one Domino's medium pizza voucher. Now in this case, what will be taken as the value of this voucher? What is the redeemable value of this voucher? That is, if you redeem that, you will get one medium pizza. Medium pizza value is how much? Say 499. That 499 will be taken as the value of this voucher. So therefore, non-identifiable voucher will never have a problem, because non-identifiable voucher we need to pay GST at the time of redemption. So valuation is not a problem, even we need to pay later. But in case of identifiable voucher, we need to pay at the time of issuance of voucher. That's the reason why the valuation is required. We need to take the redeemable value. Whether you redeem it or not, whether you redeem it or not is next. Whether you redeem it or not is next. But the redeemable value should be taken as the value of the voucher. For example, so one medium pizza, one chocolava cake and one coke you will be getting. Suppose you don't want the coke. In that case, you are not redeeming for coke, you are redeeming the voucher for two products. Then in that case, we should take only those two. No, it is not about the redemption. It is about the redeemable. So by redeeming this voucher, what and all you will get, that will be taken as the value of that voucher. Then rule 32 sub rule 7, notified services between distinct persons without consideration. So in case of distinct persons, so we can take nil as the value, but this is not yet notified. What are those notified service between distinct persons? Not yet notified. So therefore it is not applicable for exam. And look into one last one, that is rule 34. Rule 27, my price is not sole consideration, 28 related parties distinct person, 29 principal agent, 30 cost plus 10%, 31 residual value, 31A lottery betting gambling, 32 will be that special cases, 5 special cases, 33 expenditure incurred as a pure agent, 34 is exchange rate. What should be taken as the relevant exchange rate? So for goods we need to take the CBIC rate, for services we need to take the GAAP rate. And CBIC rate prevailing on which date should be taken? Prevailing on the time of supply. For goods it is CBIC rate prevailing on the time of supply we need to take for converting foreign currency into Indian rupees whenever we need to pay the tax. And in case of services we need to take the GAAP rate, that is usually the average of the buying rate and the selling rate prevailing on the time of supply. And once we pay GST by taking this as the exchange rate, but the actual exchange rate is different, should we pay any GST on the difference? No, we don't have to pay any GST on the difference. Ignore the gain or loss if any. Okay. So then rule 35 is, whenever we collect the value that is inclusive of tax, we need to assume and we need to take inclusive basis into tax rate divided by 100 plus tax rate. With this, value of supply is over. And so break, many students are asking break from quite a long time. Why here? I started at 2:30 only, no? Okay, they might be watching from afternoon, I don't know. Huh? Sir, you also want break? Huh? Okay, fine. So 2 hours over, no? So that's why you take a break, and thereafter we will be continuing with composition scheme. Tomorrow I will discuss input tax credit, exemptions, liability to pay tax, those topics and all I will discuss tomorrow, those crucial topics in the morning, because you will be fresh, Sunday, happily you can sleep and come, and tomorrow I will torture you. So today this small topics we will complete, okay, fine. So you take a break for some 15 minutes and relax yourself, come back, because the class will be up to 7 o'clock, okay. Okay, we'll start. Where everyone went out. Okay, see this, page number 84, segment 8, composition scheme. Composition scheme is simplified scheme for payment of tax at reduced rates, and there are two disadvantages of composition scheme. That is, a person opting for composition scheme cannot avail ITC on their inward supplies. That is one disadvantage. Another disadvantage is that they cannot recover the GST from their recipients. These are the two disadvantages, because of which their profit per unit will come down. However, there is one advantage because of composition scheme, that is, the volume will increase, the sales volume will increase as the price comes down. So therefore, increase in volume leads to increase in total profit, even though profit per unit comes down, because ITC not available, purchase price will increase, so profit per unit come down. And because GST cannot be collected from the recipient, but they need to pay GST out of their profit, because of which the profit will come down per unit. But as GST not charged to the recipient, because of which the volume will increase, when sales volume increases, the total profit will increase. So that is why people may go for composition scheme. When composition scheme is not worthwhile, suppose if there is no increase in the sales volume because of opting for composition scheme, then composition scheme is waste. It is better to continue in the normal scheme itself. And there are two composition schemes that we have: composition scheme under section 10(1) and composition scheme under 10(2)(a). So 10 is the composition scheme. In the 10(1) composition scheme is applicable to a manufacturer, trader, or supply of food service provider, only to supply of food service provider. Whereas composition scheme under section 10(2)(a) is applicable to manufacturer, trader, and any service provider. So that is the applicability. So composition scheme under 10(1) is applicable to manufacturer, trader, and supplier of food service provider, whereas composition scheme under 10(2)(a) is applicable to manufacturer, trader, and any service provider. When composition scheme under 10(1) will be applicable? If aggregate turnover during the previous year does not exceed 1.5 crores, then composition scheme under 10(1) will be applicable, 150 lakhs. Whereas in case of 8 special category states, it will be 75 lakhs. What are those 8 special category states? M, M, T, N, U, SAM. M for MMTN, Manipur, Mizoram, Tripura, Nagaland. U for Uttarakhand, SAM, that is Sikkim, Arunachal Pradesh, and Meghalaya. These are the 8 states for which 75 lakhs limit will be applicable. Whereas composition scheme under section 10(2)(a), so the limit will be 50 lakhs, all states. Aggregate turnover during the previous year does not exceed 50 lakhs, then composition scheme under 10(2)(a) is applicable. And what is the benefit of reduced rates in case of 10(1)? Being a manufacturer, they need to pay GST at the rate of 0.5% CGST and 0.5% SGST on total turnover, whereas a trader is required to pay, a trader or service provider is required to pay 0.5% CGST, 0.5% SGST on taxable turnover, whereas food service provider will be 2.5% CGST, 2.5% SGST on the total turnover. What is this service provider? Trader, okay. What is this service provider? That is, whenever a person is opting for composition scheme under 10(1), who can opt for composition scheme? Manufacturer, trader, supply of food service provider. But any other service provider cannot go for composition scheme. which means a manufacturer providing after sale service can never go for composition scheme. A trader who is providing delivery service can never go for composition scheme. Due to that reason, they have been provided with a relief. What is that relief? They can provide any other service up to 10% of the turnover during previous year or 5 lakhs, whichever is higher. So therefore, to that extent they can provide the services, and for those services, what will be the applicable rate? The rate applicable to a trader should be taken. That is 0.5% CGST, 0.5% SGST on the taxable turnover. For example, you take a manufacturer. So this manufacturer is having, this manufacturer who is located in Tamil Nadu is having aggregate turnover during previous year, and that is 120 lakhs. So then, can he opt for composition scheme during the current year? Yes. During the current year, he can opt for composition scheme, and section 10(1) composition scheme he can opt. And during the current year, up to what extent he can provide the services? He is a manufacturer. To what extent he can provide the services? He can provide services up to 10% of turnover during previous year. So what is 10% of turnover during previous year? That is 120 lakhs into 10%. So 120 into 10%, 12 lakhs or 5 lakhs, whichever is higher, they can render services up to 12 lakhs during the current year and still be in the composition scheme 10(1). For this 12 lakhs turnover of services, what will be the GST payable? Generally, what is the rate of GST for manufacturer? 0.5% CGST, 0.5% SGST on total turnover for manufacturer. But they are providing services now. For this services up to 10%, what will be the rate? That will be 0.5% CGST, 0.5% SGST on the taxable turnover. Now, let's try to understand for this manufacturer what happened in the current year. Current year, so he is engaged in sale of goods. Current year, he is engaged in sale of goods. In that sale of goods, taxable goods is 40 lakhs. Taxable goods is 40 lakhs and exempted goods is 20 lakhs. Exempted goods is 20 lakhs. And then supply of services. He can render services. Up to what extent he can render services? 12 lakhs. Why 12 lakhs? Because we need to take previous year 120 lakhs into 10%, 12 lakhs or 5 lakhs, whichever is higher. Up to 12 lakhs he can render the services. Supply of services, taxable services. Taxable services is say 6 lakhs and exempted services 4 lakhs. Now what will be the GST payable by this manufacturer under composition scheme? So we need to take, being manufacturer, so goods, that is their regular goods, we need to take the total turnover of goods. What is the total turnover of the goods? 80 lakhs, 60 lakhs. We need to take entire 60 lakhs. So 60 lakhs we need to take into 0.5% CGST. Then what about services? For services, when it comes to services, the rate applicable to a trader should be taken. What is the rate applicable to a trader? On the taxable services. So only taxable turnover, because what is the rate applicable to the trader or other service provider? So 0.5% CGST, 0.5% SGST on the taxable turnover. So what is the taxable services? 6 lakhs. So 6 lakhs into 0.5% should be taken. So this will be taken as the CGST and the same amount will be payable as SGST. Hope you understood what I am trying to convey. Okay. So even though they are a manufacturer, even though they are a trader, even though they are a restaurant service provider, when it comes to the other services, up to the limit of 10% during previous year or 5 lakhs, whichever is higher, they need to pay tax at the rate applicable to trader only. That is 0.5% CGST, 0.5% SGST on the taxable turnover. So these are the rates applicable to a person opting for composition scheme under 10(1). And the regular rate of GST for restaurant is 2.5% and 2.5%. Then which person will go for composition scheme? So if the rate of GST under regular scheme is more than 2.5 for catering or any restaurant which is in a 3-star hotel, etc., if the rate is 18% and all, they can go for composition scheme. Then what about composition scheme under 10(2)(a)? So the rate of GST is 3% CGST, 3% SGST on total turnover and why are we taking it as 3% CGST, 3% SGST, why not IGST? Because a person who is making interstate supplies cannot go for composition scheme due to that reason. Then, what is the current year limit for the reduced rates? Current year, so up to 1.5 crores or 75 lakhs only they can be into composition scheme. Whatever is the limit for composition scheme during the previous year, so the same limit is applicable for current year. So when composition scheme is applicable under 10(1), if their aggregate turnover during previous year does not exceed 1.5 crores or 75 lakhs, current year they can go for composition scheme. Current year up to 1.5 crores or 75 lakhs they will be into composition scheme. The moment they cross that 1.5 crores or 75 lakhs, they will be going into normal scheme for the remainder of the year. Same way, 50 lakhs. Suppose if there is a service provider, so say one beauty parlor is there, that beauty parlor cannot go for 10(1). Why they cannot go for 10(1)? Because 10(1) is applicable to a manufacturer, trader and supplier food service provider. So therefore they need to go for 10(2)(a), and 10(2)(a) is applicable for any service provider. Now you tell me, being a manufacturer, which is best? 10(1) is only best because there only higher limit is there and reduced tax is there. Being a trader also 10(1) is only best. Being a supplier food service provider also 10(1) is only best. So therefore who will go for 10(2)(a)? A person to whom 10(1) is not applicable. To whom 10(1) is not applicable is a service provider other than supplier of food, or 10(1), 10% limit only they can render services. If they are supplying goods as well as they want to render services beyond the 10% limit, then also they can go for 10(2)(a). So 10(2)(a) is advisable for two people. Number one, they are service provider other than supplier of food, or they are manufacturer, trader and supplier of food service provider, but they want to render services, other services beyond 10% of turnover during the previous year. So then also they can go for 10(2)(a). And under 10(2)(a), so when they are applicable, that is when they are eligible to 10(2)(a), their aggregate turnover during previous year should not exceed 50 lakhs. And current year also they need to maintain that 50 lakhs. If they cross that 50 lakhs of aggregate turnover during current year, they will come out of the composition scheme. That is this current year limit for reduced rates. Then who cannot opt for composition scheme under 10(1)? Yes, 9 RCM. So section 9 is RCM na? Yes, 9 RCM. So yes, that is service provider other than supply of food and service provider beyond the 10% limit cannot opt for composition scheme under 10(1). You can see that in page number 86. Who cannot opt for composition scheme? Service provider other than supply of food or service provider beyond the 10% limit cannot opt for composition scheme. And N for non-resident taxable person who come from outside India to India, they cannot go for composition scheme. I for interstate supply of goods or services, both cannot go for composition scheme. A person who is making non-taxable supplies, that is petroleum products, alcoholic liquor for human consumption, they cannot opt for composition scheme. Even though restaurant can opt for composition scheme, but a restaurant serving liquor cannot opt for composition scheme because they are engaged in non-taxable supplies. Then supplier of goods or services through e-commerce operator, that is whenever there is a seller who is selling through Amazon or Flipkart, they cannot opt for composition scheme, even though a trader can opt for composition scheme, because supplier of goods or services through e-commerce operator cannot opt for composition scheme. Here, which e-commerce operator? A third party e-commerce operator. If they have their own e-commerce portal through which if they are selling, that is not called as a supplies through e-commerce operator. So then they can go for composition scheme. Suppose if some e-commerce operator, third party e-commerce operator is there, through that if we list the products and if we are selling, then we cannot go for composition scheme. Then RCM under section 9 subsection 4. So on that is right now this is not there. This is applicable only for real estate transactions. 9.4 is applicable only in case of real estate transactions. That is 9.4 RCM not paid. So we have some inward supplies on which 9.4 is applicable. 9.4 says that liability to pay GST is on the recipient whenever the recipient is making procurement from an unregistered person. So in that case they cannot go for composition scheme. Then casual taxable person, CTP cannot. And here there is one amendment now. Manufacturer of notified goods cannot opt for composition scheme. What are those notified goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters. Now extra bricks and roofing tiles is there. So a person who is engaged in manufacture of bricks and roofing tiles also cannot opt for composition scheme. Can a trader of ice cream opt for composition scheme? Yes. Can a trader of tobacco products opt for composition scheme? Yes. Can a trader of bricks and roofing tiles opt for composition scheme? Yes. So this is only for the manufacture of the notified goods. So what are the notified goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters, bricks and roofing tiles. Okay. Then these people cannot opt for composition scheme under 10.1. What about composition scheme under 10.2a? So 10.2a also same except that S point. So it is 9 RCM. Okay. That S point is not there because any services you can provide. Na? So being in 10.2a you can provide any services. So therefore that is the difference in the condition. Manufacturer of notified goods cannot opt, but a trader of notified goods can opt. Here manufacturer of notified goods and supplier of notified services. But what are those notified services is not yet notified. So therefore that is not applicable now. So both cases it is the same. So here it is S9 RCM, here it is 9 RCM. Notified service not yet notified. So these are the basic differences between 10.1 and 10.2a. Apart from this, all other points are common for 10.1 as well as 10.2a. These are the only differences that we have. So in all other points, whatever we are discussing, meaning of aggregate turnover, meaning of turnover, or what is the entry route for opting for composition scheme or exit from composition scheme, all other provisions are common between 10.1 and 10.2a. Okay. Now look into what is the meaning of aggregate turnover for determining the eligibility for composition scheme. We have come across turnover in 3 different places. One is to determine the eligibility to opt for composition scheme. So we need to check aggregate turnover during previous year. So then we will know whether current year we can go for composition scheme or not. That is one turnover. The second turnover where we have come across is the 10% limit. Being into composition scheme under 10.1, they can render services up to 10% of turnover during previous year or 5 lakhs, whichever is higher. And the third place where we have come across turnover is for computation of composition scheme tax. That is 0.5% CGST, 0.5% SGST. There we have come across one turnover, total turnover and taxable turnover. Okay. Now see this. Suppose if there is a person and say A Limited, and that A Limited is having business in 3 states, Tamil Nadu, Karnataka and Andhra Pradesh, and the turnover is somewhere 50 lakhs, 60 lakhs and 30 lakhs. So then what is their aggregate turnover? What is their aggregate turnover? 50 plus 60 plus 30, 140 lakhs. Can they opt for composition scheme? This is previous year. Can they opt for composition scheme during the current year? Yes, they can opt for composition scheme during the current year. So because in all these 3 states the limit is only 150 lakhs. We don't have any 75 lakhs limit there. So they can definitely opt for composition scheme. And during the current year, to what extent they can provide the services? During the current year, to what extent they can provide the services? 14 lakhs is wrong answer. So because we should never see the 10% limit on total basis, we need to see it state wise. So 50 lakhs into 10%, 5 lakhs or 5 lakhs, whichever is higher, 5 lakhs. So 60 lakhs into 10%, 6 lakhs or 5 lakhs, whichever is higher, 6 lakhs. 30 lakhs into 10%, 3 lakhs or 5 lakhs, whichever is higher, 5 lakhs. So to the extent of this, they can provide services. So never the 10% is computed on aggregate turnover, because the provision says 10% of turnover. So we need to take turnover always state wise. Aggregate turnover all India basis. Turnover should be taken state wise. So therefore during the current year they can render services to the extent of 16 lakhs. But in that, so total 16 lakhs, but in Tamil Nadu they can render service only 5 lakhs. In Karnataka they can render service only 6 lakhs. In Andhra Pradesh they can render service only 5 lakhs. Suppose if they are crossing that 5 lakhs or 6 lakhs or 5 lakhs in each state, then they are disqualified from the composition scheme in that state. Automatically they are disqualified for composition scheme in the other state, because if you are not eligible for composition scheme in one registration, then all other registrations also you are disqualified from the composition scheme. Then, so therefore turnover should be always computed on a state-wise basis. Aggregate turnover should be computed on a all India basis. Now, say one person is having business in Tamil Nadu and Sikkim. Tamil Nadu and Sikkim. So in Tamil Nadu, the turnover is say 80 lakhs and 1 second. Yes, in Sikkim it is 70 lakhs. So same person, A Limited, and they have business in 2 states, Tamil Nadu 80 lakhs, Sikkim 70 lakhs. What is their aggregate turnover? Aggregate turnover is 150 lakhs. Can they opt for composition scheme during the current year? No. How they cannot opt for composition scheme? First, what is their aggregate turnover? 150 lakhs. So in Tamil Nadu, what is the limit? 150 lakhs. So in Tamil Nadu, they can opt for composition scheme because the aggregate turnover during the previous year does not exceed 150 lakhs. Then in Sikkim, the applicable limit is 75 lakhs. During the previous year, their aggregate turnover is 150 lakhs. So they cannot opt for composition scheme in Sikkim. Naturally, they cannot opt for composition scheme in Tamil Nadu also. If they are ineligible in one state, they are also ineligible in other state. So therefore, here what is the effective limit? 75 lakhs only. So therefore, as the aggregate turnover exceeds 75 lakhs, they cannot opt for composition scheme. Understood or not? Then, so generally, what is the meaning of aggregate turnover? Aggregate turnover is always on a all India basis, and we need to take taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies into the meaning of aggregate turnover. I am talking about the general meaning of aggregate turnover. However, aggregate turnover excludes inward supplies under RCM and taxes, and aggregate turnover includes even interstate supplies, non-taxable supplies, everything will be coming, and it is computed on an all India basis. Now, this is the general meaning of aggregate turnover. However, for the purpose of composition scheme, what are the extra points that you need to remember? The same meaning is there even for aggregate turnover under composition scheme with 2 extra points. That is, interest on loans, advances, deposits will not be taken into aggregate turnover. Means, what is the revised meaning of aggregate turnover under section 10? For the purpose of composition scheme, and for the purpose of composition scheme, why aggregate turnover is relevant? If the aggregate turnover during previous year does not exceed 150 lakhs or 75 lakhs, then during the current year we can go for composition scheme. So therefore, what is that aggregate turnover for determining the eligibility to opt for composition scheme? Taxable supply, exempted supply, non-taxable supply, zero rated supply. It excludes inward supply under RCM. It excludes taxes. It also excludes interest on loans, advances, deposits. Then next. So what about the pre-registration turnover? That is, previous year only we commence the business, and previous year, so the threshold limit is 40 lakhs. The threshold limit is 40 lakhs, and thereafter we made a registration. 40 lakhs is the applicable threshold limit. After crossing 40 lakhs, we have registered, and post-registration, we made a turnover of 120 lakhs. Now, what will be taken as the aggregate turnover for determining the eligibility to opt for composition scheme? Whether this pre-registration turnover also should be taken? Yes. Pre-registration turnover should be taken in aggregate turnover, even though the turnover is before you get registered during the previous year, but that should also be taken into aggregate turnover meaning, which means what will be the aggregate turnover? Aggregate turnover will be 160 lakhs. So current year we cannot opt for composition scheme. So tell me what is the revised meaning of aggregate turnover? Taxable supply, exempted supply, non-taxable supply, zero rated supply, even pre-registration turnover. It excludes 3 inward supplies under RCM, taxes, and interest on loans, advances, deposits. So that is the meaning of aggregate turnover I have given. You can see that in page number 88. Page number 88. And aggregate 3 turnovers we need to know. What is the difference between these 3? One is aggregate turnover for determining the eligibility to opt for composition scheme. Another is turnover for determining the 10% limit for providing services. And then turnover for payment of GST under composition scheme. So what should be taken as the aggregate turnover for determining eligibility for composition scheme? So whether we need to see current year aggregate turnover or previous year aggregate turnover? Previous year. And what should be taken as turnover for determining 10% limit? Current year or previous year turnover? Previous year. And what should be turnover for payment of GST? Current year or previous year? Current year. And aggregate turnover, A for A. Always aggregate turnover is on all India basis, whereas turnover is computed on a state-wise basis. What will come in aggregate turnover? Taxable supply, exempted supply, but interest on loans, advances will not be taken into aggregate turnover, non-taxable supplies will come, exports will come, interstate supplies will come. But inward supplies under RCM should not be taken and taxes should not be taken and pre-registration turnover will be included. So this is the meaning of aggregate turnover. And sir, a person who is making non-taxable supply cannot opt for composition scheme na. A person who is making interstate supply cannot opt for composition scheme na. Then why are we taking it? So we need to check only for the current year. Previous year we can make interstate supply. Previous year we can make non-taxable supplies. There is no restriction. Current year only we are going for composition scheme. Current year only that S9 RCM restrictions will be applicable, not for the previous year. So this is the meaning of aggregate turnover. Now, what is the meaning of turnover for computing 10% limit? Everything is same as aggregate turnover for determining eligibility, except that aggregate turnover is on all India basis, whereas this turnover is state or union territory wise. That is the only difference. Everything is same, copy paste. Only difference is what? So this will be computed on a state wise basis. All other points are same. Then what should be taken as the turnover for computing the GST payable under composition scheme? So we need to see this for the current year. And here one more important point is that, so pre-registration turnover is excluded. Pre-registration turnover should not be taken into account. And this also you can see, that is non-taxable supply, interstate supply and export should not be there. Why? Because a person who is opting for composition scheme during the current year should not make non-taxable supplies, should not make interstate supplies. Exports is also considered as interstate supplies due to that reason. That is why if it is there, then composition scheme is not applicable. So that's why I have given. Apart from that, everything else is same. So what is the difference between turnover for computing 10% limit and turnover for computing the GST payable? Turnover for computing 10% limit we should take previous year. Turnover for computing GST payable current year. And their pre-registration turnover included, here pre-registration turnover excluded, there non-taxable supply, interstate supplies are included, but here non-taxable supply, interstate supplies are not applicable. So that is the meaning of various turnovers. Now what is this pre-registration turnover excluded? For this, let's try to understand. That is, you take, say, aggregate turnover. This is the current year for which we are getting registered, and current year only we started business. So current year aggregate turnover is 180 lakhs. Current year aggregate turnover is 180 lakhs. This 180 lakhs will be divided into first threshold limit. What is the limit after which we would have registered? Say the threshold limit is 40 lakhs. After that only we would have registered, and thereafter for the next 150 lakhs whether composition scheme is applicable, or for the next 110 lakhs composition scheme is applicable, or the next 110 lakhs only composition scheme is applicable, not next 150 lakhs. On this 40 lakhs, no GST. Why there is no GST on 40 lakhs? Because this is the threshold limit. No need to pay any GST. After crossing 40 up to 150. After crossing 40 up to 150 means what is the difference? 110 lakhs. Because overall turnover, aggregate turnover should be 150. After that, you will not be eligible for composition scheme. In that, in that 150, 40 is already gone. That is pre-registration turnover. So that should not be taken. Exclude it. So therefore, what is the remaining? 150 pa, total 150 pa. In that 150 pre-registration turnover should be taken. What is the remaining? 110 lakhs. On that 110 lakhs, we need to pay GST, 0.5% CGST and 0.5% SGST. Thereafter, we have the remaining amount. What is that remaining amount? 30 lakhs. And say the applicable rate of GST is 18%. Normal. Now it is normal scheme. We crossed 150 lakhs. So therefore, the applicable rate of GST 18% means 9% CGST, 9% SGST. This is how we need to do the computation. So suppose if it is 10 to A, same, 10 to A also same. Up to 20 lakhs, no GST. Thereafter, for the next 30 lakhs, balance. So there will be GST at the rate of 3% CGST, 3% SGST under composition scheme. Thereafter, it will be regular scheme. So that is why I said that pre-registration turnover will be excluded while computing the turnover for payment of GST under composition scheme. Again, in this turnover also we need to take taxable turnover in case of a trader, correct? For a manufacturer and supply of service provider only total turnover, whereas for a trader we need to take taxable turnover. That is with respect to the meaning of various turnovers. And coming back to this, what is the meaning of aggregate turnover we completed? And person, interest will not be taken, then person opting for composition scheme can provide service up to 10%. That also we have seen. Look into the other procedural provisions in page number 85. Suppose if a person is already registered, how they will enter into composition scheme? They need to file one form called as CMP2. That CMP2, when they need to file, can they enter into composition scheme anytime during the financial year? No. They need to wait till commencement of the next financial year. Before commencement of the next financial year, they need to file CMP2 and then only they can enter into the composition scheme. Suppose if we are getting registered only now, then anytime during the year we can go for composition scheme, because if the form is not CMP2, the form is REG1, application for registration. In that application for registration, we will be selecting the option, that option to pay GST under composition scheme. So that option we will select and we will go into the composition scheme. So these are the two entry routes into the composition scheme. Then every person who opted for composition scheme should display composition taxable person in every notice, signboard displayed at principal place of business as well as additional place of business. And they need to file a return, quarterly return. What is a quarterly return? Already we discussed CMP 8, and that CMP 8 to be filed by 18th of the month following every quarter. And they need to pay GST on advances. Generally we have one point, that is in time of supply. What is the time of supply in case of goods covered under FCM? Goods FCM, the time of supply is due date of invoice or actual date of invoice, whichever is earlier. So we don't have to pay GST on advances on goods generally. But for a person opting for composition scheme, this is not applicable, because notification 66/2017 only gave relaxation with respect to payment of GST on advances. But that notification 66/2017 will not be applicable for a person opting for composition scheme. So therefore, a person opting for composition scheme is required to pay GST on advances also. Then what they need to do? They need to take what are all the bill of supplies generated during the quarter. So this is an adjustment which is not yet tested. So please concentrate onto this. So there is, like for the current quarter, we need to take what are all the bill of supplies generated. For this bill of supplies, value in the bill of supplies, we need to add advances received during the current quarter, for which bill of supply will be generated in the next quarter. Because now we received advances, but for this the bills will be given in the next quarter. So we need to add minus advances received in the previous quarter, for which bills are generated in the current quarter, because that advances received in the previous quarter would have been taxed in the previous quarter itself. Even though we are raising bill now, we should take it out. Okay. So this is the treatment that we need to remember. So what a person opting for composition scheme should do for payment of GST. So first we need to take GST payable on value as per bill of supply during the current quarter, add advances received during the current quarter pertaining to next quarter, minus advances received during the previous quarter pertaining to the current quarter should be taken out. Understood? Then they need to file an annual return in GSTR4 by 30th April of the succeeding financial year. So these are some procedural provisions applicable. And what is the validity of composition scheme? If all the conditions are satisfied, option remains valid. No need to submit this option every year. We don't have to file the intimation that we want to go for composition scheme. If we need to just check the conditions, if the conditions are fulfilled, you can continue in the composition scheme. And is composition scheme mandatory or optional? It will be optional. It is not mandatory. And what if the conditions are not satisfied? If the conditions are not satisfied, so they need to pay tax as a normal taxpayer. So when they need to pay tax as a normal taxpayer, what is the time limit within which they need to come out of the composition scheme? 7 days. 7 days is the grace days provided to them. Within that they need to come out of the composition scheme, and they need to file one form for withdrawal from the composition scheme, that is CMP 4 to enter into composition scheme, CMP 2 to exit from the composition scheme, CMP 4. And suppose if they voluntarily self withdraw, anytime they can withdraw from the composition scheme even though conditions are fulfilled. That is in case when it is not worthwhile to continue in the composition scheme, they will come out of the composition scheme by filing CMP 4. And then suppose they breach the condition, that is they made supply through e-commerce operator. that is a breach of condition. They should not continue in the composition scheme. Still they continued in the composition scheme, and department will come to know. How department will come to know? E-commerce operator will be filing GSTR 8. In that GSTR 8 they will be giving, so this person who made supplies through e-commerce operator, their GSTN will be given. Now the portal will show that this GSTN is under composition scheme. Immediately the officer will send a notice that you are making supply through e-commerce operator, you are not eligible for composition scheme. That notice will be given in CMP file. And what is the time limit to give the notice? There is no time limit, but logically that notice they have to give within the time limit under 73, 74, because they cannot pass an order. Even though there is no time limit here, but that time limit we need to connect to 73 time limit, 74 time limit. Why? Because so 73 and 74 provisions mutatis mutandis apply even in case of composition scheme, which means that so that time limit we need to keep in mind for the show cause notice. So the notice will be given, and after giving the notice, so we need to furnish a reply. What is the time limit within which we need to give reply? 15 days we need to give the reply. After reply, within 30 days from the date of reply, they will be passing an order either allowing you to continue in the composition scheme or denying the composition scheme. So that order will be passed in CMP 7, CMP 5 notice, CMP 6 reply to notice, CMP 7 order. Notice no time limit, CMP 6 reply to the notice within 15 days, and CMP 7 order should be within 30 days. And after order, either they will allow us to continue in the composition scheme or they will deny the composition scheme. Whether this denial of composition scheme is prospective or retrospective, it can be either prospective or it can be retrospective. You can see it in the next page. So prospective means, suppose if they are passing an order with effect from a date, from that date only we are denied composition scheme. Until that point of time we can enjoy the composition scheme even though we breach the condition. Say for example, we breach the condition on 25th of July, we breach the condition. 25th of July 2022 we breached the condition. We continued in the composition scheme, and they are giving an order denying the composition scheme on 8th November 2023. They gave an order, means we continued into composition scheme until that point of time. So they passed an order denial of composition scheme. It can be retrospective or it can be prospective. Prospective means with effect from 8/11/2023 we cannot be into composition scheme, so we need to pay tax as per regular provisions. That is prospective. Suppose if it is retrospective, so it means they can go backwards also, but not before the date we committed the breach. So when we committed the breach 25th July 2022, until that point of time we are eligible for composition scheme. So whatever we have to, we are required to pay under composition scheme only. So if the retrospective order is passed, that cannot be before the date we committed the breach. So therefore, before 25/7/2022 they cannot pass an order denying the composition scheme. That is this. However, such effective date shall not be prior to the date of contravention of the provisions of CGST Act or rules. Now during this period already we paid some tax under composition scheme. Now suppose if they passed a retrospective order from 25/7/2022, during this period we already paid tax under composition scheme, so that should be deducted from the actual tax payable, and the differential amount we can have to pay, okay, and applicable penalty etc. also will be there, because here to recover this amount, so they will be invoking section 73-74. When is it advisable to opt for composition scheme under 10(2)(a), whose aggregate turnover in the preceding financial year does not exceed 50 lakhs and who is exclusively engaged in supply of services other than restaurant, and the 10% limit, they wanted to provide services beyond that 10% limit, then they can go for composition scheme under 10(2)(a). Now whenever we are going for composition scheme, remember we need to reverse the ITC on the closing stock. Whenever we come out of the composition scheme, we can avail the ITC on closing stock. So we have section 18(1)(c). What does section 18(1)(c)? Say for example, we are going into composition scheme to normal scheme. So before that we were into composition scheme, and now we are going into normal scheme. So then in that case, at the time when we were into composition scheme, we would have made some purchases. On that purchases we would not have taken any ITC, because A person who is under composition scheme cannot avail ITC. Now there is some closing stock here. So on that closing stock, we would not have taken ITC, but using this closing stock only we will make supplies after the date when we go into normal scheme. So therefore, what they are telling is that on this closing stock, whatever GST paid, that can be availed as ITC, because the moment you go into normal scheme, you will be required to pay GST at normal rate and you can enjoy the ITC. Using this closing stock only you will make outward supplies. So due to that reason, on this closing stock, GST paid can be taken as credit. And for taking this credit, so this is ITC on closing stock, ITC on closing stock. For taking this credit, one form needs to be filed, that is ITC 01, form GST ITC 01, and that form ITC 01 should be duly certified by a chartered accountant or a cost accountant if the claim of ITC exceeds 2 lakh rupees. So what is the form? To come out of the composition scheme, CMP4. So we will be filing CMP4 to come out of the composition scheme. Whenever we come out of the composition scheme, we can avail the ITC on closing stock under ITC 1. Same way, suppose if we are under normal and we go for composition scheme, we are under normal and we go for composition scheme, then what happens? During the time when we were under normal scheme, we would have made some purchases. On that purchases, we would have availed the ITC. Now, there is some closing stock here, and this closing stock only you will be using for making supplies during the composition scheme. Then on this closing stock, whatever ITC you avail, you need to reverse. So the moment when you go into composition scheme, whatever is ITC on closing stock, that you need to reverse. So for reversal of ITC, on closing stock, so we need to file one form. So as per section 18 subsection 4, that is form GST ITC 03. So ITC 3 is a form which you need to file for the purpose of reversal of ITC on closing stock. What is the form to be filed? For going from normal scheme to composition scheme, CMP 2. For entry into composition scheme, it is CMP 2. For exit from the composition scheme, it is CMP 4. So these 4 forms easily you can remember. First 0, 1, 2, 3, 4. So one is odd forms are ITC forms. Odd forms are ITC forms. Even forms are CMP forms. And 1 and 4 is one combo. 2 and 3 is one combo. Okay. So wherever CMP 4, you are coming out of the composition scheme, you can avail the ITC on closing stock, so ITC 1. Whenever you are going into the composition scheme, you need to reverse the ITC on closing stock, that is ITC 3. You please remember this, so somewhere it will be definitely useful. Okay. Then, so therefore, whenever we come out of the composition scheme, so this ITC 01 we can take with respect to ITC on closing stock. So all these forms I have given here. So CMP 1 and CMP 3 we don't have. CMP 1 and CMP 3 is during transition, that we don't have. So CMP 2, CMP 4, 5, 6, 7, 8, and wherever CMP 2 ITC 3, wherever CMP 4 ITC 1. Along with the time limits I have given. So with this we completed composition scheme. So these are the points that we have in composition scheme. So then look into segment 9, registration, page number 89. So in registration chapter, we have total 9 sections. Section 22 to section 30 we have, and in that section 22, 23, 24 talks about the legality of registration, and 25, 26, 27 about the procedural part, and section 28, 29 and 30 the special cases. So 22 says who is liable to get registered, 23 who are exempted from registration, 24 who are compulsorily required to get registered, whereas section 25 is procedure for registration, 26 deemed registration, 27 special provision for CTP and RTP, then 28 is amendment in registration, 29 is cancellation of registration, 30 is revocation of cancellation of registration. So first 3 sections is very important, because lot of problematic questions could be framed on first 3 sections, whereas the next 6 sections or mainly for MCQ or any short note question. So your question number 1, see paper for a quite a long time I have seen that it is static. They are not changing anything, and every attempt I will also be having too much expectations about ICI. So they may change, they may give this, they may give that, but no. So that's why rocket revision, no, everyone attending and clearing, okay. So therefore this question number 1, 14 marks question, always on input tax credit, exemptions, valuation. From these 3 concepts only they will be coining that question. Input tax credit, exemptions, valuation. Touching these 3 only, that first question will be there. In that also heart is input tax credit. Without input tax credit, question number 1 will not be there. And thereafter question number 6 is always a theory question. And in question number 6, so there will be 3 or 4 parts and weightage is 14 marks. So therefore this small short note questions will be given in question number 6. This also they have not changed. And in question number 2, 3, 4, 5, so definitely in one question it will be irritating one. So they will be asking about this today whatever we discussed, offences, penalties, search, seizure. So that will be in one question. For sure it will be there. And then so we will be having this part C. All questions part C will be customs or FTP. All questions, question number 2 to question number 5, part C will be customs and FTP. Part A and B will be GST. In that A and B also, so it will be like 5 marks question, 4 marks question, like that only it is. They have not at all changed the paper pattern from quite a long time, okay. So therefore the same will be coming, and suppose if they change, good only, my market will increase, but it should not happen. You all should clear, okay. So I am not that type and all. So if you clear only, it is good for me, and therefore you clear. And then coming to this registration, so this other sections mainly for MCQs only pa, and the first 3 sections are important. Section 22 talks about when a person is liable to get registered. So section 22 says that aggregate turnover, when a person's aggregate turnover exceeds the threshold limit, that person is required to get registered. What is taken as aggregate turnover threshold limit? So that is, if you are doing business only in one state, so then we need to check whether that state is MMTN, that is Manipur, Mizoram, Tripura, Nagaland. Then the limit will be 10 lakhs. Let it be goods or services. Suppose if you are doing business in one state and MMTN 10 lakhs. If it is use stamp, Uttarakhand, Sikkim, Telangana, Arunachal Pradesh, Meghalaya and Puducherry, Pondicherry. So these cases it will be 20 lakhs, let it be goods or services. MMTN, Manipur, Mizoram, Tripura, Nagaland, use stamp, Uttarakhand, Sikkim, Telangana, not Tamil Nadu, Telangana, and A, not Andhra Pradesh, Arunachal Pradesh, Meghalaya and Pondicherry. So these places it will be 20 lakhs. All other states it will be 40 lakhs if you are exclusively engaged in supply of goods, and if you are engaged in supply of goods plus services or only services, then it will be 20 lakhs. So this will be the limit. So these 3 points first you need to remember. For 4 northeastern states, MMTN 10 lakhs. For U-stamp states 20 lakhs. For all 21 states, 20 lakhs limit for services and 40 lakhs limit for goods. This provided you are doing business only in one state. Suppose if you are doing business in more than one state, and if one of the state is special category state MMTN and taxable supplies are made from that state, one of the state is special category state MMTN and taxable supplies are made from that state, then the applicable limit will be 10 lakhs. And when 40 lakhs will come, so 40 lakhs will come if none of the states is MMTN U-stamp. Out of those group of states, none of the state is MMTN U-stamp, and so you are exclusively engaged in supply of goods, then the limit of 40 lakhs will be applicable. Otherwise balancing figure 20 lakhs. Okay. So this is something which is very, very important, because the first point easily you will remember. So MMTN means 10 lakh, U stamp means 20 lakhs, other cases 20 lakhs in case of goods and services, 40 lakhs in case of goods. That even intermediate student also will remember. But the problem here is that they will not be giving only one state, they will be giving a group of states. In that group of states, when it comes, just 3 points only, don't get confused. What are those 3 points? One of the state is special category state, MMTN. Out of that group of states, what they have given, whether one of the state is MMTN, yes. Then taxable supplies are made from that state, yes. Then the limit will be 10 lakhs. Suppose if taxable supplies are not made, 20 lakhs. Balancing figure will be 20 lakhs. Then when 40 lakhs will be applicable? 40 lakhs will be applicable if none of the states, in the given states, none of the state is in MMTN U stamp and exclusively they are engaged in supply of goods, then it will be 40 lakhs. So that is what I have given. If supplies are made from multiple states and if taxable supplies are made from special category state, only then 10 lakhs limit is applicable. If supplies are made from multiple states and in those states if U stamp is also one of the state, then the threshold limit will be 20 lakhs, 40 lakhs limit will not come. Then, so aggregate turnover is computed on all India basis or state wise? On all India basis. And that 40 lakhs limit is applicable only in case of exclusive supply of goods. Suppose if they are doing both goods and services, it will be 20 lakhs or 10 lakhs. But there is one exception which you need to remember. That is, if they are exclusively engaged in supply of goods, but they have only one service income called as interest on loans advances, still they will be called as exclusively engaged in supply of goods only. Okay. So what is that? They are exclusively engaged in supply of goods, but they have only one income called as service income, which is interest on loans advances or deposits. Even then they will be called as exclusive engaged in supply of goods. So the limit will be 40 lakhs only. So that is an exception. Okay. Then suppose sir, they are exclusively engaged in supply of pan masala, tobacco and tobacco products, then ice cream, edible ice, bricks and roofing tiles. Aerated waters is not there. Then 40 lakhs limit is not applicable for them. They are exclusively engaged in supply of goods. But what are those goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, bricks and roofing tiles. Then they cannot get 40 lakhs limit. Then the limit will be 20 lakhs. Here, is this restriction for manufacturer or trader? Both. Supplier of goods. But there under composition scheme, the restriction is only to a manufacturer. There we have aerated waters. Here we don't have aerated waters. So you can see that the limit of 40 lakhs is not applicable in the following cases. So person making supply of ice cream, edible ice, pan masala, tobacco, tobacco products and bricks and roofing tiles. Suppose if they voluntarily register also, this limit is not applicable. If they are compulsorily required to register also, this limit is not applicable. They need to register. This is about the threshold limits, and this numbers, amounts you need to remember. The moment you see in the question, the first thing is that we need to identify what is the applicable threshold limit. And then we need to see what is their aggregate turnover. If their aggregate turnover during a financial year exceeds threshold limit, whether we need to see aggregate turnover previous year or current year for deciding registration, current year, not the previous year. Current year, whenever it crosses the threshold limit, that date they are liable to get registered and they need to make application for registration within 30 days. Now, exemption from registration, you can see section 23. Who are all exempted from registration? If they are exclusively engaged in exempted supplies, they are exempted from registration. If they are exclusively engaged in non-taxable supplies also, they are exempted from registration. If they are exclusively making supplies covered under RCM, for example, advocate's outward supply is always RCM. So advocate is exempted from registration. So therefore, 3 people, so exempted, exclusively non-taxable, exclusively RCM, and an agriculturist. Who is called as an agriculturist? They should be engaged in only supply out of cultivation of land. So they should not be doing any other supplies. Then only they will be called as an agriculturist, and they are also exempted from registration. These are the 4 people who are exempted from registration. Suppose if the person is making both taxable and exempted, then so whether they are exempted from registration? No. So we need to check the aggregate turnover, and we need to include exempted also. If it exceeds the threshold limit, they need to register. Okay, pa? Then compulsory registration we have in 2 places. In section 22 also we have a compulsory registration. 24 also compulsory registration we have. So let's look into compulsory registration under 24 first. So 24 compulsory registration, we have it in I creations. I for interstate supply of goods, not interstate supply of services, only interstate supply of goods, that too other than handicrafts. Suppose if I am making interstate supply of handicrafts, no compulsory registration. Interstate supply of services, no compulsory registration, only interstate supply of goods. And number 2, casual taxable person. See, for casual taxable person who come from other state to this state, other than handicrafts. Suppose if there is a casual taxable person for handicrafts, no compulsory registration, they need to register only when aggregate turnover exceeds threshold limit. But casual taxable person other than handicrafts, compulsory registration. R for recipient liable to pay GST under RCM 9 subsection 3. So there are some notified goods and services on which the liability to pay GST is on recipient. That recipient is compulsorily required to get registered. And next ICRE, E for e-commerce operator. 2 e-commerce operators are compulsorily required to get registered. That e-commerce operator who is liable to pay GST under section 9 subsection 5. Who is that e-commerce operator liable to pay GST under 9 subsection 5? There are 4 services supplied through e-commerce operator. Liability to pay GST is on e-commerce operator. You can remember that 4 services: HATE. H for housekeeping service, A for accommodation service, T for transportation service, E for eating food from a restaurant. Okay. So these are the 4 services. With respect to these 4 services, liability to pay GST is on e-commerce operator, and then e-commerce operator should compulsorily register. Also, e-commerce operator who is liable to deduct TCS under section 52. So TCS concept is applicable to e-commerce operators only. That e-commerce operator who is liable to deduct TCS is also compulsorily required to register, that is E. ICREA, A for agent making supplies on behalf of principal. Whether agent making supply of goods on behalf of principal or goods or services on behalf of principal, both goods or services. Very, very important point. In MCQ when it is tested, we will think agent, principal agent transaction only goods, then only goods, like that we will select. No. So whether agent is making supply on behalf of principal, let it be goods or services. Goods or services. So then it will be applicable. So ICREA, T for TDS deductor. TDS deductor under section 51. That is government, usually government, they need to register compulsorily. Then, so I, that is input service distributor for the purpose of distribution of credit. O for OIDR supplier. Where are they located? Outside India, and they are making supply to a non-taxable online recipient. And then N, NRTP, non-resident taxable person who come from outside India to India. And yes, supplier of goods through e-commerce operator, not supplier of services through e-commerce operator. Every supplier of goods through e-commerce operator. Through e-commerce operator means their own platform or someone's platform. In some other person's platform, they are supplying the goods. They are compulsorily required to get registered. So these are the cases, I creations, where a person is compulsorily required to get registered. Here, there is one issue. That is, I am making supplies covered under RCM. I am making supplies covered under RCM. I have some inward supplies on which I need to pay GST under RCM. I am making outward supplies which are fully covered under RCM. So therefore, as per section 23, I am exempted from registration. I have some inward supplies on which I need to pay GST under RCM. As per section 24, I need to compulsorily register. So therefore, same case, same person. So 2 provisions are applicable, 23 as well as 24. So now which will prevail? So here section 24 uses the word notwithstanding anything contained in section 22 subsection 1. They did not use the word notwithstanding anything contained in 23, which means 24 will override 23. No, never. So 23 only overrides 24, which means that when a person is exempted from registration, they are exempted from registration. And suppose if they are not exempted from registration, then only compulsory registration will be applicable. So in that case, when I am making outward supplies fully covered under RCM, I am exempted from registration. Even if I have some inward supplies on which I need to pay GST under RCM, I am not required to compulsorily register. So therefore, section 23 overrides section 24. But in this regard, there is one advanced ruling which says that, so no, it is wrong. Section 24 will override 23, like that it is given. So, but that advanced ruling and all will not be applicable, because there are many such advanced rulings. One such advanced ruling I will tell you, amazing advanced ruling it is. A director who is an employee is also required to pay GST, like that they have given. Employer-employee is excluded from supply, but like that and all, no, advance rulings is there. 90% of the advance rulings are wrong, because who will be appointed as advance ruling authority? Nothing but the department officers only. So therefore, absolutely that will be in favor of the department only. So advance ruling and all will not be binding. So if it goes to the High Court will simply say one point: when a person is not liable to get registered and there is no other section which override this section, then this section is an independent section. So a person is not at all required to get registered. Whereas 24 is giving the words notwithstanding anything in 22. Means what? So 24 overrides 22. 24 will override 22. So that is what I have given as note. 23 will override 22 and 24. Whereas 24 will override 22. Sir, what is this 22 subsection 2, 22 subsection 3 and 22 subsection 4? So this is compulsory registration given under section 22. Under 22 also we have a compulsory registration. 3 cases. Whenever there is a person who was already registered under earlier indirect tax regime, he should also get registered under GST. And another point is that, so whenever there is a transfer of business, the transferee also should get registered. And one more point, whenever there is a transfer pursuant to a scheme of amalgamation or merger of 2 companies, then whenever that new company is formed, that new company may not have any aggregate turnover, but that new company also should get registered. But 22 compulsory registration versus 24 compulsory registration, the difference is in 22 compulsory registration, we have to register, but we can make application for cancellation of registration stating that our aggregate turnover falls below the threshold limit. Whereas in 24 compulsory registration, even though your aggregate turnover falls below the threshold limit, you need to continue in the registration. You cannot make application for cancellation of registration. That's the difference between 22 compulsory registration and 24 compulsory registration. So 22 compulsory registration is registered under earlier indirect tax regime or transfer of business or transfer pursuant to a scheme of amalgamation. So that is 24, irrespective of the threshold limit, a person is liable to get registered. But in case of 22, what they can do? So they can make application for cancellation of registration. Can make application for cancellation of registration. Can make application for cancellation of registration. Then, so we completed 22, 23 and 24. Now we are moving on to 25. Procedure for registration. You need to remember 6 forms. So that is REG1, application for registration, REG2, acknowledgement, REG3, notice, REG4, reply to the notice, REG5, rejection of application, REG6, certificate of registration. Previously 3 working days was the time limit. So 3 working days from the date when we make application, they need to grant the registration certificate or should give notice. Now all cases it is 7 working days only. Means from REG1 to REG6 or REG3, that is either notice or they need to pass the order, registration certificate within 7 working days. And suppose if they passed a notice, they gave a notice in REG3, what is the time limit within which we need to give reply to that notice? Again 7 working days. And after giving reply, either they need to reject the application or should grant the certificate of registration within 7 working days. So that's what I have given. REG1 to REG2 immediate. Acknowledgement will be generated immediately. Whereas REG1 to REG3, that is application to notice or application to registration certificate, 7 working days. Then notice to reply, 7 working days. Then reply to either rejection or certificate within 7 working days. What is the time limit generally where we need to make application for registration? Within 30 days from the date a person is liable to get registered. However, a casual taxable person and a non-resident taxable person shall make application for registration at least 5 days before commencement of business. But all others will make application for registration within 30 days from the date when they are liable to get registered. And we need to furnish the bank details also generally at the time of making application for registration. However, there is a relaxation. What is that relaxation? We can furnish the bank details at a later point of time also, because Generally, bank account cannot be opened without having a GST registration. So therefore, we can get a GST registration, open a bank account, and that is current account, and thereafter we need to update the current account details in the GST registration. What is the time limit within which we need to update that? 45 days from the date on which we got registration certificate or the due date of filing first return, whichever is earlier. 45 days from the date of registration or due date of filing first return, 3B, whichever is earlier should be taken. Then in every registration there is Aadhaar authentication, but Aadhaar authentication is not compulsory. Aadhaar authentication is optional. A person may opt not to have Aadhaar authentication. In that case, there will be physical verification of place of business and then only registration certificate is granted. But in case of Aadhaar authentication, physical verification will not be done. Suppose if a person is making application, that is part A and part B, two parts will be there in REG1 registration application. Part A contains the basic details and part B contains business details, proprietary details, authorized signatory, goods and services, everything. In that Aadhaar authentication also will be there. Aadhaar authentication is selected. So option 1, Aadhaar authentication. Now after submitting part B, immediately a link for Aadhaar authentication is generated. So we need to enter the mobile number and email and we need to authenticate through OTP. After that, so application is deemed to have been filed. So therefore, the date when you submit part B is not the date of submission of application. The date when authentication is completed, that is only taken as the date of submission of application. What is the time limit within which the authentication has to be done? Within 15 days, the authentication should be completed. So what will happen if within 15 days the authentication is not completed? The application is deemed to be filed without authentication on expiry of 15 days. Means as good as you filed application after 15 days without authentication, like that only it will be considered. So registration certificate should be granted within how many days from the date of authentication? 7 working days. Because what is considered as the date of submission of application? The date on which authentication is completed. So from that date within 7 working days, they need to grant the registration certificate. And suppose if the authentication is not completed within 15 days, application is deemed to be submitted on expiry of 15 days. So therefore, what we need to do? We need to take it like as good as application filed without authentication. What will happen if application is filed without authentication? So within 30 days, they need to conduct the physical verification. So within 30 days, they need to conduct physical verification. Suppose if we selected with authentication and 15 days we have not completed authentication, the 30 days will be counted after 15 days, including that 15 days, after that 15 days, which means in total it will be 45 days. First we made an application and with authentication, not completed authentication within 15 days. Now on 15th day it is deemed that we made an application without authentication. So the 30-day period will be counted from thereafter. So therefore within 30 days they need to complete the physical verification and they need to give certificate of registration. Now in this context there is deemed registration. Multiple deemed registrations are there. Now simple, easily we can understand. First, Aadhaar authentication opted or not opted? Opted. If opted, completed or not completed? Completed. Now within 7 working days, either you need to get a notice or you need to get a registration certificate, otherwise deemed registration. Got it? What is the first deemed registration pa? Aadhaar authentication opted and completed. From the date when we completed, within 7 working days, either we need to get the notice or we need to get the registration certificate. If not, it is deemed registration. That is first point in deemed registration. Second point, Aadhaar authentication opted, completed, we got a notice, we gave a reply, and from the reply within 7 working days, neither cancellation nor certificate, then also deemed registration. Aadhaar authentication completed, notice generated, gave a reply to the notice. From the date of reply within 7 working days, they did not cancel registration or they did not grant certificate of registration, then also deemed registration. That is second point. Third point, Aadhaar authentication not opted, not opted. means from the date of filing application within 30 days, registration certificate not granted, then also deemed registration. Clear or not? Then fourth case, Aadhaar authentication opted but not completed within 15 days. Then thereafter within 30 days, registration not granted, then also deemed registration. So 15 plus 30, 45 days. So these are the 4 cases of deemed registration. These are the 4 cases of deemed registration. So that can be asked as a short note question. Aadhaar authentication completed, neither REG 3 nor REG 6 granted within 7 working days. Aadhaar authentication completed, neither REG 5, that is rejection, nor certificate within 7 days from reply. Aadhaar authentication not completed within 15 days and thereafter within 30 days registration not granted. Aadhaar authentication not opted, registration not granted within 30 days. These 4 points you have to write whenever you come across a question, that is what are the cases where registration is deemed to be granted. These are the 4 points. Then to whom Aadhaar authentication is not applicable? To whom Aadhaar authentication is not applicable? That can also be asked as a short note question. Simple pa. First, individual you take. That is person definition we will take. Who will come under person? Individual, HUF, firm, LLP, AOP, BOI, company, body corporate, government. Is government also a person under GST? Yes. Government also a person under GST. First, we'll start with individual. Individual, when are they required to undergo authentication? Always. Always. They are required to go authentication. Who are not at all required to undergo authentication? Not a citizen of India. Got it? Not a citizen of India. And in HUF, who is required to undergo authentication? Karta. Then who are not required to undergo authentication? Co-partners. Okay. Then next, firm. In firm, who is required to undergo? Managing or authorized partner. So other partners are not required to undergo authentication. Okay pa, these 3 points can you remember? So who is not required to undergo authentication? Not a citizen of India and persons other than Karta, then partners other than authorized or managing partner. Then you take company, body corporate or other entity. Then this case, who is required to undergo authentication? Authorized signatory. Means other members are not required to undergo authentication. Government. In case of government and its family members are not at all required to undergo authentication. Who is government and family members? Central government, state government, local authority, statutory body and public sector undertaking. So these people are not required to undergo authentication. And then last, UIN holder, unique identification number holder, just an identity is given to them, but that is not a registration. They are not required to undergo. So total 9 points. How to remember this 9 points? That's why I gave you this logic. So 9 points easily we can remember. Not a citizen of India and members other than Karta, partners other than authorized or managing partner, members other than authorized signatory in case of others, and central government, state government, local authority, public sector undertaking, statutory body, UIN holder. So this may be asked as a short note question. Who are not required to undergo? These 9 points we need to write. Then next, sir, even if already they are registered also, they need to undergo authentication. So yes, already old registration and all those who are taken, so they need to undergo authentication, but that is not applicable in these 9 cases. So these 9 cases, if they are getting registered now or already registered, both cases they are not required to undergo authentication. Then what is the time limit for making application for registration? Already we have seen. So within 30 days, generally within 30 days from the date when they are liable to get registered, but for CTP, NRTP, at least 5 days before commencement of business. And what is the 30 days? Suppose if you are covered under 24, compulsory registration, whenever you start the business within 30 days. Suppose if there is a transfer of business, so within 30 days from the date of transfer. Suppose if it is registered under earlier law, within 30 days from appointed date, that is 1/7/2017. Suppose if transfer pursuant to a scheme of amalgamation, so whenever the resulting entity gets the certificate of incorporation from there 30 days. In all other cases, whenever aggregate turnover exceeds threshold limit, from there within 30 days. This is the time limit. And section 26. So far what we have seen is section 25, procedure for registration. And section 26, deemed registration. Don't get confused between this deemed registration to the deemed registration what we have in section 25. In 25, procedure, suppose if they have not given the registration, it is deemed that the registration is granted. But this deemed registration under 26 is, suppose if you have registered under CGST Act, again you don't have to make application under SGST Act, IGST Act, that is this deemed registration. So means you are deemed to be registered under CGST Act if you have made registration, under SGST, UT, GST, IGST also deemed registration. Same way, if you have made application for cancellation of registration under one law, you are deemed that you have made application for cancellation under other law, that is this. Then, special provisions relating to CTP and NRTP. A casual taxable person and a non-resident taxable person should make application for registration at least 5 days before commencement, and whether they get a permanent registration or a temporary registration, what is the period for which their temporary registration will be there? 90 days, and it can be extended for a further period of 90 days. 90 days, you should not remember as just 90 days in the first case, maximum 90 days. Suppose if they are making application only for 40 days, then the registration will be 40 days. So 40 days or 90 days, whichever is earlier, like that. Suppose if they are making application for 120 days, for how many days the registration will be granted? First 90 days, and thereafter after expiry of 90 days, they need to make again an application for extension, but that will be for a further period of 90 days. In no case it can be more than 180 days. So maximum period for which they will be granted registration will be 180 days at a stretch, okay. And then they have to make a deposit of advance tax. So whenever they are going for application for registration as a CTP and NRTP, they need to pay advance tax, and that advance tax will be deposited into the electronic cash ledger of that person. And what is to be paid as advance tax? Estimated liability. How many days they are going to do business, what could be their turnover, and that liability they need to pay. Whether it is estimated gross liability or the estimated net liability, estimated net liability means estimated gross liability minus estimated ITC. Sir, a casual taxable person can take ITC. There is no restriction at all. A non-resident taxable person has restriction. He can take ITC only on import of goods. All others are blocked credit for a NRTP. So casual taxable person, there is no restriction, so he can take ITC. So therefore, whether it is estimated gross liability or estimated net liability, estimated net liability, so that they need to pay as advance tax. Whatever advance tax they paid, that will be credited into the electronic cash ledger, and they need to file return. So see, this casual taxable person will be filing GSTR 1 and GSTR 3B, and NRTP will be filing GSTR 5. So whenever they are filing those returns, so that tax liability will be adjusted from this cash ledger advance tax. Suppose if there is any excess amount of advance tax that is there in the cash ledger and the registration is cancelled, it will be refunded to them. Suppose if there is shortfall that they need to pay. That is about this refund, that is about this advance tax. And sir, after 90 days, again for extra 90 days they are going. Again, should they make a deposit of advance tax? Yes. That is this part. At the time of submission of application, net liability, they need to pay as advance tax. Even extension period, for that extended period, advance tax deposited, and it will be credited to electronic cash ledger, which shall be adjusted against the final liability determined. What is the difference between casual taxable person and non-resident taxable person? Casual taxable person will be coming from other state to this state, whereas NRTP come from outside India to India. Both cases, they will not have any physical place of business in India, and both will be doing it on an occasional basis. And casual taxable person will have a permanent account number, but NRTP will not have a permanent account number. So NRTP will get the registration done using the passport, okay, and an authorized signatory's permanent account number should be attached. Authorized signatory. So even NRTP will have one authorized signatory in India, so that person's permanent account number should be given. But what about NRTP? NRTP's passport should be given. And next, what is the returns that they will be filing? So GSTR1, GSTR3B, here GSTR5. And what is the application form for registration? The application form for registration, REG1 in case of CTP and REG10 in case of NRTP. So we completed 25, 26 and 27, that procedure related. Then 28, 29 and 30, amendment in registration. So what is amendment in registration? Whenever there is change in the particulars that were originally submitted for registration, then they need to make an application for amendment in registration. And this application should be made within 15 days. 15 days they need to make application. And there are two types of fields, core field and non-core field. What are core fields? So that is, these changes are subject to approval by the proper officer, that is NAT, change in name, change in address, change in top management. So change in address, whether it is principal place of business or all principal place of business or additional place of business, whatever it may be. So for that it is a core field. Change in name is a core field, and change in top management, that is partners, karta, authorized signatory, etc., then also it will be core field. And in case of core field, the amendment will be taking place subject to approval by the proper officer. Whereas in case of non-core fields, what are the non-core fields? Change in mobile number, change in email, then change in bank details, so change in the goods or services that they do. In all those cases, approval is not required of the proper officer. Portal itself will take care of updation. Okay, that is this core fields and non-core fields. And whether the amendment made to the GST registration is prospective or retrospective, it will be always prospective. But retrospective amendment is also possible only with the permission of the commissioner. Only with the permission of the commissioner. And then one more point we need to know here. Suppose if there is a change in permanent account number itself, then in that case they should not go for amendment in registration. They should obtain a new registration and cancel the old registration. Whether they need to cancel old registration and get new registration, or get new registration and then cancel old registration, they need to get new registration and then cancel old registration, then only the unutilized ITC can be transferred. Then when there will be change in permanent account number, if there is a change in constitution, or if the change in firm to company, or sole proprietor to partnership firm, or change in name, that is going to affect the first name, so therefore permanent account number will change because of that. So all these cases, whenever there is a change in permanent account number, so then definitely new application only should be made, amendment is not accepted. What is the procedure for this amendment in registration? In REG 14, they need to make application for amendment. What is the time limit within which they need to make application for amendment? 15 days. 15 days. Then what is the time limit within which officer, suppose if it is core field, will order for amendment? 15 working days. Okay. For you, all days are working days only. So therefore 15 days. And for department it will be 15 working days. Okay. Then suppose if they are not satisfied with the change in amendment, that is a name or address, etc., then they will be giving a notice. Notice also within 15 working days. So either notice or they will be passing an order for amendment. So if they give a notice in REG 3, what is the time limit for reply? 7 working days, regular reply. REG 4, 7 working days. And thereafter, so either they will grant or reject within 7 working days. Okay. So that is the connection here. Only that 15 working days is the difference. Wherever first notice or order within 7 working days was there, na REG 1 to REG 3 or REG 1 to REG 6. So in that place only we have 15 working days, but all other places it is like that 7 working days only. Then look into cancellation of registration. Cancellation of registration, section 29. So this cancellation of registration will arise in some situations. There are 3 cases where registration can be cancelled either by the registered person, he can make an application for cancellation, or proper officer can initiate cancellation. What are those three cases? Number one, logically you think, so when there is transfer or discontinuance of business, or there is a change in constitution resulting in change in permanent account number, or a person is no longer liable to be registered. These three cases, either registered person can make application for cancellation or proper officer can initiate cancellation. Now at the time of cancellation, that is making application for cancellation, Aadhaar authentication is required. Aadhaar authentication is not only at the time of registration but also for making application for cancellation, because this GST practitioners and all, so when they are not getting fee from their clients, they are making application for cancellation of registration and all. So due to that reason only, so this Aadhaar authentication is brought. So therefore one OTP will come, and therefore based on that OTP he will come to know, so that he will call the GST practitioner, bloody idiot, why are you making application for cancellation of registration? Okay. See, if it is professionals, what we will do, it's okay, fine, you have not paid fees, it's okay, don't worry, you don't have to pay fees, I know how to recover that. So therefore whatever information we have, we will be bundling it and we will be sending it to the appropriate person, correct or not? And GST practitioners and all non-professionals, they will do this kind of activities only. So deleting account, etc. and all, we will not do that. So we are beyond that, we are criminals to the infinity, okay? So therefore, for that reason they brought in this Aadhaar authentication. Then suo motu cancellation by the proper officer, they will be giving a show cause notice in REG 17 whenever they initiate cancellation part. So first, what are the cases where they can initiate cancellation of registration? Who? Department. 5 cases. Number 1, contravention of the provisions of act or rules, or person opting for 2 cases, non-filing of returns. Person opting for composition scheme, not file 3 consecutive returns. Person other than opting for composition scheme, not file 6 consecutive returns. So these 2 cases. And registration obtained by fraud, and obtained voluntary registration but not commence business within 6 months. 5 points. So first 3 points, no longer liable to be registered, constitution, change in constitution, transfer or discontinuance of business. Next 5 points, so contravention of the provisions of act or rules, composition scheme not filed 3 consecutive returns, and normal scheme not filed 6 consecutive returns, and registration obtained by fraud, not commence business within 6 months. So these 5 cases, what will happen? Proper officer will initiate cancellation of registration. But for that, what they will do? They will give a notice. And whenever they initiate cancellation of registration, they will be giving a notice and they may suspend the registration. So suspension of registration is not mandatory. Suspension of registration is optional at the discretion of the officer. And what is the meaning of contravention of the provisions of act or rules? What is taken as contravention of provisions of act or rules? That is, you can see that which is given in rule 21. So first, does not conduct any business from the declared place, means wrong address. Number 2, wrong invoice. Number 3, wrong ITC. You remember these 3 wrongs, okay? Wrong address, wrong invoice, wrong ITC. So does not conduct business from the place and issues invoice in violation and avails ITC in contravention of section 16. So wrong address, wrong ITC, wrong invoice, 3 wrongs, and then 3 violations. So number 1, violates the provisions of anti-profiteering. So anti-profiteering order is given whenever that person has not transferred the benefit of reduction of tax or availment of ITC to the next person by way of reducing the sale price. Even though the tax rate has come down, but they retain the same sale price, that is known as profiteering. In that case, an anti-profiteering order will be passed. So you are not complying with anti-profiteering order or violating the provisions of bank account details. So within 45 days we need to submit, or due date of filing a first return, whichever is earlier, we need to furnish the bank details. Do you remember that? Just now we discussed at the time of registration. So whenever we get the registration certificate, from that time within 45 days, we need to furnish the bank details or due date of first return, whichever is earlier. If you violate that, then if you violate payment of 1% of the gross liability through cash ledger. Rule 86B says that every person whose turnover in a month exceeds 50 lakhs, that person has to pay 1% of the gross liability through electronic cash ledger. So 99% only can be paid out of credit ledger. 1% has to be paid through cash ledger. So those people, if you are not, because it is not automated in the portal, you have to do this as a self-assessment exercise. It is not automated. If you are not doing that provision, so then it is a violation. So what are the three wrongs? Wrong address, wrong ITC, wrong invoice, and three violations. Violation of anti-profiteering, violation of furnishing bank details, violation of rule 86B, that is non-payment of 1% through cash ledger. And 1 point, liability in GSTR 1 greater than liability in 3B for one or more tax periods. Actually what happened, previously everyone was filing GSTR 1 only and they were not filing 3B. So they will file 1, they will declare the liability, recipient will enjoy the ITC, and they were not filing 3B. So then what happened, they have brought in one change. If you are not filing GSTR 3B of the previous month, for the current month you cannot file GSTR 1. So previous month you have to file 3B, then only current month you can file 1. Like that they brought a change. Now whatever people are doing, GSTR 1 they are filing, 3B also they are filing. But in 100 invoices will be there, in 3B only 2 invoices will be there. If I am not filing only, I cannot file now. I filed, but I did not report full liability. That's why they brought this. Okay, suppose if there is any difference between liability in GSTR 1 and 3B for one or more tax periods, so then it will be contravention that leads to cancellation of registration. So therefore, you should be careful while writing the answer. They can ask 2 questions. What are the situations which leads to cancellation of registration? Don't write the contravention of provisions. You write the 8 points, first 8 points. Suppose if they give what are the provisions, the contravention of which leads to cancellation of registration, then you need to write those 7 points. Okay, clear pa? So be careful, read the question carefully. Okay, they will play with the words, you read carefully and you decide which one you need to write and you need to write. You will be thinking that whatever you wrote is correct and then you will not get what the marks. Okay, so that's why. Then suspension of registration, that is suspension mandatory? No, suspension and all is not mandatory. So it is at the discretion of the officer. So suspension of registration may be at the discretion of the officer. Whenever they initiate cancellation, they can suspend the registration. Even when we make application also, they can suspend the registration. So this suspension of the registration is at the discretion of the officer. So underline or highlight may suspend the registration during the pendency of the proceeding. So we made application. So they have not yet passed the cancellation order. Till that time they can suspend the registration. And they initiated cancellation, they gave a notice. Till they have not passed the order for cancellation, they may suspend the registration. For suspension, there is no notice. Very, very important point. So in comment based MCQ, you will definitely make this mistake. Be careful. There is no notice for suspension, but there is notice for cancellation. There is notice for cancellation. There is no notice for suspension. For suspension, they will not give notice because already they gave a notice for cancellation. Then like a surprise it will come. One message will come. Congratulations, your registration has been suspended, like that. So that is intimation only. We don't have notice. And suspension of registration can be without affording a reasonable opportunity of being heard. Now, what is the period for which they will suspend our registration? Suppose if we make an application, we select one date na, that date or the date of application, whichever is later. Why whichever is later? Suppose if we select a future date, that date. If we selected a past date, then today we made application, that date. From that date till the conclusion of proceedings, our registration will be suspended. Suppose when officer initiates suspension of registration on account of cancellation of registration, then officer he will give notice na. Thereafter he will specify one date. From that date till the conclusion of proceedings our registration will be suspended. So this can be asked for a short note. So write a short note on period of suspension. So if application is made, the date selected in the application or the application date, whichever is later till the conclusion of proceedings. If officer initiated cancellation, the date specified in the notice for suspension till the date of conclusion of proceedings. What is the meaning of conclusion of proceedings? Conclusion of proceedings means either they will pass the cancellation order or they will reject the application, or they will drop the notice. Got it? That is known as conclusion of proceeding. Conclusion of proceedings can be, suppose if we made an application, they will say no, you know, cancellation, no longer liable to be registered. So no, you will be definitely required to register, because temporarily your turnover may come down, but definitely the turnover will increase. So we will not accept. That is cancellation order not passed, rejected application. Or they may consider, yes, you have not been making that much of turnover, so we will cancel your registration. So both are there. Then when they initiate cancellation, so they gave a notice, either they will drop the notice or they may proceed to cancellation order. That is the meaning of conclusion of cancellation proceedings. Now listen, whenever there is a conclusion of cancellation proceedings and they are passing a cancellation order, or they are dropping the notice, or they are rejecting the application, the suspension will be withdrawn retrospectively from the date when they have given suspension. The suspension of registration shall be deemed to be revoked upon completion of the cancellation proceedings by the proper officer. So today they gave a suspension, they passed a cancellation order after 30 days. Now that cancellation order when they pass, the suspension will be withdrawn retrospectively. So what will be taken as the effective date of cancellation? The date on which they gave suspension. That's why I told you while discussing final return that the order of cancellation and the date of cancellation is not same. Order is passed after 30 days, but in that the effective date is the date on which they gave the suspension. Okay. And during the period of suspension, can I make taxable supplies by giving tax invoice? No. Can I file the returns and avail the ITC? No. On my outward supplies, I cannot collect the tax. I cannot give invoice. On my inward supplies, I cannot avail ITC, so I cannot file the returns. These are the two consequences. So, shall not make any taxable supply, that is, can make taxable supplies but cannot issue tax invoice, and they cannot file any returns. There is one additional case of suspension. That is, one new rule has been added which says that already when liability in GSTR1 exceeds liability in 3B for one or more tax periods, so they can do the cancellation of registration, correct? That is one of the reason for contravention of the provisions. Now for that they added one more point, they are checking 2B versus 3B. 2B versus 3B. That is, whatever ITC that is there in 2B versus whatever ITC that you took in 3B, if there is any excess ITC that is taken, okay. So then in that case, because the moment you open 3B, so in the 3B table 4 ITC, eligible ITC, automatically 2B data will come, but that is editable. So not that directly we need to take that only, we can edit and we can take extra, okay. So then this will trigger. What will happen? Suppose if there is any significant differences, then immediately department will intimate suspension and give notice for cancellation, and within 30 days as to why registration should not be cancelled, we need to give a reply. Got it? So immediately it is triggered, not that they will wait. So two cases. What are the two cases? GSTR1 liability versus GSTR 3B liability. One liability is more than 3B liability and ITC in 3B is more than 2B. So then in that case, so they will initiate suspension and give the notice for cancellation. Then last section, section 30. Section 30 talks about revocation of cancellation of registration. That is, already there is a cancellation order. And when the cancellation order is there, we wanted to continue into the registration. Why? What is the effect of cancellation of registration? The moment they pass an order for cancellation of registration, so much of the ITC that we have will be lapsed, and whatever closing stock we have on that ITC avail needs to be reversed as per section 29 subsection 5. That is, today there is a cancellation of registration. Yesterday, whatever was the closing stock on that ITC avail, that I need to reverse, and the balance in ITC will be lapsed. So therefore, I don't want this ITC to be lapsed. So therefore, I will make an application for revocation of cancellation. But if I am making application for revocation of cancellation, I need to ensure that all the pending returns are filed. Suppose if the cancellation is on account of non-filing of returns, is non-filing of returns one of the reason for cancellation? Yes. Then in that case, all the pending returns I need to file, and then only I can make application for cancellation. And what is the time limit within which I need to make application for revocation of cancellation? 30 days. It can be extended for a further period of 30 days and further period of 30 days by commissioner. First 30 days, then 30 days by additional or joint commissioner, then 30 days by commissioner. By that time we can make application, and all the returns should be filed before applying if the registration was cancelled due to failure to file the return. Now we made an application, proper officer is satisfied, yes, then they will revoke the cancellation order. No, then they will give an opportunity of being heard, and within 7 days we need to give reply. Again after reply, if they are not satisfied, they will reject our application. If they are satisfied, they will revoke the cancellation order. Suppose if they revoke the cancellation order, so then whatever is the returns that we did not file during that cancellation to revocation of cancellation, that needs to be filed. Okay. And even for making application for revocation of cancellation also, Aadhaar authentication is required. There are 3 places where we have come across Aadhaar authentication. One is application for registration, application for cancellation, application for revocation of cancellation. So with this we completed registration part. So these are the points that we have. Okay. So can I continue to the next chapter? Yes? Super, pa. Very good. I will drink some water. After this 3 days, I don't know what will happen to my throat, because anyhow I am not there. I am going to Sabarimala, so therefore I will get some 2-3 days relaxation for my throat. So therefore, Malaysia. Where pa? If you consider no, I will go. But where you are considering? Say this. If you all think and do something, no, I can go to Malaysia, Singapore, even Mauritius, etc. and all. Think, if you keep heart, it will happen. Okay. Then, see this. Segment 10, payment process. A small topic, we will complete this and we will leave. Okay. And payment process, as per section 49, 3 ledgers will be maintained by GST network on behalf of every registered person. So that is electronic liability ledger, electronic credit ledger and electronic cash ledger. Electronic liability ledger will contain total 5 dues: T, I, P, F, O. T for tax dues, I for interest, P for penalty, F for fee, late fee, O for others. And whatever balance that is there in the electronic credit ledger can be used only for payment of tax dues, but the balance in electronic cash ledger can be used for payment of both tax dues as well as other dues. And how money will come into the credit ledger? The day when we take 3B, when we file 3B and we enter in table 4 ITC, so that date we will be getting money into our credit ledger. How much amount we entered in 3B, that much will be coming into our electronic credit ledger. Also, when we file ITC1, ITC1 is for availment of ITC on closing stock. Through that also electronic credit ledger will get an inflow. And ITC02, whenever there is a transfer of business, so the transferor will be filing ITC2. So whatever unutilized ITC in the electronic credit ledger of the transferor will be transferred to our electronic credit ledger. Through that also there will be inflow into credit ledger. ITC2A, that is whenever there is a single registration that is getting separated into multiple registrations, then also ITC will come into our electronic credit ledger if that single registration is filing ITC 2A. So these are the inflows into the electronic credit ledger. So not only 3B, so even we will be having ITC1 or ITC2 or ITC2A. So these are the cases where there will be inflow into electronic credit ledger. Whatever balance that is there in electronic credit ledger can be used for payment of tax dues, and how money will come into electronic cash ledger. So whenever we make a deposit through PMT6 challan, so deposit into the cash ledger, or TDS TCS deducted by the other person, and refunds, if there is any refunds, that will come into the electronic cash ledger. So balance in cash ledger can be used for payment of liability ledger, and we need to remember the form numbers. PMT1 electronic liability ledger, PMT2 credit ledger, PMT5 is cash ledger, and PMT6 is challan. Then what is PMT3? PMT3 is refund order passed by the proper officer for credit into the credit ledger. So what is that? Say for example, you take 1 month, so July 2022. For July 2022, GSTR 3B is filed. In that GSTR 3B, so we have paid the liability through credit ledger and cash ledger. The total liability reported in 3B was 40 lakhs. And how much is paid through credit ledger, electronic credit ledger, say 30 lakhs. And amount paid through cash ledger, electronic cash ledger was 10 lakhs. Now, for this month, we have excess paid tax, 1,50,000 excess paid. GST paid in excess. GST paid in excess, that is 1,50,000. This 1,50,000 will not directly come into our cash ledger, because this 1,50,000 pertains to which month? July month. For July month 3B, how you paid in credit ledger and cash ledger? 3:1. So therefore, this refund, this 1,50,000 will be given as refund, and that refund will go into the respective ledgers only. So how much will go into electronic credit ledger and electronic cash ledger? So what is the ratio? 3:1. So which means 1,50,000 into 3/4 will go into electronic credit ledger. 1,50,000 into 1/4 will go into cash ledger or bank account of that person. Okay, so that is how much? 1,12,500 and 37,500. So this 1,12,500 will be credited back into the credit ledger. For that, the PMT3 order will be passed. So PMT3 is refund order for credit into the credit ledger. Whereas for this 37,500, a refund order will be passed, that is RFD6. The refund order will be passed in RFD6, because that comes into our bank account. Okay, and this is PMT3. Then PMT4 is any discrepancy in the ledgers. Say balances are not properly visible or available, then in that case discrepancy will be communicated to the portal in PMT4. PMT5 already we know cash ledger, PMT6 will be challan, and PMT7. PMT7 is reporting to the payment gateway when money gets debited from our bank account but not reflected in the cash ledger. So then we will communicate that fact to the payment gateway through the portal. So that portal will take care of recovery from the bank, and it will be credited into our electronic cash ledger. That is PMT7. PMT8 we don't have any form like that, PMT8, but PMT9 is there, that is for transfer of balances in the cash ledger. Cash ledger by mistake under major head we have deposited, major head tax, say IGST tax we deposited, but actually we need to deposit into CGST, SGST. So then previously we used to again make a deposit and get the refund and all, but now not required. We can directly transfer the balances. What are the 4 major heads and 5 minor heads? 5 minor heads already we know, TIPFO. And what are the 4 major heads? IGST, CGST, SGST or UTGST, because both will not be there for the same registration. Correct? In the same state, how both will be there? Any one will be there. And compensation cess. So these are the 4 major heads and 5 minor heads. So a 20 cell matrix will be there. We can shift the balance from any cell to any cell. For that we need to file PMT9 form for transfer of balances between major heads and minor heads in electronic cash ledger. Then can we get a refund from the cash ledger and credit ledger? Whenever there is some excess balance in the cash ledger and credit ledger, yes, we can get the refund. Now related to this, some important amendments are there for refund from the cash ledger. Concentrate. This again I will repeat in refunds chapter also. That is, whatever balance in the cash ledger, you can get it as a refund, and the time limit of 2 years is not applicable, which means generally there is a time limit of 2 years to get the refund. Application for refund, relevant date 2 years, but that is not applicable in case of cash ledger. And the second amendment is that, so whatever balance from the cash ledger, when you are getting, no need to prove unjust enrichment, means no need to get a CA certificate, CMS certificate or declaration that you have not transferred the burden to the next person. You will be able to get that balance from the cash ledger. Is it clear or not? So therefore, this again we will come across in refunds, but I am just telling you, yes, we can get the refund from the cash ledger. Any restriction? No restriction. However, refund from the credit ledger is possible only in 2 cases. That is in case of zero rated supplies and inverted tax structure. What is inverted tax structure? The tax rate on outward supply is less than the tax rate on inward supply. Refund from credit ledger is possible only in 2 cases, inverted tax structure and zero rated supplies. And what are the various modes for deposit into the cash ledger? Either we can pay through credit card or debit card, net banking, even though practically debit card, credit card is not there, but for the purpose of law it is there, okay. Net banking, debit card, credit card, then NEFT, RTGS form or over the counter payment. Over the counter payment, how much is allowed? Up to 10,000 rupees in a tax period. So that much only can be made into cash ledger through cash. Then we have refund to the original source, already we discussed. But remember, refund to the original source, this concept is there na. This concept just now we discussed. It is applicable only in case of refund of GST paid in excess, not in case of any other refund. Any other refund, it will go to our bank account. Export, zero rated supply, refund, go to bank account. Deemed exports, go to bank account. So every refund will go to our bank account. But on account of excess payment of tax, then only this refund to the original source. So where registered person has claimed refund on account of wrongly paid or paid in excess, then only it will be refund to the original source. So this concept is applicable only in case of refund on account of excess payment of tax. Then rule 86A. Rule 86A is whatever credit that I have taken into my credit ledger, but that credit which I am taking into my credit ledger will be suspended for a maximum period of 1 year by the officer, which means for the maximum period of 1 year, I will not be able to use the balance in the credit ledger for payment of my liability. What are those cases? Number 1, we have taken ITC based on invoices of a supplier, and that supplier, and it is matched ITC only. Whatever we are taking is matched ITC. Even matched ITC they can suspend. Got it? Even matched ITC that we have availed, they can suspend. When? If the supplier is missing or not doing business from the place where they have obtained registration. So what we need to do? So buy one big chain or rope and tie to the supplier and always keep next to you, so that you will not know, he will not be missing. You understood or not? So therefore supplier is missing or not doing business. If that idiot is not doing business from the place, my ITC they are not giving. Okay. And so that is this. ITC availed against an invoice where the supplier is not in existence or not doing business from the place where they have obtained registration. Second, recipient is non-identifiable. That is not my problem. They should identify me. Okay. So recipient is not identifiable or not doing business from the place where they have obtained registration. Then also ITC availed by recipient will be suspended. Means what? Amendment I did not file. That I have changed the address. That amendment I did not file. So for that mistake, so they will suspend my ITC. Then next, ITC availed without receipt of goods. Actually this fact no one will know. This fact no one will know, because invoice, based on invoice comes in to be, we will be able to take the credit. But suppose if the goods are not received, but we have taken the ITC, that will be suspended. Or ITC availed against an invoice for which supplier has not paid the tax, because actually GSTR1 he will be filing. GSTR1 he will be filing. And because he filed GSTR1, that comes in 2B. The moment he filed GSTR1, if he add invoice, that comes only in 2A. That will not come in 2B. If he add invoice in GSTR1, but GSTR1 not yet filed, this fact will come in GSTR2A. But now 2A is relevant for taking the credit. So GSTR2B only. When it will come in 2B, if he files it by due date. If he files GSTR1 by due date, it will come in 2B. As it comes in 2B, what we will do? Of course, it will be in red color. Okay. Why? Because he has not yet filed 3B. But it's okay. We can still take that credit. We can still take that credit. We took that credit. That idiot recovered tax from us. He did not file 3B. Okay. He did not file 3B. Then also whatever ITC that we have taken will be suspended. Then invoice or debit note against which ITC availed is not in existence. Missing. Invoice is missing. Okay. So invoice is missing. Then also ITC will be suspended. I don't know, yaar. Maybe, while creating this provision, they are high on weed or what. So, because now it is in like electronic invoices are there. Now, what is this invoice is missing? So, I don't know why they created. But these are the 5 cases where ITC will be suspended. Okay. ITC is like Karna. Okay. In Mahabharata, how Karna faced all the struggles. Like that ITC is facing that many struggles. Okay. See. So they are telling matched credit available and thereafter this restriction. Full also you cannot pay. 99% only you can pay. 1% you have to pay through cash ledger. Okay. Thereafter whatever I am taking, that also they will be suspended. Don't know. And so this better. That Karna character could not be there in Mahabharata, because ultimately, even though he is a great person, so he is gone. Okay. So like that, ITC, why they need to give, why they need to put this many restrictions. So 5 cases. What are the 5 cases? ITC availed against an invoice where the supplier is missing or not doing business from the place where they have obtained registration. Recipient is not not in existence or not doing business from the place where they have obtained registration, and we availed the ITC without receipt of goods. Supplier has not paid the tax or invoice is missing. These 5 cases, proper officer can suspend the ITC for a maximum period of 1 year. What will happen after expiry of 1 year? After expiry of 1 year, if they are not able to identify the supplier, or if they are not able to recover the GST from the supplier, so then they can't do anything, they will give it back. Means this is like a suspension for a period of 1 year. This is not our mistake, because now that person has not paid tax, but it comes into what you are telling, match credit can be taken. So I can take the credit, and therefore upon expiry of 1 year, the registered person shall be able to debit input tax credit so disallowed, subject to any other action that may be taken against that person. Suppose if it is fake credits, action will be taken. Otherwise, if it is a genuine credit, it will be given. Okay. And I feel like this provision is created for the purpose of creating cash inflow for the government. Okay. Whomsoever is having credit, they will suspend the credit for 1 year. Means next 1 year they have to pay only through cash ledger. So government will get some cash inflow. For that they created this provision, like that I feel. Okay. Then second provision also like that only. That is, even though you have that much of balance in credit ledger, still you need to pay 1% through cash ledger. Why, sir? Why like that? We created, you have to pay. Okay. 86B. So turnover in a month exceeds 50 lakhs. Turnover in a month exceeds 50 lakhs. So for them only. And what is the meaning of this turnover? Aggregate turnover? No, turnover means state-wise, and that too we should take out. Exempted supplies and that is zero rated supplies should be taken out. That is, what are zero rated supplies? Exports and supplies to HCZ is known as zero rated supplies, take out. So what is the meaning of turnover? Whether exempted will come? No. Zero rated? No. Non-taxable, anyhow exempted includes non-taxable, that will also not come. Now the remaining means what? Taxable turnover. Got it? Usually turnover is 4: taxable, exempted, non-taxable, zero rated. If these 3 things are not there, then taxable turnover only. Simply they can say that we will not tell like that. So therefore turnover exceeds 50 lakhs. Then in that case pay 1% of your gross liability through cash ledger. Even there is balance in electronic credit ledger. So means 99% only you can pay through credit ledger, 1% you have to pay through cash ledger, and this is not applicable to their family. Got it? That is government department, public sector undertaking, local authority, statutory body. Why? What's the point in getting money from there, one pocket to another pocket only? But if it is 99% condition if they put, so new cash inflow will come. So for the purpose of creating cash inflow, because one national emblem statue needs to be constructed now, for that funding where it will come from here only. And exempted includes non-taxable also, okay, and turnover excludes taxes. Now this rule is not applicable in the following cases. So which cases? Deposited income tax more than 1 lakh in the each of the last 2 years. More than 1 lakh in each of the last 2 years he paid income tax. So 1 lakh cash he has given, it's okay, he is relaxed from paying 1% through cash ledger. Why? Income tax he is paying. When he is paying income tax, that has to be paid in cash, so some money they got, okay. Then received a refund of unutilized ITC, received a refund of unutilized ITC greater than 1 lakh in the preceding financial year. What is this logic? Simple, he is eligible to get a refund of ITC. He is eligible to get a refund of ITC. Refund order passed, payment order they will not pass. Refund order given, payment order not passed, means still refund not given. Now again if you ask 1% you have to pay by cash ledger, he will take stone and hit. That's why, so therefore they are telling, suppose if you are eligible, that is you got a refund more than 1 lakh, that is no need to apply this 1% point. Then paid greater than 1% of the total liability through cash ledger calculated cumulatively up to the month in the current financial year, means you are cumulatively paying more than 1%. For example, you see this. So April to July, we paid through cash ledger 9 lakhs and electronic credit ledger 40 lakhs. So 2 lakhs electronic cash ledger, electronic credit ledger 40 lakhs, so total 42 lakhs. Now for the month of August, actually how much you paid already through electronic cash ledger? 2 divided by 42. 2 out of total 42, how much you paid in cash ledger? 2 cumulatively. So 2 by 42, 4.76, more than 1%. So for August month you don't have to pay anything through cash ledger, okay, because already you achieved. So you paid 1%. So this I feel like a beggar begging for 1 rupee. I don't have money, give me 1 rupee like that. So constantly we are going to temple daily putting 1 rupee. Even if one day we are not giving 1 rupee also, it's okay. He will say good morning like that, okay. So like that it is. Paid greater than 1% of the total liability through cash ledger calculated cumulatively up to the month in the current financial year. So this is about payment process. We completed, and still 5 minutes is there, but it's okay. So tomorrow's agenda is that we will be discussing input tax credit and then exemptions, liability to pay tax, those topics and the remaining topics in GST, and then afternoon onwards we will be starting with customs, okay. And if suppose any portion is pending, that will be carried forward to the third day. I will try to complete it tomorrow. If not, only I am telling the third day. And next you have 5 minutes, no, wait. So that is, tomorrow class is from 9 to 6. Okay, no? Okay. So 10 is like too odd, 9 to 6 will be good, because morning 4 hours means, because after lunch and all, I can see you, okay? So you are like COVID patients. So therefore morning 9 o'clock you come, and next the third day, whatever leftover portion plus 50 questions we will be discussing, and if time permits, extra questions also I will discuss from the study material or RTP I will complete. And then actually I am planning for one MCQ marathon pa. Free only. So free MCQ marathon only. So that I will let you know. So like all ICI MCQ booklet along with some MCQs I have created, because last batch students, they have helped me in creating one MCQ booklet, and along with ICI MCQs. So that I wanted to give it as a PDF to you, and I wanted to discuss those MCQs in YouTube itself. Okay, I will let you know the details also. Suppose if I am conducting like if I am recording here, I am doing it here, I will do it here only. You can come and attend that also. Okay, thank you. We will meet tomorrow. Take care. Tomorrow come pa.